platforms,
Customer acquisition costs.
Yeah, your customer acquisition costs. So, through YouTube, now Netflix, and we also launched on Samsung. It's the largest FAST channel. So our idea is just like, we want to reach as many brains as possible. So we make the content, it's really high quality, it teaches engineering principles, gets kids, and adults stoked about science, education, learning, and, I call it hiding the vegetables. So you click on the video to watch Ronaldo try and score on my robot, but in the process, you learn about, motion capture systems and velocity and momentum, right? So that's a formula that's just kind of worked for us, and it's a beautiful thing to live in this day and age where you can do that.
Are you ever going to bring investors in? Is there a need for additional capital? What would you use that for? I mean, you're getting pretty huge reach already.
Yeah, it's a great question. We do have some initiatives where we're doing something called Class Crunch Labs. So this is where we're basically taking all the tricks I've learned on how to hide the vegetables and teach science in an engaging way, and then we're making a full science curriculum, 3rd to 8th grade, and then we're going to make it free for all teachers forever. And so that's going to cost us $55 million. So there's some of these initiatives, and then we're going to make it free.
What's the return on investment?
Nothing.
So this is a charitable plan.
It's a charitable thing, right? Yeah. But at some point, when you have these big initiatives and ideas like that, and there could be some things for the business as well. I won't say we would never take on outside capital, but right now we've been able to do pretty well just bootstrapping it.
Really impressive. I miss the package explosions that you used to do around the holidays.
Bombs.
The glitter bombs for anybody, because when you get packages stolen, you got packages stolen?
Yeah, legitimately, I got a package stolen from my house. And again, this is what's cool about being an engineer, is you feel violated, and it's you feel sad, but then you're like, wait, I could do something about this. So then you make a glitter bomb bait package and go after these porch pirates.
And it was really
more
successful.
than a glitter bomb. It used to be like
It had
spikes or
it had
ball
powder in it.
ball bearing. Ball bearing.
Videotaped all of it, so you catch them on video getting blown up with it.
Yeah.
Which is great.
Yeah. Poop.
Yeah.
He did do fart.
Yeah.
Yeah. The fart spray was in there so to make sure that they threw it out of the house, so then we could get the package back. So.
You have the camera back.
Yeah, and the cameras. It was an expensive package.
Mark, thank you for coming in. Wish you all the best of luck with this, and I would love to hear more about this new initiative down the road, too.
Love it. Thank you.
Thank you.
Always good to be here.
By the way, content creator Mr. Beast, Jimmy Donaldson, is part of the DealBook Summit lineup with Andrew today. CNBC will have coverage of that event all day, and Andrew is going to be joining us in the next hour.
In an Elmo update from Mark, the original Elmo did not go to class. No, the statute of limitations had run out on the charges, so they were dismissed. However, evil Elmo, who used to be right out here,
Dirty.
evil dirty Elmo,
Yeah.
did go to jail for trying to extort the Girl Scouts of the USA. So there's
You learn something on Spotlight
some,
every day.
but this was, he was in Times Square. This is and he was naked.
Well,
Well, Elmo's
Underneath.
always, yeah.
Okay, wow.
See, Elmo's always naked.
Yeah.
As you check out the shares price of Solana, the cryptocurrency snapping back after sliding along with Bitcoin late last week. The Mooch, Anthony Scaramucci, founder of Skybridge Capital, is going to tell us why he says Solana blockchain is the second greatest crypto trade after Bitcoin. I think he's got a book out. Sparkbox returns in a moment. watching. Thanks for watching.
Welcome back to Squawk Box, everybody. Let's take a look at the futures this morning. We are in the green. Dow futures up by about 135. NASDAQ futures are up by 62. The S&P futures up by 20. Yesterday, the market was up for 6 out of the last 7 sessions, so we'll see if this trend continues this morning. When we come back, though, the government's efforts to secure rare earth materials. Startup company Vulcan Elements getting millions in federal financing to boost magnet production. The Defense Department's Chief Technology Officer, Emil Michael, will be joining us to give us more details and also get into the government's focus on other critical tech arena areas. It's a remake of the Department of Defense. We're going to talk a lot more about it in just a moment. Welcome back, everybody. The Office of Strategic Capital has announced a $700 million conditional loan commitment with Vulcan Elements and Re-Element Technologies to expand magnet production. Joining us right now with the details of this deal and to talk tech and innovation and what we're doing in terms of defense of this nation is Emil Michael. He is the Chief Technology Officer at the Defense Department, where he is also the Undersecretary for Research and Engineering. You probably know him from his days back at Uber, though. And Emil, thank you for being here today. It's good to see you.
Good to see you too, Becky.
I am really interested in what you're doing there, just in terms of kind of overhauling what happens at the Department of Defense. You are bringing kind of a critical business eye to these things, and at a time when we are looking at very different ways that we need to think about national security. Do you want to talk about how you see things, first of all?
Yeah, the way I see things is that new technologies are proliferating in the commercial sector and have in the past 10, 20 years in a way that we've never seen before. And the idea is to bring those technologies and the companies that produce them into the Defense Department more quickly and more rapidly to fulfill the national security needs, because the threat environment is much different today than it was 10 years ago. We have a rising China versus the global war on terror that we had in decades past.
And explain how things are different. I think when you look at the Ukraine war, drones have played a much bigger involvement in these things. How are we going to be nimble enough to be able to keep up with these advances?
Yeah, so things are different in a few ways. You're right about the Ukraine-Russia war has totally revolutionized what the front line of a battlefield looks like with drones, essentially robots, if you will. And we've never seen that in any conflict before. The second thing that's changed is also you have a rivalry with China where we're realizing our dependency on some of the relationships we've had with other countries that have come back to bite us. Look at rare earth metals. We never thought about our own production, our own ability to do rare earth metals. And rare earth metals, just so everyone knows, they go into magnets, which go into motors and satellites and engines for jets and things that you use every day or that we ride on every day. And if China puts export controls on them and we don't have our own production facilities in the United States, we've got a problem that we've got to solve.
That was behind the $700 million deal with Vulcan Elements and Re-Element Technologies. How does that deal work, and how did you think about it in terms of structure?
Yeah, so how these deals work is in the one big beautiful bill that President Trump signed, they gave the Office of Strategic Capital over $200 billion in lending authority, and half of that's dedicated to critical minerals. And the way that works is the government goes and finds promising companies that help us fix a deficiency in the marketplace. And the deficiency is that we need to have that production here in the United States so we're not relying on our adversaries. And then we make loans to those companies that have promise or that we need to ensure that they can mine and they can refine the minerals that we need. And the issue is that the marketplace has been sort of dysregulated in a way, and that every time a company in the U.S. has tried to do this themselves, our adversaries lower the price of the minerals and don't let our own companies get off the ground. So the way those loans work is we make a loan, we guarantee them offtake, which means purchasing what they produce, and that means that they can survive and thrive as a company. So we make these loans, direct loans to these companies, and then private capital crowds in around those loans to make those companies really successful, and that's what we're excited about.
But you're right, the reason that we've run into these rare earth minerals problems started back in the early 2000s, and that's when China was dumping these products here and other places that made it basically so that capitalists could not compete in this arena. Does that mean if we are guaranteeing that we will buy the output, that we will buy them at higher prices? And is that just something we have come to realize you have to do in this society?
You have to guarantee a price floor so that they can economically do this. And then what you hope over time happens is that we create enough supply domestically that you could then have just a more free market approach to it. But in the meantime, you can't ask a company to produce something and then get undercut again. So you have to know that they can generate the revenue that we hope they do. And I think in cooperation with our allies, we'll all try to use sort of domestic and allied suppliers so that we right-size the marketplace and don't let the dumping try to take us off track again. The same thing with pharmaceuticals too. So this is a problem that President Trump has decided to fix, and I think we're fixing it in the right way.
It's a question of who our allies are these days. It's a little more complicated because we may agree with some of our traditional allies on some issues, but not on others when it comes to, let's say, even Ukraine and Europe at this point. So who are our allies? Who are we working with on these issues?
Well, remember that we buy 70–80% of rare earth minerals from China. So there's a wide set of countries that we align with that don't want to be subject to the same dumping practices that we've been subject to. So in that world, you think about Europe is an ally, of course, because they don't want to be subject to that either. And there's lots of other countries, Australia and some in Africa, frankly, that have these deposits that we can work with as well. So I think the wide set of allies is not in the sort of traditional military sense, but in the economic sense, how to create economic allies that don't want to be subject or dependent on the same way that we were starting 20 years ago.
Emil, it's hard to have you here and not talk about AI. We've talked about OpenAI putting out this code red to make sure it's upping its competition with Google. How is the Department of Defense using AI these days? How are you thinking about it?
Yeah, well, the Department of Defense hasn't been using AI as much as it should have until President Trump came in office, and I got the mandate when I got here to make sure the department is using AI. And here's the difference is in this sector, OpenAI, Anthropic, XAI, and Google have invested hundreds of billions of dollars in creating these foundation models and the data centers, power, chips. And so the idea is for us to partner with those companies and use their services instead of building it on our own and deploy it, sort of applied AI, we call it, throughout 3 sectors. The enterprise sector, just like any big company would use or any big organization would use AI for efficiency, across intelligence to make sure that we're synthesizing intelligence, and frankly in warfighting and planning and logistics and those kinds of things. So my strategy over next year is to ensure that we proliferate the use of AI in all those domains across the Department of Defense, which is 3 million people. So it's a lot of people that can take advantage of these tools that have been developed by the private sector.
Emil Michael is the Undersecretary of Defense for Research and Engineering. He's also the CTO there. And Emil, we thank you for your time. We hope to see you again soon.
Thank you so much, Becky. Good to see you.
Ahead of the ADP jobs report at 8:15, here's where the odds stand at prediction market Chelsea. 73% believe the number will come in higher than what is expected, and that would be, you can see, minus 25,000, the expectations. 51% say it will be above 0, 25% above 25,000 jobs, and 7% above 50,000. We're going to have the actual number at 8:15. Squawk Box coming right now. Coming up, crypto investing beyond Bitcoin. Skybridge Capital's Anthony Scaramucci has a new book focused on the opportunities around Solana. We're going to get into that and the volatility surrounding all the crypto markets when Squawk Box returns. Good to hear. A ton. For investors, we're on. For investors looking to expand beyond Bitcoin, there's a new book coming out next week, Solana Rising, Investing in the Fast Lane of Crypto. Breaks down the blockchain, the major players behind it, and how it can be integrated into a crypto portfolio. Joining us now is the author, Anthony Scaramucci, Skybridge Capital founder and co-managing partner. Good to have you on, Anthony.
Oh, you read that the way my mom wrote it.
Yeah,
I appreciate
exactly.
it.
She's a wonderful lady. We're all cutting our teeth together. Maybe not you. You've got a good firm grasp enough to write a book about Solana. But let's start right at the beginning. Similar to Ethereum, it's a blockchain, and it can be the backbone of a lot of really quick transactions in DeFi.
Yeah, well, a lot like the discussion that you were having earlier today with David and Bob. I mean, there's going to be layer one technology. Not that more people at home. Ethereum is a layer one technology. Hyperlink, Hyperliquid would be one as well. And I think all we're saying is that you'll be able to put a smart contract or a security, formerly known as a security, and tokenize it. And you'll be able to use the Rails system of the blockchain, one of these. I think Solana will be one of the big winners. It's not to say that the others are not also going to win. I believe they can cohabitate with each other. And the analogy I would use for people at home is a little bit like the cloud. When we started using cloud computing about 20 years ago, people were reluctant to use it, and then they understood there was great safety and anonymity in the storage, and then it proliferated, and you have many cloud vendors, And I think that's gonna be the case in this world of tokenization, but this particular token has very unique properties, it's very cheap to use,
Very cheap.
it's incredibly
Fractions
fast.
of a cent.
Yeah, I mean,
50,000 transactions, many more transactions. per
many
second.
more transactions, and Anatoly.
Not as many nodes though, right? And
Well,
more.
it's proliferating now. I mean, again, this is sort of the same conversation that we'd be having about the internet, and I was watching earlier, I think it was Paul was bringing it up about
Yeah.
how, you know, you're in the Netscape zone on your way to Google and eventually into Facebook, and I think that's where we are. We're very, very early. So just imagine 4 or 5 years from now, will there be a rail system on the blockchain where we are tokenizing things? And so I believe the answer to that is yes. Things like Avalanche, things like Solana, Hype would be one of those as well.
It's cheaper than Ethereum, and it's
Cheaper.
got two types of proof. It's got proof of stake and a proof of history with like a timestamp. So you don't even have to. It's much faster. I mean, much faster.
It's much
milliseconds
faster
versus.
and great finality, great certainty. And I think the big news now is you do have a regulatory regime under Paul Atkins and President Trump that are favoring the technology and are gonna allow for this. And I think it's very transformative. Remember, you and I are old enough to remember T+5, Joe. When I started in the business, you didn't settle your securities into your account for 5 days. It's T+1 now. You know, this could be T plus an hour or so, you know. I mean, less than that, but I think that's what they'll eventually get to.
And Anthony, I think crypto has certainly benefited from this administration's view and interest in crypto, all things crypto, it seems like. But today, President Trump is going to roll back, we suspect, the emission standards that were under the Obama administration and then the Biden administration placed on the auto manufacturers. Do you think that if there is a different administration down the road, it could roll back anything that's been done here? And what would that mean for the industry? Or once this is out and kind of beyond a fledgling state, is it too late to stop
First of all,
it?
it's a great question because that's the central thesis. If you said to me right now, what would I be worried about in the future is this sort of regulatory pendulum that's going back and forth in Washington. I would really like to see this industry and other industries have Washington take a post-partisan or a more transformative approach. And I will applaud David Sachs for that, because I think David, when he put out that executive order earlier in the year, he was trying to construct it in a way that would make it bipartisan, Becky, and I think that
I mean, that's the worst thing for businesses to say.
we shouldn't have left or right regulation, we should have right or wrong regulation, and it should be transparent and safe to use and fair to the customer. And I'm hoping we can get younger Democrats to the table on that. There's a partisan divide, and it's a very good point that you're bringing up.
Okay, front page New York Times today. Trump's AI and cryptos are benefits himself and allies. And you are no fan of we've had our
We've had some
disagreements in the
differences,
past
Joe,
about the president. Yeah, we have. So you're not going to be someone that I think would sugarcoat things. In anything you've seen with the president and his family and their conflicts in dealing in crypto and the businesses that they set up, has anything really raised your eyebrow, or David Sachs, or anything? Has anything really raised your eyebrow in terms of impropriety?
We've been at odds. Some of it is more style related.
How about for this though?
But let's talk about this.
Yeah.
So I'm friends with Eric Trump. I think you know that. He came to my conference.
We all have the same birthday.
We all have the same birthday. My son,
January 6th.
My son was very involved. My son AJ was very involved in helping him raise money for American Bitcoin. I own American Bitcoin, so I just want to make sure that that's fully disclosed here. And so no, I don't see that. I think that that is a partisan thing. As it relates to David Sachs, I read the article, and I would just submit back to people rhetorically, you want people like David Sachs in the administration, whether it's a Democratic administration or a Republican administration. And guess what? David Sachs is going to be a visionary and an entrepreneur and do a lot of business-related things. And I think you don't want to overly stop those people. I don't think you just want bureaucrats, lawyers, and academics in Washington, because they have very little business interests outside of Washington. And so that's me. I'm a huge fan of David Sachs. I think he's done a great job. And I think the criticisms in that article are unfair. And so, maybe we agree on that, maybe we don't, but that's my approach.
No, I was just asking.
And I want to encourage people like David Sachs to go into government, because we need those types of people in government.
All right, so back to Solana. If someone, obviously Bitcoin is 92,000, you can buy to buy any amount of Bitcoin. You don't have to buy a whole Bitcoin, obviously. But if someone wants to get into crypto, you think if you're comfortable with Bitcoin, that Solana would be a good investment where it is right now? It's at about 141.
Yeah, I think Solana, Bitcoin,
Ethereum,
Avalanche.
Less so.
We own Ethereum, but we own less of it. But I like the whole area because this is taking off. You know, listen, we're old enough. Alta Vista, Ask Jeeves. We had AOL Search. Okay, they got big-footed by Google. But this is mature enough now where there will be 3 or 4 players that emerge in the next 5 years that are going to be industry standards. I believe Solana is one of those. The other ones that I mentioned are likely one of those. But I explain in the book why the technical properties associated with Solana I think are quite favorable. And I'll leave you with this thought. When Anatoly created Solana, he didn't try to create new things from a computer science point of view. He used all the available tech that was out there to make it easy for developers to run programs on top of Solana. And so for me, it's one of our big names. We own a lot of it, frankly. I have a lot of it on the Skybridge balance sheet. And so I wrote a book about it because I want to also explain this stuff to our customers. And when I made the investment in Bitcoin 5 years ago, traditional finance people excoriated me. Some of the wirehouses
before you.
Yeah, you were before me, but I got in there with, you know, in size at an institutional level.
Yeah, you got it in size.
And
That's the difference.
I got excoriated by a lot of people
Yeah,
in
you did.
traditional
I
finance, and
remember.
now they're coming. And I'm just saying, this is 5 years ago, we said Bitcoin. I believe 5 years from now, Joe, if we're fortunate enough to be sitting at this table again, we'll be looking back on Solana and say that was a good entry point because we're using Solana.
I saw a funny meme on Twitter. It had a picture of someone frustrated, and it's, you know, I've been in Ethereum at 3,000 for 4 years or something like that. I mean, it has not been like...
You have a lot of fear and uncertainty and doubt in this industry, and so something like Ethereum that has really good technical properties could lag for several years. But again, let's go back early stages of tech in our lifetimes. Amazon went public in May of 1997 and had lots of hiccups, down 50%. And you remember the March 2000 debacle, it was down 80 or 90% at that time. And the point is, as things are adopting and scaling, if they are good fundamentally, you should hold them, which is why we never left our Bitcoin thesis despite
the speed of
volatility.
Solana and it's much cheaper. That for you overcomes. It's not as distributed as Ethereum.
But it's becoming more distributed. It's growing the scale of its
So then
distribution.
we have no negatives versus Ethereum.
Listen, I think that people will want some customization. If you go to the big chief technology officers at the Fortune 50,
Yeah.
they may go to they may be on Avalanche because you have these subnets on Avalanche that can allow for more customization. But I'm talking about broad scale delivery of tokenization. Somebody like a BlackRock, somebody thinking about tokenizing stocks and bonds or potentially real world assets, I think they'll use something like Solana. It's bigger, it's faster, and it has way more market share, and it's growing faster than the others. But I like them. It's
What
not
was your
just,
aura
not
in
just one.
reading today? We can compare to Andrew.
No,
Andrew.
I had a bad sleep score this morning because I had to get up.
You were nervous about coming on here.
No, I wasn't nervous, Joe, but I had to get up early because I had to drive into the
You're anxious.
I knew Becky would be here to protect me. Yeah,
You're anxious.
exactly. I knew Becky would
And
be here.
Andrew would be here.
Well, he offers good defense when I need it.
I know he does.
Yes.
And we're gonna go to him right now. Maybe he can do it.
Thanks, Anthony.
Thanks, Lou.
Good to be on. Thanks.
Well, the New York Times Deal Book Summit is today. It's the big lineup of newsmakers that are there. Andrew's there. He joins us right now with more. And Andrew, we've been watching and waiting because you've got a great lineup for us today.
Hey Becky, thank you. My aura ring, by the way, Anthony, is doing okay today. About 85. I don't know where you guys were on that before, but I'm right here at Lincoln Center ahead of the Deal Book Summit this year, and we're kicking it off this morning with an interview with Treasury Secretary Scott Bessent. That's coming up at 9:15 a.m. Eastern Time. Of course, a lot of this is going to be dipped in live right here on CNBC, so you get to see it. After that, I'm going to be speaking with BlackRock CEO Larry Fink and Coinbase CEO Brian Armstrong together, two OGs, if you will, in the finance space, talking about the future of finance. And then GM CEO Mary Barra is going to join us. She's, of course, in the middle of all the tariffs and supply chain issues, as well as a big question about EVs. Of course, there's reports out today that we may hear from the president later today about some shifts in terms of restrictions or lack of restrictions, I should say, on gas-powered vehicles. We'll talk to her. We got a rare interview, guys. This is an important one. The president of Taiwan. We're going to talk about everything from chips to China and what happens next. And then before lunch, we're going to speak with Palantir CEO Alex Karp. Later in the afternoon, Anthropic CEO Dario Modi. A lot to talk to him about in terms of the AI bubble. Is there one? And he's of course been very outspoken about jobs and what AI could mean to job losses. So that's going to be fascinating. And then our three last interviews of the afternoon. I don't know if I say this name to you guys, will you know it? If I say the name Jimmy Donaldson, I don't know if that means something to you, but I promise, I think, if I say the name Mr. Beast.
We know it,
Maurice.
Yes, we do. This is actually the interview I think I'm most excited about.
This is the biggest social media influencer in the world. He has more people follow him than anybody else on the globe. He has literally billions and billions of unique folks watching him. He's going to be joined by Jeff Hausenbold, who runs Mr. Beast Industries. And then we're going to have a conversation with a California governor, Gavin Newsom, about the future of the Democratic Party and where all of this goes. And then finally, what I imagine will be an emotional final conversation of the day. We have Erica Kirk, of course, the widow of Charlie Kirk. She's taking over Turning Point, what is probably arguably the most important and influential group inside or around the Republican Party right now. So we're going to be doing that. That's what the day looks like. And we'll be bringing you a lot of that coverage right here on CNBC throughout the day.
So at 85, that means you got a good night's sleep. You're rested, you're ready, you're on your game, right?
What it actually means, Becky, is I got a good night's sleep the 2 nights before, and because the way it like modulates it, last night I wasn't a good sleeper. I'm never a good sleeper before this day. It's terrible.
This is a big day.
But that gives me credit for the days, the prior days.
Very important.
I haven't seen you in a while, and I did get, remember I said I never worry about getting sick? I did get sick. And
Right not to be around
I
you.
was not around you.
That's why I haven't seen you in a while, because right before Thanksgiving, exactly.
I know, it's almost
It's like
gone.
typhoid Mary.
I know Bill Donaldson, DLJ, New York Stock, is it,
Jimmy. Mr. Beast. He's the man. This is what I'm most looking forward to.
Right.
Andrew, break a leg, man. This is going to be awesome. We can't wait.
We'll see you tomorrow morning.
We will, and we'll be watching all day. Andrew Ross Sorkin, New York Times Deal Book, big conferences today. We're going to be covering it right here on CNBC. We'll see you later.
and coming up, folks, we have some economic data on the way, the November ADP report.
approaching 8:15 a.m., and that means the November ADP private payroll figure is going to be upon us. That's less than 30 seconds away. Ahead of that, let's check the markets. We've been in the green all morning long, but right now the Dow futures are up near their highs, about 137 points above fair value. S&P futures up by close to 22. The NASDAQ indicated up by about 75. And if you've been watching treasuries, you will see that the 10-year is sitting at 406. The 2-year is at 349.
All right, ADP out with November private payroll data. We're going to get it from Steve Leisman, but we have the person right here. This is like one of those middlemen in healthcare. Hey, Steve.
Hey, Joe. Yeah, a big miss on ADP payrolls. The private payroll company saying private payroll shed 32,000 workers in November. That's the fourth negative number in the past 6 months for this series. Take a look here. The estimate was for 40,000, so the street was off on this one. And how did you get there? Well, goods producing shed 19,000 workers, service producing shedding 13,000 workers. But the big story here, and I'll show you more detail on this, is what's happening with small business, down 120,000. Medium and large business doing okay, up 51 and 39,000 respectively. But take a look at this chart here. Virtually all of the job losses have come from small business, which has been negative in 6 of 7 months since April. Without those losses, ADP numbers would actually be positive, but you can't get rid of it. You can't exclude small business. And then you look at it by sector. Well, we've seen those two sectors do it. Education, health services, and hospitality leading the way, but manufacturing down, information down, and professional business services down by 26,000. Also, another sign of weakness in the job market. Job stayers, their wages up 4.4. That's down to 10 from the prior month. And job changers, that was a big number, or had been. That's down 0.4 of a point to 6.3%. So, Joe, at least according to ADP, additional weakness in the job market. And small business getting hammered, and there is some information that some of this may be coming from being hammered by the tariffs.
Yeah, trying to figure out. I'm watching, all the markets. I saw Bitcoin above 93. No, they didn't. But this, I don't think people know whether, if we already had a cut in the cards, then we don't need any weak data.
We don't really want any.
But we might need it for the next, the next ones are less sure now, so maybe it would help with those, or maybe it's just downright bad and not great when we lose jobs. So I don't think people know what to do. Let's see what Neela thinks. Joining us now, Neela Richardson, ADP chief economist, and you're not here to tell us what the stock market should be based on these numbers. You can just tell us that things have worsened in the last month.
Yeah, this is a small firm story. This is even more than a small firm story, Joe. This is a mom and pop story. Because if you look at where the losses came in, it was for firms with headcount under 50. And you take that and you extrapolate it to the industries, those are the same industries. Construction, for example, where there are a lot of small firms. And so when you think about what small firms are dealing with, you put your mind into the space of a small firm owner, they're not going to raise their hand and say, we're cutting by 10%. They're just not going to replace that retired worker. They are just going to let attrition take care of this issue for them. They are going to have a hiring freeze. They may not hire a teenager or two in the bakery over the holiday season. They're going to make these small changes that add up to a lot, because 44% of U.S. workers work in these mom and pop establishments.
What's ailing them? What is ailing them? What's the problem? Tariffs?
You used to be able to look at your consumer demand and your traffic and make the story. But if you're a small firm owner today, you have to think about your supplier. You have to think about the Supreme Court decision that will kind of pave the way for tariffs. You're going to have to think about all of these things instead of just your own foot traffic. And so what that means is that you may delay your decision making when it comes to hiring. You don't want to pass along those price increases to the consumer. And there's no evidence that we're seeing small firms do that in lockstep. What they're doing is they're absorbing it, they're taking a profit hit, and they may be delaying or curtailing hiring.
So how can bigger companies, they just have lawyers or something? How does it work?
They have more options. They can change suppliers. The fixed costs for small firms are variable costs for large firms. They can invest broadly. They can be price dictators when it comes to their suppliers. And you have to also understand where we are in terms of the inflation story. It's not just inflation growth. It is the cumulative effect of 24% increases in price levels in the last 5 years. So even modest inflation from here is on top of really high price increases over the last several years.
The affordability crisis wasn't helped by the 3% inflation that we've got over the last year, but the 21.5% prior to that, it accounts for a lot of it. This is just like layering on another 3.
Economists are happy with smaller inflation, lower inflation rates,
but
slower,
prices are still
but
up.
the price levels are still there.
Up 25%.
Right, that's right. And so you add in all the effects and you think about what a small firm can change, they can change their hiring patterns, and that's what we're seeing right now.
Is this the beginning of a series of numbers like this, or is it a troughing of numbers like this? You know, if we knew that,
then I could be in those prediction markets that you were talking about earlier, but we don't know that, and I think it will depend on the consumer. Remember that overall GDP growth, at least in terms of our last read of the second quarter GDP, was strong, and it was strengthened by that resilient high-income consumer. If that resilient high-income consumer is enough to pull the water for the rest of us, for the low-income households, for the middle-income households, you may see a resurgence in small firm hiring demand. And so really now is a more concentrated economic path forward that is dependent on AI investment and a well-heeled consumer.
I was going to ask you if you had anything, Steve, but I don't know, they're playing this music. Again, any just final thoughts? Well, not final thoughts, but any concluding thoughts?
Only, Joe, that you're asking the right question, which is what's ailing small business. It's an engine of growth in the U.S. economy. We got to start thinking about it. Obviously, they would be more affected by higher interest rates than big business, which can go into capital markets where spreads are very tight. So there's an issue there that has to do with the Federal Reserve. But also, I think Neela makes an important point, which I've been talking a lot about, which is the ability of small business versus large business to adapt to these tariffs. You know, Jim talked to his wife Louise and says, find out what the tariffs are in Indonesia. And I think it's harder for Louise to do that than it is for, say, a large company that has a department that does that.
As Steve Trump says, there's one candidate left. Who is it?
We believe it's Kevin Hassett. There's a story this morning about interviews being canceled. We had some information about that as well, that there were going to be a process that was run by the Treasury, and maybe Sorkin can ask Besson about what happened to that process. But there was supposed to be a series of interviews over at the White House. They seem now to have canceled those interviews, and the president has decided what he's going to do.
Right. All right, Steve. Neela, thank you. Steve, thank you. Squawk Box will be right back.
have new data on auto loans, and Phil LeBeau joins us with that. Good morning, Phil.
Good morning, Becky. We've talked about this for some time. When it comes to people buying new vehicles, they are taking out larger auto loans and payments that are rising every month, stretching it out further. So this is the latest data from Experian. They check all millions of auto loans that are taken out every quarter, and for the third quarter, the amount borrowed now tops $42,000. The average monthly payment for a new vehicle, a loan on a new vehicle, is $748, with the average loan term now rising up to 69 months. But when we talk with the people at Experian, they are noticing more people taking out 7- and 8-year loans.
Well, we have definitely seen growth in the 84-month loans, and we continue to see some growth in loans that are above 84 months, 85 plus, even loans above 96 months. However, it's a very small percentage. I mean, we're talking less than 1/4% of all loans are going to be over 96. But the 84-month loan continues to grow.
And that's one way to lower your monthly payment. Stretch out the terms to 7, 8 years, as long as you can bring that payment down. The 60-day delinquency rate that Experian noticed in the third quarter, 0.96%. You might look at that and say, well, that doesn't seem that bad. You're now looking at where the delinquency rate was back in 2008. By the way, Cox Automotive out with dealer sentiment today for the third quarter. It's not good. In fact, they are seeing slowing traffic. It is the lowest dealer sentiment on consumers buying new vehicles since 2020. If you take a look at the automaker shares, keep in mind, guys, or auto dealer shares, I should point out, keep in mind that later today we will be hearing from the president about new fuel economy standards at the White House. So a lot happening when it comes to both consumer sentiment as well as what we will be seeing with vehicles over the next couple of years.
Yeah, I wish we had more time to talk about it. We're up against a hard break for data, but Phil, thank you very much, and we'll be watching later today.
And coming up, September import prices. Stay with us.
Welcome back to Squawk Box. Rick Santelli here live at CME HQ with the breaking news of the morning, and there's several tranches. This tranche, import-export prices. These are September numbers. We may never get October numbers, and of course, we know that we haven't seen any of these releases in a couple of months. On the price index for the imports, up 0.0, so unchanged. We're expecting up a bit, up 0.1% was expected. In the rearview mirror, up 0.3. Zero would correlate to, well, the smallest number since it was negative in June when it was -0.2. Now, if you strip out petroleum, we see prices move up a bit, up 0.2, a little warmer than expected, equals our last look. And now let's go to the year-over-year import prices, up 0.3, cooler than expected, but definitely higher than our unchanged last month, up 0.3. That would be the warmest going back to March when it was up 0.8. We've seen a lot of big negative numbers on this series, so a little evening up going on here. Switch gears, export. Year over year, up 3.8. That is up 0.4 from our last look at 3.4. Revisions coming in. 3.4 turns into 3.2. 3.8 will be the warmest, and we have to go way back on this. 3.8 will be the warmest since Dec of 22. But do remember, even the 3.2 in the rearview mirror would go back to Dec of 22, because the biggest number that we've had since then was up 2.7, and that was back in June of this year. So this series of export prices is really on the upswing a bit, and that makes a bit of sense because you consider that the import prices do not include tariffs. Many are trying, of course, to see how that shapes up by studying more on the export side. We saw ADP negative number worse since 23, I believe it was March of 23, and Steve did point out the recent spat of negative numbers. Listen, ADP is never anyone's first choice, and they've really stepped up to the plate. In terms of the accuracy of this, I'm not sure, but I think the overriding sentiment of less from small business and some layoffs and firing coming from that area and less hiring does make sense from an anecdotal standpoint. We continue to see that the rate cut in December, not that far away, is basically fully priced in the futures markets, and this number today and of course the ADP number earlier are going to go a long way to cement that near 100% probability of the rate cut. And we've seen some recent steepening of the yield curve, Becky, 2s to 10s, and my guess is that is becoming more the trade du jour of an easing Fed at a time where long rates globally are sticky. Back to you.
Okay, Rick, thank you very much. Steve Leisman joins us right now with more on that. Steve, between this and what you heard from ADP, your take on the overall economy?
Well, just real quickly, what we're looking for in the import prices is this notion that if import prices are falling or negative, they're offsetting the tariffs. We don't see that, and we haven't seen that. So it looks like when you take out fuel, import prices are up just a little bit. So it does not appear as if importers are getting discounts from the exporters or the companies overseas that are selling us the goods. So therefore, it seems like, again, this is a domestic issue. This data would suggest that this is U.S. companies, U.S. consumers paying these tariffs unless they were offset, but we're not seeing that offset. I think that's an issue. Becky, I continue to be among those who are more concerned about the impact of tariffs on the economy. I know that the numbers, when it comes to the inflation data, have been relatively muted. We haven't had a lot of it. It is elevated, but not as elevated as people expected. But I think the effect on business is what we're seeing here, and I think that's part of what's been dragging down the economy. Now, maybe we get used to it and we get to this great place down the road where we have indeed brought in manufacturing from overseas, but there's this transition period if that's going to happen. And in that transition period, there's a negative time, and this seems to be that to me. Rick is right. ADP is not 100%. It may not even be 50%, but I don't think we have a booming job market with ADP numbers like this and as downbeat as they've been. And what you're seeing is a pretty strong, confident bid right now on the Fed cutting rates, but not much more down the pike. It looks like 3% is where the market, even with a potentially very dovish Fed chair coming in, is where the market settled out, down 3%.
Okay. Steve, thank you.
Pleasure.
Wow. We're going to call her Congresswoman Elise Stefanik. There's if you look it up, Representative, I should just avoid that completely, because a lot of female members of Congress want to be congressmen because that's the convention in writing. Others want to be congresswoman, and then others just say, how about representative? Do you have a preference now that you're on, and we'll use it from here on out? It's good to see you, by the way.
Congresswoman, but I'll tell you, my constituents know me as Elise, and I'm proud to represent them.
I can't do that.
Congresswoman Stefanik.
Oh, all right, we'll do Congresswoman then. And you're on for a couple of things today, but it's a lot. I'm looking through it, Congresswoman, and there's a lot of palace intrigue here. You are signing on to a discharge position that would force a vote on banning congressional stock trading, and separately, you told Punchbowl that you're prepared to potentially bring down a must-pass annual Pentagon policy bill. But this all seems to be, perhaps, and you can dispute that, related to an ongoing, I don't know, sort of a family feud with Speaker Johnson.
No, this is about putting America first and delivering results. And the issue, which we had a great breakthrough last night, which will be included in the defense bill, it passed out of the Intelligence Committee, and this goes to congressional notification. If there's any counterintelligence investigation open against a presidential or federal candidate, that Congress must be notified. It goes back to 2017 when former FBI Director James Comey in an open hearing testified and said that he did not follow proper protocol. This passed on a bipartisan basis out of the House Intelligence Committee, and it was included in the bill as it's worked through this process. It was stripped out by Jamie Raskin despite overwhelming bipartisan support. We had a great breakthrough last night. It will be included in this bill, and it's an important step towards good governance. On the stock ban, this is an issue that I have long been concerned about. When I came to Congress over 11 years ago, I made the decision that I believe it's unethical to buy, trade, or sell stocks. And this has been a growing issue bubbling up when you have people like former Speaker Nancy Pelosi literally making hundreds of millions of dollars, performing better than the best traders on Wall Street. That is inexcusable. And for whatever reason or another, this has not been made a priority by leaders of both parties, frankly. So members have a bipartisan coalition and are delivering this by signing the discharge petition to provide good governance. It's good policy. Over 80% of the American people support this position, and it's very important that we're focused on legislating and not seeing, again, some of these unbelievable trades from members of Congress from both parties.
Yeah. Long been discussing it on this show for a long time. I guess the scuttlebutt was that since Speaker Johnson wasn't involved, leadership wasn't involved in this, and this was Representative Luna's discharge position, and because it bypassed Speaker Johnson, that was in addition to that defense authorization. You mentioned Jamie Raskin. I guess the speaker pushed back and said you needed the four corners of the judiciary to sign on, and they hadn't, and he wants to do it.
They had. Jim Jordan supports
Now
this
it's done.
provision.
So
Of
now
course, it's done.
Okay.
It's done, it's included, it's good governance, this is gonna be an important win. And just going back on the stock trading, this isn't something that I would say the leadership is opposed. This is an issue, the time is ripe. And frankly, this should have been done a long time ago, and members are frustrated of both parties. So this is not about pointing blame to one particular leader.
But Speaker Johnson said, why not just call him? And is there any animus that relates back to
No, he and I
vote?
had very successful discussions last night. It's a provision that he supports. Jim Jordan, the four corners, other than Jamie Raskin, they supported the provision, and first of all, it's good policy. It passed unanimously out of the House Intelligence Committee, Joe. That's important. We should be closing the loophole that was abused illegally by James Comey, and it was a continuation issue, as you've seen the breaking news related to Arctic frost, where members of Congress were, frankly, investigated, counterintelligence investigations into multiple senators, multiple House members, and yet the FBI still did not follow proper protocol. This strengthens that, and it applies to every federal candidate. So it's good policy. It was bipartisan out of committee. We should not allow Jamie Raskin to veto this when the vast majority support it. I'm glad we had a breakthrough last night. It's positive. It will be in the bill. It's a very important result on pushing back on the illegal weaponization issue.
talk about the run for governor. It's a blue state. It's been tough for Republicans in blue states recently, and I see great things in happening for you in polls with independents and Republicans. But I just don't know if is that enough in your view, given that New York typically, I mean, it's not like New York City, but it is difficult. It's an uphill battle.
Well, first of all, no state has moved more to the Republican direction over the past few cycles than New York State. Look at the presidential state. Literally in 2024, New York moved more to the right than any other state in the nation. We saw Lee Zeldin in 2022 run an exceptional governor's campaign, come within 6 points against Kathy Hochul, who at that time was an accidental governor. She was only in that position because Andrew Cuomo stepped down. You now have a socialist who won the mayor's race, but barely broke 50%, Joe. Traditionally, when you're the Democrat nominee, which he was, you get in the high 60% or low 70s. The fact that nearly a majority of New Yorkers oppose his positions, which that includes a fair number of traditional Democrats, it's a real opportunity. And the reality is, Kathy Hochul has failed. It's 2 decades of single-party Democrat rule in New York, and New York is the most expensive state in the nation. Highest taxes, highest energy costs, highest healthcare costs, highest childcare costs. So that is an issue that breaks across party lines. People are frustrated. And what have we seen? We've seen Kathy Hochul, who is bending the knee to Mamdani.
Congresswoman, from what you're saying, should we surmise that you plan on running as a moderate Republican? I mean, if you're looking to appeal to New York Democrats as well.
Well, first of all, I've always delivered a coalition of voters of Republicans, independents, and about 25% of registered Democrats in my district. You forget, I flipped a district when I first ran for office, and we put up some of the largest margins, not just in New York State, but in the entire Northeast. And this coalition, I will tell you, traditional Democrats who supported Kathy Hochul in the past are no longer supporting her. Some of her biggest bundlers are now our supporters. Some of her biggest coalition of voters are moving to us every single day, and it's because they are frustrated with her failed leadership that has led to New York being unaffordable for hardworking New York families.
We're dealing with a little bit of a background noise there. You're not in a dentist's office.
I'm not sure what that is. There's construction going on.
Someone's got a big old cavity or something, but I think they almost got it at this point. Congressman, you know, they're going to say, I mean, I can hear it now. They're going to say, as you know, demagoguing that you voted to cut Medicaid because you voted for the big beautiful bill, even though Medicaid goes up every year under the big beautiful bill. It's just the rate of increase that was dealt with.
What I voted for was to strengthen Medicaid, and it's important, and New Yorkers know this. Kathy Hochul is spending tens of billions of dollars of Medicaid for illegals. We want to strengthen Medicaid. It's an important program to make sure it is for law-abiding New Yorkers who are legally here. This should not be a multi-billion-dollar sanctuary state policy that law-abiding New Yorkers are frankly paying for. So I will continue to advocate for better health care, more affordable health care, and more accessible health care, which is an issue facing every family across the state.
Well, you worked right through the drill, and if you can do, I guess if you're in Congress and with the din in the background of what goes on there, you can deliver a speech. You can deliver it anywhere, probably, Congresswoman. But we hope to see you again, and update us on all these. There's no, you and Johnson are like this. You're like you're breakfast, lunch, and dinner every day. I mean, you're tight.
It's a good win. What I want to focus on is delivering wins for the American people. It was worked out last night. It will be included in the bill. It's a good win, and it's a bipartisan victory, except for one Democrat who opposed it. We have to be in the business of delivering these bipartisan results, which we have been.
Okay. Congresswoman, thanks. Appreciate it.
Thanks.
Okay. See you later.
All right, some breaking news on Delta Airlines. Phil LeBeau joins us with that. Hi, Phil.
Hey, Becky, take a look at shares of Delta, the company putting out an 8K just a few minutes ago, now detailing how much the government shutdown and the flight cancellations cost the airline. $200 million works out to a 25 cents per share hit for the fourth quarter. Again, Delta saying that the government shutdown cancellations cost the airline about $200 million. Guys, I'll send it back to you.
Okay, there we go. Squawk will be right back. Thank you, Phil. Concerns over home ownership affordability are on the rise, with climbing construction costs up for the 5th straight month. Joining us right now to talk about this and some potential solutions is Richard LaFrac. He is the CEO of real estate development and management company, the LaFrac Organization. And Richard, thank you. It's great to see you.
Thank you for having me. Good to see you both.
Is that by Warren Buffett brick? What the hell is that?
Well, yesterday I noticed that one of you guests brought in a, it was like
The
show
bourbon.
and tell. He brought in some bourbon.
Yeah.
That's your
So
thing.
I thought I would show and tell what I do because it's kind of
That's a good idea.
it's kind of like the anti AI thing.
Exactly. Bricks and mortar, literally.
Right,
Yeah.
bricks and mortar. But I brought it in for a reason.
It's a beauty.
It is. It's for you.
No, I don't. I have one from
Warren.
From Warren.
Well, I wasn't here, promoting Warren's Brick Company.
Yeah.
But I brought it in to.
But he thanks you.
To make I'm sure he does, I brought it in to make a point, and the point is about the affordability of housing, which is a huge issue. I think we got a new mayor who kind of rode that pony.
Not just New York. I mean, this is a major issue everywhere.
Got one too.
Yeah, but this is a major issue everywhere. Affordability is a key, and people spend most of their disposable income on housing.
Right.
That's their biggest item.
That's not a
for
good
most
thing for the country, it's not a good thing for the families. But I brought the brick in because I wanted to make a point with respect to that. That brick does not know where it is. That brick costs the same if I put it on a condo on Billionaires Row, or if I put it in an affordable housing project in the South Bronx. So the cost of construction has just gone, it's been rampant for the last 20 years. And production, the productivity of the workers has not increased. So wages have gone up, and they should, because these are skilled people, but their productivity has not gone up.
Well, I was going to ask you about that. When you said, because you actually wrote in when we were talking about affordability and what it would take to bring housing prices down. Your point was it would have to be lower construction prices.
Well,
forget about everything else.
That's the biggest single component, because the cost, 60% of the cost of a building is the hard cost.
Right.
And that's where you have to really do your best to try to shrink it.
Have those costs gone up dramatically the last 4 or 5 years
Yes.
since the pandemic? Just like
Yes.
inflation has hit everywhere else?
Yes, and also now, tariffs and other things aren't helping either.
Yeah.
So, all of that is compounding. But the one thing that hasn't really compounded is the application of technology to building, because we're basically building the buildings the same way we did 50 years ago. It's a lot of hands.
Well, every once in a while you hear somebody who tries to automate in some way. And for single-family homes, sometimes that's prefabrication.
Right, yes, and that works too. That can work. But that's very tough in an environment of a city.
Right.
Obviously, where, you have a lot of regulatory things that stand in your way.
So what can be done to bring down housing prices?
Well, it's kind of right here. It was interesting. I was reading Mayor-elect Madami's plan, and there are things that he mentions. Using city-owned land, increasing density. Kind of get rid of the NIMBY stuff. That no, don't put it in my neighborhood. And try to make that. The problem is more acute in the bottom half of the income stream, the income levels, because that's where, people really can't afford it.
Do any of those ideas you think work, potentially?
Yeah, well, I'm kind of an all of the above guy when it comes to that. That some of his ideas are okay, but the big flaw is, if you read his program, or at least in my mind, is he says building by and for New Yorkers, and by means that he wants the city agencies to do the building. And I would offer the following: if you were gonna do a renovation of your kitchen, who's the last person in the world you would go to get it done? The government. So, that's just my opinion. Order on a supermarket, or do, things that profit motive usually makes more efficiency.
And more efficient, and as a result, more cost efficient as well.
More cost efficient, but we one thing which I'm hopeful with the AI, and virgin when it comes to understanding most of it. But there's no question that there should be ways to improve the efficiency of the process with AI. Not necessarily change the price of the brick, but the process of construction, the process of getting a set of plans approved, which everybody, permitting, permitting, planning, all those things can be improved by, the digitization of these ideas and then running them through these systems that can act quicker. So time is money, and in this case, that would be very helpful if we were able to reduce the time, compress the time. I mean, there's no reason why a set of drawings can't be done in digital format, gone through an AI process and approved, and commented on or approved in how long does it take for it to go through the computer? I mean, what is it, in 5 minutes, 3 minutes? Minutes versus months.
Yeah.
And I'm sure knowing in your own environment, how many friends are doing small jobs in their homes and they can't get out of the building department, they can't get inspections. All these things take time, cost money, and I think that's something that they can work on pretty quickly with the AI stuff.
Richard, President Trump, this administration seems to be looking at the Federal Reserve lowering interest rates as the best way to get at affordability in terms of lowering mortgage rates.
That's going to help. Yeah, it's incrementally helps. But if you think about it now, mortgage, we were spoiled with the 3% mortgage.
Right. Is a mortgage all that unusual when you're talking 6-7%?
No, I mean, at least if you're as old as I am, 6% sounded pretty good in the 80s.
And I guess the bigger question is if they can bring down mortgage rates just based on lowering interest rates, because the last go round of lower rates,
we had the 10-year went up,
higher, and that's what
10-year went up, and the short-term rates went down. But that's lots of complications with the $38 trillion national debt and confidence in the currency, and there's a lot of extraneous issues other than.
Did the president ask your advice on the ballroom?
He did not ask my advice in the ballroom.
Did you offer any? I'm sure it's going to be a great.
Well, I will say this, that I was in the Élysée Palace about a month ago at a conference with, and we happened to be, had the opportunity to meet Macron, and we met him in the ballroom of the Élysée Palace. And it's pretty spiffy. It's a lot nicer than the East Wing of the White House.
The tent. I know, the tent where we were sticking people.
It's a lot nicer. So maybe, I'm not going to be critical of the president's idea of making something that's appropriate. He didn't ask me. But he might be.
Yeah.
I hope he does.
No, he didn't ask me. No, I did not. I mean, I support the idea that what he's doing, but whether it's 90,000.
You never know what to expect. If you come in here, you willingly do it. You're going to hear. You never know what you.
I expect
nothing less.
There'll be something left.
Richard, thanks a lot.
Thanks, Richard.
Yeah.
We'll be right back. happening on Squawk Box this morning. ADP private payroll showing a loss of 32,000 jobs, well below estimates. Macy's reporting quarterly results, the company's best growth in more than 3 years. Macy's also raised its full-year guidance. JP Morgan releasing its 2026 outlook. The firm expects the S&P to hit 7,500, but who's counting? Lot went on today. We have complex interviews. My head hurts. I guess it's crypto.
We'll be back here tomorrow anyway.
Make
Bye.
sure you join us.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Kingston here with Jim Cramer at Post 9 of the New York Stock Exchange. Favor has the morning off. Futures holding on to some gains as Bitcoin recovers a bit further. At the same time, though, ADP does come in pretty ugly, down 32K. That's the worst in more than 2 years, as some economists say small business employment may be in recession. Yields are lower across the curve. Our roadmap begins with the mood of the markets as Bitcoin does bounce back at about a 2-week high. AI headlines fueling a number of big tech earnings. NVIDIA's Jensen Huang goes to Washington to meet with some lawmakers on the Hill today. And it's a big day for eco data. We'll get this fresh read on jobs. He's showing the labor market slowdown is, in fact, accelerating. Let's begin, though, with the markets as the major indices, Bitcoin and the tech sector try to build on Tuesday's rebound. Jim, I did see your post this morning. Sell those that are financing or have some insider selling?
Yeah, well, where we are at this point is we're now in 2000. I mean, people don't think we're 2000. They're wrong. It's just that we went 2000 we contained. And what I want people to do is to recognize there are now two kinds of companies. In 2000, when the companies they took advantage of the fact that their stock went way up, and they did convertible bonds, did shelf offerings, and they absolutely crushed their own stock. This company I ran, which is like, I don't know, it's a poor man's court. They offered, here's, this is just textbook, 39.7 million shares, priced at $41.12, and a convertible bond deal that the people who buy the convertible probably short the common. People might say they can't, but they do.
Right.
And this is exactly the kind of deal that I saw in 2000, and I said, I couldn't sell my shares in Street.com because I was locked up, but I was able to short until the cows came home. Because you see, when you do these deals like this, what it says is, all right, we got a lot of hope. Hope per share, really a bad ratio. And, I press release, but in the end, I was saying on March 15th of 2000, I was saying it's favor per share. And we're now, I think, was Iran a great company? No.
Yeah.
No.
And that's not a comment on the giants that we talk about all the time.
Well, no. You see, one of the things that's different between 2000 and this is that there are real companies right now doing great things. Now, you can see Iran had an EBITDA positive. I don't know how the heck they did that because they had capital expenditures that are incredible high. Enterprise value is very high. But what I'm looking at are companies, I want to contrast Iran versus Marvell. Marvell, Matt Murphy made a call to Scott. He bought not $1 million, but $2 million worth of stock in the open market in the 70s. And I've got to tell you, that's what I'm looking for. I'm looking for people who say, you know what, you don't believe in me? I'm a buyer of my own stock. And let me see, he bought, oh my God, he bought on 9/25/25, he bought 13,600 shares. In 10/14/25, he bought 13,000 shares. $77 and $77.63. That's what I want. We didn't have anyone like that in 2000. No one. We had a lot of Iran. Now, Iran right now, I'd say 99% of the people in our universe don't know what Iran does. I mean, it could be Irene, like my sister Irene, which was a second-rate play.
That's right.
My sister played Irene in the version. And when I look at this thing and I say, one group of stocks are Bitcoin. Iran's Bitcoin. Another group of stocks are serious players, heavy hitters, doing great business with Amazon Web Services.
Sure.
And it's our job to point out which are the companies that are related to Bitcoin, and when Bitcoin goes up, the pressure of the selling goes off, and which ones have nothing to do with Bitcoin.
Right. Well, MicroStrategy's up a little bit pre-market. We talked about it yesterday. Today, there's a little more chatter about potential MSCI index exclusion.
Right.
Although Saylor says that's not going to be necessarily an issue, and that the reserve, this new dollar reserve, lessens the pressure to sell more Bitcoin.
Right. Well, look, I said to you, Sudini, you can't bet against this guy. I know him in 2000, and he's a magician.
Right.
But, you know, the magic works. I mean, look, he got the stock up. One of the great things they did was they say, listen, we might have to sell stock. Whamma-jamma, every single short bought into that. And right now, I'm going tarpon fishing. They have cement mouths. Boom! That's what they did here. Boom to the shorts. And when I look at what the shorts are doing today, they're saying, what happened? What happened? They're calling their mommies. The old calling their mommy trade.
Really?
Yeah, they used to talk about the Pampers trade. I don't mind it. No, it's call your mom.
Well, I mean, they're 30% off. There's 30% off the high on Bitcoin. Somebody's made some short money. Yeah.
No, I mean,
you expect them to cover at some point.
No, I just think that what I'm saying is that Sailor, you know, come sail away again. He did it. A lot of people thought it was the Lusitania. A lot of people talk about the Titanic. It turned out to be the Battleship Missouri. And I just think that people just don't recognize who they're dealing with. I mean, they came out, they gave a press, they get the CEO, well, you actually the CEO come out and say really negative things, so that means you put the short on. Yeah. This is how it really works, people. Yeah. I'm telling you how it really works.
Mizuho, by the way,
the game.
Mizuho reiterates outperformed 484 after talking to the CFO, Andrew Tang.
Well, there you go. Almost everybody, like we have all the uranium people come out today. You know, I've been doing a lot of work in uranium, okay? There's a company that Honeywell has that does uranium processing. I am willing to say right now that there may be no plants built within the time frame of our, not of our lifetime, because you know you don't know who's out there who's 24 and gambling on the poly market or Kalshi. But 2032 is when you might see a small nuclear reactor working, and it will be not one of these companies that we call. It'll be GE Vernova, because that's what they actually do, and they were stuck making them the last time. But you know, we gotta get out of this idea that uranium equals flying cars, equals batteries that never run out, equals companies that have one plant that they're gonna make for Microsoft. This is where people will be hurt. Now, this is not a press release that was issued by AI. What I am saying. You can even go to the wonders and greatest of Gemini, and they will not tell you what I'm saying. But I am saying that this is 2000. I lived through it, and Gemini did.
You're not arguing that we're going to see an enormous decline in the overall indices.
No, I think we're going to see a decline of some significance in the companies that have no earnings. In what I called, and what ended with the year of national investing. That's over. Now it's playing as it lays. Now we're slouching towards losses.
We'll couple that, Jim, with some, I would argue, reassuring notes, for instance, on Oracle, as well as initiates with an outperform.
That surprised me by way.
Yes. Although at the same time, we're looking at the CDS, again, highest since 09. It's more than tripled since June.
Yeah, I thought that Wells was poorly timed. And I like Charlie Sharp. Of course, he didn't do it. He's the CEO. Right. But at the same time, we have, look, okay, so we have Dollar Tree. And we have this AEO, all right? Now, the word on the street is that the consumer is weak. And we have this ADP number shows the consumer's weak. Okay, so the consumer who shops in Burlington, and I've shopped there, much to my wife's chagrin, is not doing well. But literally everybody else is. Dollar Tree, now Dollar Tree is converting a lot of stores to the 3-tiered pricing, which means they have things that are far more than $1, Five Below, which is not a REI operation for cold weather in Everest, but is actually a company that sells a lot of stuff that they buy for 30 cents for $5. Good for them. But these companies are on fire. You know, Carl, I gotta tell you, if Burlington's doing poorly and everyone else is doing, look at Ralph Lauren note today, the consumer, when they have a job, spending. If they don't have a job, they're in trouble. Or if they haven't had wage increases, they're in trouble. But, I struggle to see how much American do you know what it takes to have American Eagle Outfitters to actually do well? I mean, that is like, get me Kalshi.
Yeah, we'll throw in Macy's there with a surprise profit. Strongest quarter in 13 quarters. Although their holiday guide, Jim, may be leaving some a little bit cold.
Yeah, I know Tony, who's, by the way, Tony Spring, is remarkable. And Bloomingdale's +9, which is really amazing. By the way, Aerie is +11 on American.
Yeah, Wall Street was looking for 3.
Yeah, so I look at Macy's, and yes, it's coming down. And then, yes, you have to buy it. Because he's fundamentally doing this reimagined 125 stores, and they're doing terrific. Remember, he's from Bloomie's.
He has a reputation for being exact, having the right merchandise, and beautiful, wondrous stores, and he is continuing that. Hallelujah, he's doing great. The stock will come down. Not only CrowdStrike, you're going right to what else will come down. That's run. But in both cases, you have to buy. CrowdStrike 1 month from now will be up substantially from where it is. Macy's, I think, is just going to plug away.
We have had a bunch of consumer names present this week at these conferences. Yesterday, Jim, it was the CFO of Procter, who argued that the volatility, the consumer backdrop here in the States, quote, probably the most volatile we've seen in a long time. And the shares got taken out yesterday.
And we loaded the boat up for the club.
You did?
Oh, God, yes. You're kidding. Procter, I was surprised that he had to announce how bad it was, since everybody knew how bad it was, which is why the stock has been stinking the joint up for a long time. This is the generational, that's the new word you're using. The generational opportunity. Why? Because Procter yields 3%. It's really the best company in the industry. It pulled Kimberly down. Remember, J&J, it's one of Kenvue, and I was going to say Kenvue was the best, but you got the Health and Human Services. He doesn't seem to care for it. Although they seem to, by the way, Surgeon General likes the Monsanto, the bear. You know, I always thought that Roundup was a suspect product if you wanted to brush your teeth with it or use it in a farm.
Yeah.
But this Procter is your chance. This is your chance. Because now he's totally de-risked it, get a new CEO, start the year at a low, and look out. It's going to be great. Procter's the behemoth in the industry. They're terrific. We knew that October and November were bad. That's when you buy. Because Procter has a history of not staying bad. And go back to a CEO 2 CEOs ago where you thought that Procter was finished. And it's Lazarus. They should take the symbol, but I think LZ's taken by something that doesn't do well.
Jim, you mentioned ADP, minus 32K. We were looking for plus 40.
Yeah.
Small business, Jim, down 74K. These are firms with between 20 employees and about 50 employees. That's the worst month since October 2020. It's down 6 or 7 months. I want you to tell people what you think small businesses are going through right now.
I think small businesses are the ones that are really scared because they can't handle the rules changes. They're trying to figure out who they don't have to work because they want to get their profit margins up. But there's not a lot of formation right now. I think the president has to worry about this because in all the towns that they build these plants, there should be small business formation. Paycheck stock is down. That's been disappointing. This is the president's got to have the next initiative. He's got to help small business. Very different from what I think he expected.
Yeah, we'll watch it. Labor's a very big story today. When we come back, the Treasury Secretariat deal book with Andrew Ross Sorkin. We're going to bring that to you momentarily. Watch the futures here, which did go into the red right after we crossed the top of the hour. Stay with us.
back to Squawk on the Street. Rick Santelli here, live once again at CME HQ. More breaking news of the morning. Let's think manufacturing and production here. Industrial production for the month of September expected up 1/10. Actually delivers up exactly 1/10. And on the utilization rates, 75.9. 75.9. This is a big miss. We're expecting a number closer to 77. These numbers have been trending weak. 75.9 would be the weakest, well, the second weakest of the year outside of January when it was 75.6. In January, it was the weakest since November of 24 at 75.2, and that was the weakest going all the way back to 21. So utilization rates have been running on the light side, no exception here. It's pretty hard to get excited on manufacturing indeed. And maybe down the road, as onshoring becomes more prevalent, these numbers may pick up a bit. There's also a revision to last month that weakens utilization even further from 77.4 to exactly the number we have this September at 75.9. Carl, back to you.
All right, busy morning, Rick. Thank you, Rick Santelli. As we went to break a moment ago, we were wondering what might have broken the futures, Jim. It might be this piece out of the information arguing that Microsoft has lowered some sales quotas on AI software.
Yeah, I got to see more about this. I mean, it's the type of thing where we're seeing companies that are doing better in AI and worse in AI. And I think that Microsoft has a terrific AI business. I'd like to speak to Satya Nadella or Amy Hood before I draw conclusions here, because every channel check that I have, and the ones I do are really kind of people who are that come, things are pretty good. And because the PC refresh is so good, it's been a boon to Windows, but obviously everyone just cares about AI. This is one where I obviously got to watch, because you notice that Microsoft stock has been underperforming.
Yeah.
But Microsoft's too big a company for me to say this without having speaking to myself.
Yeah, it is one report. They're citing 2 salespeople in the Azure cloud unit. They do point out it doesn't happen very often where Microsoft would lower a quota.
No, it's very significant. I don't want to be the person who says, who gets the call from Microsoft saying, did you bother to check with us? Because it is very serious what they're saying, and be very, very big. And I want to be sure I know my facts before I say Microsoft's screwing up. Right. That's what you don't do. I mean, you can look at this report, you can mention the report, but then you have to get Microsoft's side, not from 2 salespeople. Because Microsoft's a pretty great company. I want to know this for sure before I say. I mean, this is like, let's say Manna came out and said, when you came out that Mark Zuckerberg says, all right, we're not doing that. I mean, you crushed the stock, and I wouldn't have spoken to Mark. I can't do that.
Well, we're going to hear from, for example, Dario Modi of Anthropic on DealBook later on today.
Yes,
Jensen Huang's going to Washington to talk to some lawmakers. You had AWS on last night.
Business is so strong there, it's almost impossible for them to meet the demand. They have these new products. Talking about 80% of the companies are still moving to the cloud. The new tools that they gave make it so that it's much easier to move when you get there. It's terrific for AI. So one of the reasons why I'm a little circumspect to Microsoft was that you have Amazon Web Services, and I'd say it's unqualified vote. And this reInvent conference was incredible. I'm glad that I got to be able to speak to the CEO, because business is so strong that it's hard for me to believe that Microsoft business is
right. We've been through the Gemini Google game. Of course, now with the reInvent presentation yesterday, conversation about incremental competition, piling on NVIDIA, where one man's margin is another man's opportunity.
Right, and look, they always are so quick to be able to say to me, I'm a big believer in NVIDIA. Like, look, we're still using a ton of NVIDIA, so I don't know if we have something.
Well, we mentioned DealBook. Andrew is working today in New York City right now with the Treasury Secretary. Let's take a listen.
It's the biggest shift in the United States and really the global economy, and it's a philosophical choice and a practical shift. And I want to understand your thinking, and I'll tell you why I want to understand your thinking about this, because when I went back and was really looking at sort of how your own thinking has evolved, it clearly is different today than it was before you were the Treasury Secretary. So back in 2024, this is long before Trump had won. By the way, you had predicted he was going to win. And this is long before you were the Treasury Secretary. You wrote an investor letter while running Keybridge. And you wrote the following: one of your differentiated views that we have is that Trump will pursue a weak dollar policy rather than implementing tariffs. Tariffs are inflationary, you said, and would strengthen the dollar, hardly a good starting point for a U.S. industrial renaissance. And I read that and I thought to myself, help us just understand your own thinking on this issue.
Well, and Andrew, that I think a big part of my investment career, and to the extent I was successful, was being able to evolve my thinking. And I believe that what we've seen, and I have to say that President Trump has been right on this, that he told me early on, he said, Scott, the United States is like a department store. Everyone wants to shop here, and only the United States can do what we're about to do. And I watched as the leader, or nation after nation, trade negotiator after trade negotiator, leader after leader, President Trump has normalized the idea of a 15 to 20% tariff. And I think what goes, everyone likes the hysteria of prices and this and that, but what has gone unnoticed is USTR Jameson Greer, with President Trump's support, has done an incredible job of dropping the non-tariff trade barriers and the tariffs from other countries. So when you see this deal and you say, well, Indonesia has agreed to, and by the way, Indonesia is getting a little recalcitrant here, but a good actor, Malaysia, has agreed to do this. They might have dropped 8,000 lines of tariffs. So U.S. business, it's actually flowing much better.
Would you say you're surprised then? If that's true, would you say, given where you were 2 years ago and where you are now on this issue, would you say, I got it wrong, I missed something?
I think, look, again, I've had an open mind, and that I've evolved on this, and that the president's been right. And the president has I've said it publicly, the president has a much higher risk appetite than I do. And my evolution went to, well, I think we should do smaller incremental tariffs. And the president went in with a maximalist position, and that is actually what gave us the leverage in the negotiations by saying, okay, you've got a 35% tariff. When Japan agrees to a 15% tariff, it's domo arigato. It's thank you.
Why has there been such a reticence for the administration to say, you know what? We're going after these tariffs. We think they're bringing in a lot of revenue. We think it's good for labor. And you know what? It might have an inflationary impact, and we're cool with that.
No, and first of all, I think, in your mind, what's inflation?
Well, I think anytime you see prices move up beyond the sort of standard, if you will, I don't know what the standard you think should be, but anytime that there's a period of time where there are artificial things happening that are effectively pressing prices up.
Well, you could get a one-time price adjustment. Inflation is a generalized price and persistent price increase. So there's a big difference. That this hasn't set off some inflationary mindset. And the other thing too that I missed, but I saw early on in the negotiations, is that China is a very different economic animal. And they are willing to subsidize labor, subsidize production, subsidize capital. And because of that, they depend on this export economy. And I think if you were to look, the Chinese have consistently, on the Chinese portion of the imports, the Chinese have consistently cut prices. Consistently cut prices.
But you don't, look, I mean, this is...
I don't believe tariffs are a tax, but I was surprised. I had a couple of the Democrats to step into the bear trap. They said, well, tariffs are a tax. They said, okay, so you believe tariffs are a tax? Yes. You believe tariffs are inflationary? Yes.
So you believe taxes are inflationary. So join me and cut taxes, and that will be disinflationary. We could give.
But that's an acknowledgement that to some degree it's a tax.
No, but I'm just parroting what they say. We could give a 5% tax. We can reduce according to that logic.
Pretty provocative discussion there between the Treasury Secretary and Andrew regarding tariffs, Jim, whether they're a tax, whether they suppress growth.
Right. I take Paul's skills too. If Justice Roberts says no with Gorsuch, then you know what, we're all going to get an agreement.
Yeah, we're all waiting on that decision. Yeah. We'll take a break here, get ready for the opening bell. Don't go away. Let's squeeze in a bad dash before the bell here about a minute, Jim.
One of the companies that was an all-time high this year is Apple. Global expanding, but also earnings going up. IDC, I really respect it. In China, Apple's largest market, massive demand for iPhone 17 has been significantly accelerated. Apple's performance ranked first in October, November. About these sales. I mean, this thing is a juggernaut. We're talking about 6% growth year to year. Go back to what people were saying about it. I went names of people who were saying this was going to be a bad cycle. And why? Because they owe us money.
Yeah, we're talking record sales due to the 17 and 26, and obviously record highs from yesterday. Yeah. Let's get the opening call on the CBC real-time exchange. The big board is Franklin Templeton, highlighting the expansion of backwards lead by DTS Suite. It has that water infrastructure company, Deep Blue. And Jim, we'll see if this little scare pre-market holds to the session.
We went down not just to Microsoft. Microsoft's powerful, but not that powerful. And by the way, it's zero sum. And Microsoft is doing well. You know, Amazon Web Services, I got that yesterday. They're doing incredibly well. You know, Gemini's doing amazing well. Maybe it's this week. as Marvell would tell you, the growth of the data center, the growth of the demand is extraordinary. And just to give people what people are saying about Marvell, how a couple years ago, $5, the average multiple on semiconductors is 30. This stock is going to 150, if you believe that. So on the one hand, you have some negative stories floating about Microsoft.
Yeah.
On the other hand, they're the only ones. I mean, I don't get it. They're popular. I mean, OpenAI, I continue to say, is something we have to watch.
Yes.
They need money so badly. And Neil Ferguson, the best historian about war ever, has said that don't forget that the country that has the bond market that's the deepest wins. I think the companies that have the bond market that's the deepest are going to win. And OpenAI is not one, which is why I found the Wells Fargo piece about Oracle, Cusco. I'm going to put it in the Cusco category.
Yeah, so they're definitely, it's an initiation, but they're coming to the conversation relatively late.
Right.
A lot's been worked on.
Yeah, they're going to emerge as an AI leader. I mean, look, they have the balance sheet to do it. I've never counted out Larry Ellison, and that's always been a fool's art.
Well, and we're going to learn a lot more this week.
Yes. But I will say that right now, they're so linked to OpenAI that OpenAI better start having their pre-new product out next week, and it better leapfrog Gemini to the point that we sit there and we say, what were we thinking using this Gemini?
Yeah, that's the hard part of this market is the constant leapfrog. If you look at some of the data, the download data, you can see Gemini encroaching in their share over the last few months.
I think what people, someone was on this morning talking about why Gemini was good. And the issue for Gemini is that you suggest something, like you go in and you say, look, I think Marvell's doing really well with Amazon Web Services. Could you tell me how? Because they're not mentioning Amazon Web Services in the call. And it tells you exactly, and then says, would you like to know how Broadcom is doing with Amazon Web Services? Yes. I mean, it's prompting you questions that you should know before you come out here or make a trade. I've not seen that from ChatGPT, even though ChatGPT is excellent at summarizing. To take it to the next level, we got to
Yeah. Other big story today is security, and I wonder what you think of CrowdStrike.
So CrowdStrike, we looked it up, and it's a big position for the chart, which I said has been for ages. CrowdStrike always went down on the day reports. I mean, it's clockwork. And then 3 months later, you say, why didn't I buy it? And I think I stand by that. The numbers were spectacular. The way you analyze that one, and by the way, they got the AWS contract. The way you analyze that one is totally by annual recurring revenue, which was up gigantically. And people who are selling it tend to be people, what is that Steve Miller song?
Which one, the Joker?
Yeah, these people, speaking of the pompous many.
Yes, the pompous self-love.
Right.
Which he later said he has no idea what it meant.
I know, they did get tickets to the Hall of Fame, because I thought it was disgusting for his family. But it's absolute that the annual recurring revenue is so much better than anyone's looking here. So check your crowd bulletin and realize that you get one more chance to be in George Church's amazing.
Yeah, they do guide above for fiscal Q4 110 versus 108, and we'll see him tonight.
I mean, George is a realist. I'm going to ask him about the possibility of the head and shoulders pattern developing. Because Dave's not here today, I know he can't pass it. And actually, it's not. It's a straight up.
Head and shoulders on crowd or on the net?
No, I'm just saying that why do people sell stocks? They tend not to know what CrowdStrike does. They don't know that it's got the best AI product. They don't know it's the preferred for the hyperscalers. Instead, they see that it's going down and they pile on. And that's what happens all the time with CrowdStrike. One of the greatest performing stocks in the zero. And it's up 44%. I can see two big rocks. They have to Palo Alto. They catch reported an amazing quarter. And these are Rodney Dangerfield stocks. They go down. And then they come back after you sold. So please, understand, CrowdStrike is the opposite of IREN and Nebius. It's the opposite of you. How many years they got there?
Yes.
It's the opposite. It's a real company where today George Church will sell millions of dollars worth of software. I spent a lot of time with George, and he's selling. And he's always selling, and he's always winning. He cares more about hating to lose than he cares about wanting to win. I think that's a sign.
Interesting driver's mentality. Yes. Dow going green here after obviously that brief air pocket pre-market.
It's just painful. I don't want people to lose money.
It's the tape. Only two sectors are red, and that would of course be comm services and IT. Although consumer discretionary a little bit close to the flat line.
Right, and that is is a tough group, but retail itself has been amazing. Opportunity here, Boeing down. I said that Boeing will be for profit taking, and then people will gravitate to Boeing because it was de-risked yesterday by the CFO, and now I think that Kelly Ortberg is going to come to town and really tell a pretty good story. So you're getting a chance to get into Boeing, which I think it continues to win business, and no one even talks about it because people feel they can't make complaints. They'll be making complaints. Take a long-term view.
Well, I mean, in light of the Airbus news and some of the fuselage issues, the software, solar flare stuff, that duopoly defense continues to work.
I think there's a little narrative change. And the president, by the way, is Boeing's, I think he's the chief merchandise officer, the president.
Well, you sell one plane, you carry a lot of water on the train.
If I had a bad deficit with this country, I would call the president, because I think he'd take the order, and I'd say, do you have any Dreamliners? Because they do have Dreamliners. I buy some of that, I would buy, they got flying cars, people don't know about it. They're the only one that the FAA really likes. But we got the Joby and the Archer. The FAA is not so keen on, from what I can tell. But they like that bonus flying cars as an option.
There's actually, Uber's made a little bit of news today, a little bit of expansion with some partners. I think Dara is going to go to Asia for the first time in Taiwan.
What a stop. It's a terrific stop. That and DoorDash, they both kind of took, both tempered expectations to be able to get you in again. By Uber, by DoorDash, they're real winners. I saw David Risher yesterday. I didn't get to talk to him, which I felt bad about because he's such a terrific guy. But he's a total winner too. And that stock is going to go higher. These are the duopoly's done. I mean, we're not going to have like a new company come in.
Yeah. The back and forth between Waymo and Tesla. Actually, Tesla's hired today Politico with this piece on a potential executive order in the coming year about robotics, as the administration tries to look further down the runway on AI.
Doing some work on it yesterday. I got to tell you that if you think this is a car company, I would rather even think it's a battery company than a car company. They are making a move in robotics because they can. Look, Musk is aware that the Chinese are brilliant. Of course, in America, we think that we're second rate. But that's probably because of all the Americans that are moving to China, right? The immigration. There isn't. All the Americans want to go to the Chinese college. Oh, no, come here. We're so second. We have such a second-rate mentality versus China. These kids from Hong Kong doesn't have that.
Well, the journal today takes a crack at that, and they basically argue that China is ascendant because we decided to focus more on the Western Hemisphere, and the Chinese realize that.
I mean, you're a command economy. You can get away with that for so long. And remember when East Germany used to win the Olympics? I think that Tesla is a robotics company and a self-driving company. And if you want to go against Musk, good luck. I think he hated the people who were against his pay package. Musk paid more well than anyway. He does have a lot of guys have two-track stock and they fit and they suck. That guy's good, and I think the robotics from what you see from the video is our story, but more importantly, when you see what the business are doing with NVIDIA, they understand what it takes. You need a brain, and the brain's located in various cities. We have guys.
What it does is it goes on and off, okay, and then it leaves a little buzz in it. Okay, running all night. It's not on now. It's doing that small chip.
Billions, and the chips don't go out faster than people think. And we have to stop the narrative which says, you know what, it's too expensive. If you watch Chew this morning, the CEO of NiSource, which everybody should, it talked about Amazon came down, build a data center, and lowered electricity rates. Our narrative is that they raised the rates. We have to bust that narrative. It's very true that Pacific Gas and the PG&E says it lowers rates. These companies are doing a lot of things that are good, and people are thinking that they're not enough, that they don't know what they're doing, and they're hurting all of us. And I just think that's just anti-capitalism.
Anti-capitalism. I mean, misallocation of
Was it making that noise?
in capitalist societies. It just
Yeah,
does.
kind of a boom sound without blowing anything.
Yeah, it's defrosted basically.
And then what's good?
Yeah. So it'll be, since it's a heat pump, you're on run backwards basically, and it'll ice up on the outside because it's cold weather, so it'll defrost and then it'll go back to working.
Okay.
So
Is that why that weird light's on there or something?
that's probably a filter light or something. Filter setting.
So that's normal.
No.
Yeah. The other night, it seemed like it was on all night long.
the fan was running.
Not the fan, but
Defrost?
Yeah.
Yeah, whenever it thinks however long it needs to defrost, basically. So,
I guess you can only look at it then.
yeah, you're good. It kind of makes you nervous, but yeah.
Well, when I saw that,
Glenn Chris, by the way, did make
that
some good
sign, I
comments.
figured.
Yeah, that little caution sign.
Yeah.
Yeah, it's a filter change, so it's a setting on the stat.
Yeah, I lived here about eight years, and they finally had to replace it. The air conditioner went out on me during the hottest time of the year. And it took them like 2 weeks to finally get one ordered right in here.
Yeah, the heat pump ones are a little different.
Last time I think you were out here last time.
Yeah, I had to work on the thermostat last time,
Yeah,
so.
that was all new to you, I think, at that time.
Oh yeah, it still is. So.
That's a good deal.
As long as we get her fixed, but yeah. Thank you, sir.
Let her know, I guess you'll let her know.
Okay, yeah, I'll let her know.
Microsoft, and everyone's really adding to that story. I think Colette told an amazing story. I think your movement is going to be a huge leapfrog. I know that if you read through the things that Matt Murphy was saying, CEO of Marvell, you feel really good about the next level of NVIDIA and what it's going to do. Although it burns hot, you need less of what Marvell's offering maybe to offset that. But I'm not too worried about NVIDIA. Do we need China? Remember, he came on our show, and he's not happy about this.
Oh boy, we had a pullback right first thing this morning. What happened? Shit, we missed a good trade.
Well, no, I haven't. As Larry would say, who bought China no matter what. Yes, they would get but the PLA.
I'm here.
One of the things that really gets us.
I'm here.
Do you really think the Chinese military is going to use our chips? I mean, they're not that dumb. So I think what's going to happen is we want the engineers in China who are doing commercial work to say, you know what, I want to do code on NVIDIA, and then we can tell them, and they are hostage, and that's what people should recognize. He's not a globalist, and he's not a profiteer. He recognizes that he who gets this code written on his the most wins, which is one of the reasons why people are so worried about Amazon Web Services. They were thinking that most of the code is being written away, maybe with Google. I think that yesterday...
So we got a rising wedge.
Back to Amazon Web Services. Growth of Amazon Web Services could accelerate. I think Jassy, who...
Shut up. I'm talking, Jim Cramer. This is my show, not yours. We're getting ready to squeeze. This could be a trading opportunity. Tesla, new high. AMD at the bottom. Amazon at the bottom. NVIDIA at the bottom. We're at the VWAP on the /ES, so that's got to break before I jump in the calls. We have a rising wedge on the /E. It's getting ready to squeeze. Prepare ye in the name of the Lord. Let me see how much they are here. They could be cheap. I like cheap. They're not. The 6850s for the SPXs. Up. Damn it. So we pulled back. We broke out of the wedge. That means we could see a double bottom or this. These lined up pretty good right here. That was my low support on the /ES. Oh, this is going to get interesting. I got a P2, man. I've had a pretty busy morning. This 6850s, and the SPY would be the 682s for the SPY. And we're at the VWAP on the SPY. And we got to break to 63. Do you understand? $682s at 115. Strike is 682 at 115. And we're going to see if we break here. Damn, hot damn! This is how we do it. Trump says all they do is bitch. Come on. Let's go. So we hit support. Now this is what I already had these charted up this morning. We went a little bit below it. So my low support, 680.46. And these are my two resistance boxes. And that's a double bottom from yesterday, right there into close. Let me see if that's yesterday's low. No, we can go down more. 677.78, 82. And if we don't hold yesterday's low, pre-market low, and that's right there, 678.89. Not looking so hot right now. Might add a few here. That was today's support right there at 680.37. So let's put a little field around that. Right there. Yeah, that held. That's today's tweezer bottom right there. And that looks pretty good. We've got wick, 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 body, body, wick, body, body,
Live at the Deal Book Summit. U.S. Treasury Bessett says growth in private credit is due to tight regulation of banking system. Regulatory charges will unlock $2.5 trillion. Which is a lot of money. 97 cents. .97. Whoop, 98. Netflix looks like it's at a support. I'd watch Netflix and AVGO. I don't know. I might still be overbought. God darn it. This ain't working out. Let's go. Nope. Come on, baby. There we go. I'm almost green now. This was my response last night before I hit the sack. Come on, Jimmy. If this don't work out here, it should break out soon, but if it doesn't, I'm going to get out of it even. Average is 106. We're even. I went in on too much on my first entry, so I can't double down like I usually do. Hello, Parge. We've got some heavier wicks on the bottom here. The only sign we're squeezing again. We got to break to 63 before we amount. And then we got the top of the orb. I'll probably get out clean if we hit the orb. But if we break the 63 and pull back and gain respect, then it might shoot on up and hit the 200. But right now, I'm debating if I want to get out and just take a small loss and give it a little bit more time. This is a long leg doji's a little bullish with a tweezer bottom. So it's like a head and shoulders right there. So my heater, I guess, has a little defrost thing on it. It works on its own merit without shooting out air. And I was, what the hell's that noise? Come on, let's break the 63. There we go. Finally, God. This sounds like a pretty good little shit up. See, you pay attention to these candles, and when that wick's bigger on the bottom side, that's kind of a sign, and this is a good sign. This is called a long leg doji. Now we're up here to the orb, so you know it's either an idea to get out of the trade, which I'm up $180 right now. Oh, $200. And I got a little over $2,000 in this trade. But if we, so I mean that's an exit idea when you get up here and do the double top off the wicks. That's called an orb. I'll share the link to the people on YouTube. If you have TOS, you can download this as a gift, a Christmas gift. But that's an exit idea. We're at 116. So it could go ahead and pull back here or break out. We've sat around long enough to where probably we have an inverse head and shoulders. There's 124. Yeah. Oh, Merry Christmas. Now you're getting up here, 132, you want to take your profit, especially if you're up as much as I am right now. And you're hitting the 200 EMA, 136. Now you can go ahead and break out, but I mean, this another resistance line right here. What do you think about that, guys? And gals, chicks. 145. Now, I'm not going to fuck around with this. It was too much work. 160. Yeah, I'm out. I'm out. A plus, please. A plus, please. A plus, please. A plus, please. Anybody got the courage to give me an A plus? I didn't vote in the polls. A plus, a little A, what the hell? Parge likes my YouTube. Not too many people will talk to you about trade like I do. They don't take the time out and learn and watch repetitively how the candles react to breakouts and pullbacks. But we had a couple good scenarios in here. This one is one of them. And then this tweezer bottom here, respecting that body of that candle. And then once we broke out of that big candle, all these lower wicks means a lot. And then you had the inverted hammer and the respecting of the 9. So yeah. Randy, what'd you think about that? Livid Goose is beside himself. He doesn't know what to think. So I just can't, how does he do it? How does he do it? Ain't that right, Livid? There ought to be a song about how does he do it. Because I mean, I got a full bladder. I haven't took off my shoes yet. I'm freaking low on coffee. I got 1 cup left. The store didn't have any of my coffee in. I'm tempted to order it online, just a big old 5-pound bag, and hand out some presents. I think this year I'm just going to hand out coffee. And I'm dealing with an issue. One thing I can't stand is somebody do a job and they don't get paid for it. I mean, I do this for free. There's one already. Well, I think I'm going to have to play it while I go and take a leak.
Ready.
Oh wow, oh wow.
How's he do it?
Washboardjim trades stocks at dawn. He's got his eye on the charts till the night is gone. Patterns dance like a wild old song. Breakouts rip and dips of gold. He's got the secrets the wise ones hold. 3 black holes in the morning light. Bull flags waving like they're gonna take flight. Washboardjim, yeah, he knew it. Alright, how does he do it? How does he do it? Moving averages, they paint the tail. Up and down like a shipping gale. Catching the wind, he sets the sail. Green candles climb, the bears retreat. Jim's got rhythm, the markets beat. 3 black holes in the morning light. Bull flags waving like they're gonna take flight. Washboardjim, yeah, he knew it. Alright, how does he do it? How does he do it?
How does he do it? Plus the double bottom. Plus the day low. I pointed that out too. See, we almost came back and touched that bottom right there on that body of that candle. So there's a couple good reasons. Use the bodies. The bodies are the most important. The wicks is a direction. The bodies are the confirmation. And look at that wick. Hit the confirmation for no hesitation, without regulation, without a citation, with no confrontation. Now we're respecting the 63. This was the major pivot point area. Resistance, 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 resistance. Support, support, support. So this is still bullish until you break below it. And then you got an inverse head and shoulders for confirmation for my my confirmation for retaliation. As long as you stay above that right shoulder, you got the left shoulder, and right shoulder. And I'm going to go get my water going and take off my shoes and take a pee so I can I mean, it's not easy when you got a full bladder. You got to get rid of all that matter. Marvell's up $6. Now, if I was to take the trade, so again, don't let my moving averages shake you. I mean, you had 3 minutes to make a decision to get out of this trade. Now you have a tweezer top up here, which is an idea to get out also. And let me see where these suckers are. SPX. God. That would have been a good trade. They're back at 96 cents. I mean, that's beautiful. That's a grand right there for this morning already on my first trade. I made 50%. I'm done. I mean, I'm $1,000. I'm within minutes. Whew. And there's Rob making it both ways. If it wasn't for me, Rob would not be in the place he is today. I'm so happy for you, Rob. Oh God, she's on here, Sarah, the snooty bitch. Nvidia.
the retailers are really holding up. And you said that obviously it's been a bit of a surprise as to how resilient the consumer has been. But is this the point? Is that because we were at peak pessimism earlier this year, that the expectations, you could say, were just that low, and that now we've seen this upside surprise? Does it start to get a little bit more demanding next year?
We hope so, right? Like, along with brands, we hope so. I do think that there was just uncertainty. I think this year was filled with nobody really knew what was going to happen in the macro climate of, economics and spending and tariffs. So I think it is a surprise, I think, for a lot of us, but we've been seeing the trend. We've been doing consumer reports this whole year.
Okay, I'll be right back.
We started to see an increase in consumer confidence that, okay, they were going to spend. They were going to spend at the levels they spent last year.
68.50s did pretty
They were
good.
going to spend more than they spent last year. And so we've been seeing that for months. And so this to me is just really, I think, that confidence level coming in.
They're up a couple
and I do
$100
think we'll
bucks.
see that continue to uptick into 2026 as we see these really strong numbers for Q4.
Yeah, fascinating. Yeah, thank you so much for getting us across there. It looks like a good setup ahead of the holiday season for Christmas now as well. That is Kerry McGee there, CMO Attentive.
When you have a small account,
Coming up, we will get a closer look at the big picture with the team from Charles.
when you have a small account, you don't want to. I know traders that have thrown everything in it, and they've done. Some of them have done pretty good. They go, but they have a source to put their money back in, or. But if you have a small account, you just want to go little, take baby footsteps. Let's say you start off with $2,000. That's what I suggest. Don't start trading until you get $2,000 in the bank. And then invest 500 at a time. Have that be your limit. Or even 250. And just gradually build it up. And after a couple months, one trade a day, if you got the account that clears the money that evening, and you come back and do the same thing over every day. Because if you don't have an account, you got to have 20 grand in the bank, or 25 before you can day trade. But that's why I use Tastyworks, because I use a small account. And again, at the first of the year, I'll withdraw a lot of money out of this one and start with a smaller account. I've done it every year. Now you're flagging out in a symmetrical flag. I wonder why that thing's stuck like that. Now you're going to the 1, 2, 3 at the bottom. No, that's not where I want it. Right there. You got your 1, 2, 3. Now if this candle closes on that trend line, that's your 1, 2, 3 setup. And the SPX is at 440, the 6580s. And it's at the VWAP. Your /ES at the 63. I put a $5 bill in. What do I think? I think we should. $1,000 would be, I don't think I've ever had one with $1,000. I always started with 2. Now, if I was trading this in a small account, I'd definitely use stops. This trade right here. Now I'm up $100. I got 2 of these contracts, so I'm up 200. Do you understand? $5.50. So I mean, now we want to respect the VWAP and the 9. $5.60. So we got a triple top. What do you do when you see a triple top? You just make a business decision. So you got 1, 2 bits, 3B with a big old long hammer. Look at that. On the SPX. Then you come up to a triple top and do what? Can anybody answer the question? What do you do? Jim, I was sitting here watching you do that trade with that big hammer down there on the 3rd dip, and how you was over here looking at the /ES. Now, I'm from the Ozarks down here in Silver Dollar City, where Beverly Hillbillies call home. And I was sitting here talking to Elizabeth. She's my cousin. We're married. And I seen that it bounced off the VWAP, the /ES. And I was thinking to myself, what would Jim do? He'd scale out. So I took my life savings of $1,000 and bought 2 contracts. I sold one of them there at $5.60. I made $120 on that trade. Now I'm thinking about selling the other one here, just because I need to go out and buy me some pig's feet and some beans and some scrambled eggs, and have some pig brains and scrambled eggs. You ever had that, Jim? Yeah, when I was younger, I used to eat pig brains and scrambled eggs. My grandma used to make it for me. And I'd take my food outside and dump it into the outhouse. And Grandma caught me one day and pulled out the switch on a switch tree and whipped me. Told me that food don't come easy, and the chickens lay the eggs so we could have something to eat. And they slaughtered the pig and kept the pig brains, and we'd mix it all up and have breakfast in the morning. So we're getting ready to squeeze again. It's either I make a business decision and I go in the kitchen and have me some pig brains and scrambled eggs. Boom, see what happens? Triple top. That was the fair warning to get out of this trade. You need that fat. Eating pig brains makes you smart. Anybody in here had pig brains before? Livid goose, you ever ate them? Chris, you ever had them? Oh, come on, God. Bunch of degenerates. You wouldn't know what was good if it slapped you in the face. So we have 3 black crows right here. Uh-oh. Now, if this market wants to behave, we'll bounce off to 63. Okay, we're back at 470. If we hold here, we're still bullish. Uh-oh. I didn't take it because I got to pee. Eating all them pig brains this morning made me a little bit urinal. Oh, damn. Girl. There's Marley.
Downside. Year to date, they're down 9% because Wall Street isn't really optimistic about the potential future of these SaaS, these software companies, and there's a very cautious narrative surrounding them and what the AI trade might do to companies like Salesforce. Now, they did come out in October at their Dreamforce conference and say that their AI could help grow their overall revenues by 10% annually to $60 billion by 2030. Investors did really like that, but they will be keeping a close eye on any of their remaining performance obligations, their near-term backlog. Those are going to be important numbers here. But the pessimism has been hitting Salesforce all year. I mean, it has made it the second worst performer on the Dow Jones and puts it among the 25 worst performers in the S&P 500. So it has been a very tough year of performance for them, despite last quarter having a good report card. That sell-off has taken their market valuation to the lowest level that it's seen since it went public in 2004. So the stock currently trades right now less than 19 times its estimated earnings over the next 12 months. It's far below its 10-year average of 47 times that. So I was starting to see some notes that lower price tag, that the cheapest it's been since it went public, combined with some of that positive forecasting from analysts saying that it is a potentially positive setup for their earnings today. But still a lot of caution around Salesforce. There's a lot of concern that any of these companies, these AI, will make traditional software products obsolete. And obviously that's what Salesforce's bread and butter is. So they did raise their prices, top-tier plans, starting in August. That will be impacted in this quarter they're about to report. So expectations are that that should be up at least about 9%. I think the street whispering for double-digit expectations there. But with the stock having never been cheaper, it's a very interesting setup in terms of a price play here, just because, you know, we've seen a lot of people jump in this buy the dip scenario, and as far as Salesforce, the dip's never been lower.
Boom!
Yeah, it's interesting, and you can understand some of the caution, can't you, Molly? Just because, as you say, I mean, software has been struggling this year, but, you know, we have heard from a number of sort of companies' names in this space this earnings season, and, you know, there have been some mixed reports, but is there anything that you can sort of take away from what we've heard from others in this space that, you know, might give us some clues, some hints as to, you know, what they're likely to say here, you know, how they might actually perform, how they might actually be looking to sort of mitigate some of the challenges we're seeing here, and anything else that the sell-side analyst community is saying, because I did see a couple of days ago, obviously, we were reporting about how, you know, Oppenheimer had lowered the price target here ahead of earnings. I'm just wondering if there's been any other
there you go
regarding this sort of pre-report card.
There has been some. We heard from Deutsche Bank. They called out with.
There you go. 3 white soldiers off the 63 with, what do you call that? You know what kind of candle that is? Huh? You know what kind of candle that is? You know what that's bounced off of? The /ES. That's VWAP. So now they are at $8, $8.30. And we hit my little bona fide resistance here that I had on SPX from yesterday. There's a head and shoulders. Head and right shoulder, left shoulder, right shoulder, right shoulder, right shoulder, right shoulder, right shoulder, and right shoulder. You see what I'm saying? Do 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 do. Do 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 do. We're at the right shoulder. Yes, we are. We're at the right shoulder, right shoulder. Do 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 do. History repeats itself. Left shoulder. Now this thing's back down to $6. Right shoulder. Right shoulder. Right shoulder. Right shoulder. Right shoulder. Right shoulder. RIGHTSHOULDER. Damn it. I gotta get me a new wick. I mean a new mic. I gotta get a new mouse. And I gotta hit the... I think I'll get a new mouse for Christmas. Dun 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 dun. Dun 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 dun. Boom, 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 boom. That was a two-headed snake. So here you got another head. Well, you got the left shoulder, and you broke out. So I think that could be support right in here. If it pulls back, that or the yesterday's close right there on the SPX. So that would probably be an ideal place if it doesn't hold here. Do you understand? How to deal with a cocky woman. I think that's going to be my next book. How to deal with a cocky woman. PLTR is up $2. Today's downers. I don't see anything here that on today's Debbie Downers. Today's gainers, IRBT up 41%, CAPR up 300%, CAPR, AEO up 13%, AMD on the watch list looking good. I caught the bottom on that baby. Oh, it's still down? No, it ain't. Look at that. Can't say I didn't tell you. PLTR double top. Martin Shkreli warns Elizabeth Warren and Zoran Mandani policies would make U.S. return. What? I don't give a shit what this guy says. Keep your politics out of it. PLTR, the most dangerous corporation in America. What? Says Clinton era official. They got some dirt on her. What is this? Michael Burry reveals why he closed SCION. Probably because he was getting hurt. PLTR new high. What the fuck's wrong with these liberals? Economist Robert Rich issues a stark warning to PLTR Technologies, calling the Silicon Valley giant a growing threat to civil liberties. It's because they can get probably the scum on them. Oop. I don't know what to say about Democrats. Robert Rich. New high. Oh. This is how my charts used to look 5 years ago. This is how much times have changed. Look at all them lines. There's just too many lines on there. YouTubers. You get too many lines on there. This was when I was a horizontal trader, and I just started learning vertical and chart patterns. That's called an ascending triangle right there. And this is a bear flag. Bear flag, yeah. I mean, that was on that old chart up there that I just put up. What one are you in? What one are you in? Spy? God, you must have got in late. Are you chasing again? We could come back and hit the 200. You're flagging out. This is called a pennant flag right here. This could go either way. I'd see if it doesn't hold this double bottom, but then that'll turn into a descending flag. It has to break 682.97. See if it breaks 682.97. Or you can get out even. It's getting that time of day. I want you to pay attention to the clock too, because the scalpers leave in about 7 minutes if they haven't stopped. This is when I start taking my lunch breaks. I'm so accustomed to the market slowing down and becoming a day trade right at 11 o'clock Eastern time, 10:30 to 11 o'clock. That's when you should be thinking a different strategy. Scalping's over at 10:30 to 11 Eastern time. That's when you got to start setting up, looking for your setups. I'm going to make me some coffee and have lunch. We'll see if it holds right here. If not, Oh, gosh.
Out of coffee.
Okay, now I want you to pay attention to the 63 EMA. This is a major support level right here. Then you got a triple top coming up. So if it doesn't hold that, it can drop to the VWAP. And there's your 63 right here. So this is a major support level. To stay bullish, it has to hold here and come back up and do a triple top. And if that doesn't break, I'd sell it. Because I think it could come back and hit the VWAP. Okay, now I'm gonna have my lunch. This has got a hold here. Ford CEO says meeting with President Trump and Transport Secretary Duffy today. Crude oil inventories 0.574 million barrels, build of 1.9 million, draw estimate. Live on CNBC, U.S. Secretary of Commerce Howard Lutnick says we're investing in companies that will advance manufacturing. And that brings me straight to Intel. Look at that. That pulled back to 34, 32 that I mentioned last week. Okay, now your SPY is coming up to resistance. Pay attention. R, what is your name? What can I call you? What does R stand for? What does R stand for? What can I call you? Nickname. I'll call you Robot. Call him Rusty. Okay, Rusty it is. You're at resistance, R, Rusty. SPY 682.97 has to break. Jimmy called it. Sometimes you got to sell it at the break-even point. Right now I'm having chicken curry and rice. A little dry, but it's my first time making it. Next time I'll add a little bit. It's a little too hot too, so I ain't gonna buy this no more. Oh yeah, IRBT. Look at that thing bounce. Robot. Coffee's ready. Oh man, that's just hot. We'll see if there's any cleavage on today.
And those that don't have semiconductor exposure, You know, you can look at the SMH as an exposure to get some back into that tech trade. And then lastly, one of the ETFs, other one that we own is Granny Shots. That is an ETF that is a high growth strategy. So when you're in a risk-on environment, that's an ETF, in our opinion, that will beat the S&P. So we have a decent position there as well. And then we just look for pullbacks in areas that we like that we'll continue to add, replace, or add to the existing position that we already have.
And Eddie, what's your time horizon on these positions? Are these tactical trades through this potential end-of-year Santa rally, or are these longer-term holds?
So we view the markets quarter over quarter because we think in this environment to try to predict what the market's going to do in a year is impossible. You have to be ready for any of the unexpected events that can happen. And so we look at things quarter by quarter. So when we make a purchase, we hope that we don't have to sell it for 12 months is our goal. But we have time periods where you get some real breakdowns.
If we make a purchase, we can't call out a year. We look at them every quarter.
With us today, that's Eddie Gabor, the owner of Key Advisors Wealth Management. And we've got plenty more to come today on Trading 360. Next, of course, we've got the big three stocks, 3 charts, 3 trades. Rick Ducat will take us through the technicals, and Don Kaufman will be joining us to take us through the trades for Caterpillar, Intel, and Tesla. That's next on Trading 360 on Schwab Network.
Knife. Prepare ye. SPX. Prepare ye. Rusty. We're at the V-block. Get ready on SPY. I'm taking the SPX. $3.80, yeah. Clean the page.
From the most
Clean
iconic
slate.
floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute by minute breakdown of the biggest headlines, earnings, and global movers, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's a Carl's Way is
Come on.
the best way.
Is it? At Schwab,
380.
all I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth
Schwab.
Welcome back.
Patience,
to
my
Trading 360
friend.
with Mark Tiffin.
Patience.
It's time for the big three. We've got 3 stocks, 3 charts, and 3 trades. Rick Ducat joining us as always to take us through the charts. Here to take us through the trades today is Don Kaufman, the co-founder of Theo Trade. Great to have you both with us. Don, love to get your thoughts on this market action that we've seen so far this week.
Yeah, this week, once again, it's a little bit of, slop-tastic. I really thought that Microsoft this morning may actually drag the S&Ps down. The day is still young. You can actually see rotations right now, though, within the tech sector itself. It just feels like nothing matters. Not financials, not energy, not retail. Nothing matters right now but tech. And we're literally starting to see
Well, it's always been
rotation
tech, you
within the
idiot.
sector itself. Obviously, Microsoft, just a little bit of a drag of the S&Ps probably through the remainder of this week.
All right, well, then let's get right into these picks that
She's
you've got
confused.
here. This is not a tech pick. Your first one is Caterpillar. They are having a decent year. Taking a look at their chart in the last 6 months, up more than 66%. Walk us through your thoughts on Caterpillar and if you're bullish or bearish here.
Yeah, this one's actually going to be a bullish trade. I'm going to start with the bullish trade, and why not? I mean, look at this chart here. It's absolutely spectacular. So, what I'm looking for inside of Caterpillar, I'll give you kind of some of the technical breakdown. Look, I'm much more of an options geek. I have tendency to look at order flow, and my anticipation at this point is with Caterpillar butting up at or near all-time highs, that call buyers will start to rush in and once again cause the gamma squeeze. And I like to hop on board with these types of gamma squeezes. And what that basically is, traders come in, they buy calls. The market making firms sell them those calls. And as the market making firms sell them the calls, they turn around, okay, in effort to hedge the short calls, they buy stock. And buying stock forces, if you will, those shares to the upside. At this point, there's a decent probability of that kind of gamma squeeze playing out in just the next couple of trading sessions. So I'm going to go shorter duration here. I'm going to come into the 19th of December expiration. Again, very short duration. I'm going to be buying the 590 calls, which is just very slightly out of the money, and selling a 610 call. This is a really wide spread for me. This is a $20 wide spread, and it's done for about a $6.90 debit. So there's quite a bit of risk up front, but you're looking for this explosive move, and all we're trying to do is ride the coattails of the gamma squeeze.
All right, Rick, so as we look for this explosive move in what Don highlighted is a really nice looking chart, do you see the potential for us to continue moving to the upside?
Well, yeah, it's a pretty encouraging setup for the bulls here. And what we saw during this run-up, we hit our low points as so many other stocks did during the tariff news shock. But then we saw the stair-step type of pattern where you have the sharp rallies, then consolidative periods, very, very fast movement to the upside here. But then we had a bit of a longer phase here where prices moved more sideways. We can see that our old high point here near about 545 lines up quite well with our worst day fluctuation.
$5
below that level, but in terms of the closing prices, that's about where price held
Washboardjim nailed it again.
Side, we have our resistance ceiling near about a 585 or so. 585,
now, Rusty,
49 to be very specific.
What are you going to do?
Close, so that would be one level the bulls.
You're at the right shoulder.
Out for. We can also see that our shorter-term downward sloping
Rusty,
trend line has been.
What are you going to do here?
Blue line here. We are still hanging on.
You got a head and shoulders.
Upward sloping white trend line. So now we'll have to.
What
see,
you going to do?
We do start to get that squeeze that Don was referring to. The
Jimmy doesn't like to wait.
That the bulls would want a strong close above that previous close. We can see also.
What are you going to do?
RSI, our measure of momentum, is trending upward once again. Yesterday, making a new relative high above its previous peak, as price also made a new relative
Rusty?
high as well. Notice that we can see our 21-day EMA was supportive recently.
Well, you should.
Actually, during our downswing here from the
You
open.
see a head and shoulders?
561 is about where that one comes in, so another potential level to watch. When we do also look at our volume profile study, we see very obvious volume nodes here.
I gave you the entry and the exit. Don't come crying to me.
Highlighting earlier, you can see that those areas are right around here near 520 or so, and then here 500 and about 470. So we can see to the upside, though, the old high close, +1 channel, lining up near 585. So potential resistance there. That's a squeeze potential.
Jimmy took
Yeah,
560.
we're just right below that right now, that 585 level you highlighted at 582.30. Don, before we move on to your next pick, your second in the big three, I did want to get your thoughts on this lawsuit from Bobcat saying that Caterpillar infringed on roughly 14 of its patents, and if you have any
My name is
expectation that that's going to
Washboardjim.
have any meaningful
Spelunk.
impact on shares.
Spelink. I don't stink. Spelunk.
One of the
Spelink.
things you'll learn about litigation like this, as long as Caterpillar is willing to eventually put a price tag to that, it's move on. It's a few $1 million here or there. Even if it's $1 billion, it's move right through it. And that's really what litigation comes down to these days: is putting a price tag on it. The shareholders are actually well aware. Let's move through it.
All right, so then let's move through it to your next pick. We're talking about
Da, da,
Intel
da,
here.
da,
We're
da,
seeing shares
da,
down just ever so slightly.
Da, da, da,
Did get some
da, da,
reports
da.
saying that they may supply chips for Apple.
Look at that there.
Does that play in at all?
What
to
is
this
that?
pick?
You know, ironically, we've seen this movie before. Has Intel ever done anything with Apple?
Woo!
Absolutely. But you know what? This really doesn't have any bearing on what I'm about to do in Intel, and that is, I'm getting
I'm Washboard
This is
Jim.
just
I am the
simply
founder
too
of the
far
Sneaky Snake
too
Trading
fast.
Strategy,
And in a
where I talk
marketplace, there's
about
always
chart
gonna be
patterns,
two-sided trade. So
moving
pretty
averages,
evident, the recent
being in the
surge
now.
Intel has taken us from like 3250 to 4350. Okay, it's an opportunity to fade this, and the fade is
unbelievable.
scenario.
That's what
right
you are.
This one I'm actually going to fade. I'm actually going to
Head
go all
and
the way out to the February
shoulders.
expiration. And I just
$5.60.
to look at the technicals.
Unbelievable.
Like it's going to show here in just a moment. They're incredibly bullish technicals. But what is that fade? It's too far, too fast. Stock has to kind of retrench a little bit. Would be my interpretation of it. So
We just don't know how he does it,
February 20th,
but he does it.
Feb 20. Why so far out?
Called here
Give me plenty of time
off
for
the
fade to play
200
out.
EMA.
Buying 40
Now I want you to
puts
pay attention
and
to
selling
something
the
here,
35
folks.
puts. So it's a full $5 wide.
I'm only
put
going to
spread.
go over this
I love to
one
use
time.
spreads because it helps me mitigate.
And this
some
is
of the
exactly what we
volatility
called
exposure
earlier
in
today,
Intel
right
now.
here.
This trade is done for $1.65.
You've got the three
for that
black
$5 wide
whores
spread.
coming down and
All right,
hitting
so
the
as we take
200.
a look at Intel
Actually,
here, and it
4
has
of them.
moved, as we can see from the chart, pretty far, pretty fast to
Then
the
you got
upside
that
here. And we're
big
looking at a
old
longer-term
long leg
play.
doji.
You know, what's the technical setup here, Rick?
Right.
Then you got the
we
tweezer
had
bottom.
Big push to the upside here. Then from there, when you do have one of
And
these
you got the big
gaps,
engulfing
oftentimes
candle,
from
comes
there
back
you
and
start a
retests
new
the
trend
200
line or new
again.
drawing or what have you here. So
Boom.
these two low points
To a
with
head and
that
shoulders.
trajectory here, you can
Exit
put it across
idea
the high points.
at
Matches up
$5.60.
decently here. We're about at that potential resistance level here. So one thing to,
This
to
could
think
break
about.
out, but
Notice
who
as well,
knows?
pretty decent example here of a head and shoulders type of pattern here. Just pointing it out where we have the shoulders and the corresponding
Time for another
peak. Notice
song.
as well that volume was declining during that period, as you might expect with that type of pattern here. Certainly not going to play out
Long
over
leg
time.
doji.
Much
Pay
easier to
attention
point
to
these
them
things out in
reversal
retrospect,
candles.
But just this was a good
You'll
example
become
of the
twice
type
as
of thing
good.
you'd be looking for with the neckline being around that 36
Washboard
level.
Jim.
Now we've retaken that level. Now price made
I was
a
telling
good
my little
close above
sister
our
about
previous
you.
best close here, 41.53.
She's 36
But,
and
we
she's
can
the,
see now that our trend line is still
she
in
won the
play,
beauty
but it's
pageant
quite
of
steep here.
Tennessee.
The steeper
She
the
wants to
trend,
know
the
if,
less sustainable it is. So now we can see here
you'll
that
take
we
her
have
out
our
on a dinner date.
21-day EMA lining up with this shaded area
So I have
here
to look
near
at my
about
schedule.
38. That will be an area I
I
want to
got
highlight in our next chart here. We can also
Miss
see
America
RSI was trending downward.
Thursday.
We broke above that trend line, but still
And I got
stopping
Miss
short of that
Oregon
overbought area the bulls would want a move
Wednesday.
above that threshold of 70. So now
Friday
looking
I
at our
got
other study here, volume profile.
what is that?
We can
Miss
see that
Texas.
that's where our volume
So I think I
goes
can
up.
fit her in.
Around 38 stands
If she
out
don't
as
mind
potential,
Sunday.
Support or an area. If you had a more bearish outlook, to look for that breakdown here, 34.81. Our 63.
But she's gonna have to buy dinner.
Fairly closely with that trend line right now. That might be
If you know
where
what I
might
mean.
expect things to solidify potentially. But also, quick glance at our 5-year chart. We are near this kind of longer-term consolidation area here. So an interesting situation could arise if we do start to make our way up to that 45 level and see what happens if we can overcome that old barrier.
And as Don mentioned, we have seen a pretty substantial move to the upside in Intel so far this year, up about 116%.
Then Randy's wife, I'm taking out
I
Monday.
can't wait to hear if you're bullish or bearish on this one, especially since we have got a big bear who has been very vocal in the markets about the feelings on the valuations of Tesla this week.
You know what? I'm not going to get deep into the valuation and so forth. Here's another one where, look, Tesla has
I gave you the exit idea, man.
bigger portion of this year. I mean, channeled all the way from like 3 to 350 from like May to September. I just think it's going to pull back into the channel. Look, I'm just going to tell you, I am a fan of every product they've made. I've owned almost every product they've made, but at the exact same time, I'm still going to bear up here in the near term.
Rusty's live
This is not
again.
about fundamentals. Again, it's not about valuation. It's about some of the technicals here in the near term. The stock has just kind of stagnated throughout the course
I'm
of
gonna
the
watch
year.
the rest of it
It's
here and
likely
see
to
what
pull
he's
back.
doing.
Again, I think a comfortable place is between that, 300 and 350 range. And it doesn't matter about some of the sales either. This is just, again, purely kind of this technical trade. So once again, I'm going to go out to the February 20th expiration. And I'm doing that because, look, I'm a little uneasy about the timing of a pullback.
Rusty's
And this
kicking
is
butt.
a fairly substantial pullback. So the Feb 20th expiration, I'm going to go out and I'm going to buy a 400 put, and then I'm going to sell the 390 put. Even though I think we're going to come down more than that, all I'm going to do is just take a little lump sum from that 400 level. I'm going to buy that 400 put, sell the 390 put. It's a $10 wide put spread. This one's done for a $3.75 debit. I'm just trying to take a little chunk out on the way down.
Get rid of the rest
kind
of
of reassess from there. Longer duration, and I think about, years. I'm not necessarily bearish on this underlying. Just in the near term, pullback is probably warranted.
All right, Rick, so as we look at the technicals, and we know from the numbers that Don just threw out, we're looking at roughly about a 10% pullback from where we're trading right now, around 438. What's the setup look like?
Right, so 400 stood out to me as well. If we were to backtrack a little bit, there was a small gap here. And from there, though, it led to a precipitous decline. That was about where we stopped here before another breakout. That's about where we had some chop and consolidation here. For the most part, the closing lows align with that area, except near the end before we broke out of that trend line to the upside here. So now we find ourselves kind of in the middle of our range once again, 400 on the low end, 463 all the way back over here. We had two of our best closes during the past year. That price once again struggled to overtake. So we had this double top here with this zigzag type of price activity in between. So now we have the bulls would have their eyes on that 463 level once again, potentially. Meanwhile, the bears might be eyeing 400. So when we do look at our moving averages here, they are trending upward here. The faster 21-day is starting to slightly diverge from its slower counterpart there. That one comes in near 425. It was supportive yesterday here, so that's an area to watch going forward.
We're talking about Tesla.
Sloping red trend line and 50 midline on the RSI were broken, so now we are enjoying more of a bullish uptrend so far. So when we do look at our volume profile and standard deviation channel studies, we are in the thick of the volume node here that stands out the most near current price activity. Things really start to drop off above 440 and 420 would be the lower end boundary.
You were looking at the 63, I think.
+1 standard deviation channel just above. So it'll be really important to see if we do push out of this volume node area and retest 463. Otherwise, that 400 level stands out to the downside.
All right, right now at 438.70 for Tesla, they are trading up about a little over 2% higher on the day. Now, Don, before we say goodbye, I would like to ask one final question and just know, do you think that we have the setup for a Santa rally coming into the end of the year?
No, I actually think the Fed next week is actually going to cause quite a bit of volatility.
Oh, shit.
The Fed, the cut
Who is this guy?
There's no question about that. Some of the statements, though, inflation's still a problem. And I think you're going to hear
Who is
You're
this?
actually going to hear some hawkish statements. Look, everybody knows Jerome Powell, he's out of the contest in a couple of months. He's going to take shots at this marketplace to some degree. He's going to take shots at the administration. At this point, what's he got to lose? Look for some hawkish tones and some volatility to hit this marketplace.
He's got his legacy, you idiot.
That Fed announcement.
You're not alone in that. We talked to David Wu on Market on Close yesterday, and he had the same sentiment. He thinks there will be a hawkish night and a lot of volatility that follows. Don, we appreciate you being with us.
I love this girl.
For the Big Three today, that's Don Kaufman, co-founder of TheoTrade, and of course Rick Ducat, our lead market technician here on the network for breaking down the technicals. Coming up next, we're going to spotlight Cyber Monday, as online shoppers showed up in full force this year with the help of
I have to give her some credit. She's a hottie.
360. We'll be right back.
Sometimes you know.
Sometimes you know when to mute. And now's the time. PLTR new high. Oh, never mind. Shit. I'm gonna have to clean this chart up on the SPY.
insights. Vivek, thank you for being with us today to talk about this all-important holiday season. We saw Cyber Monday hit another all-time record. I'd love to know, since this is your main focus and area of expertise, what surprised you most about what we saw?
I think for us, we have been looking at Cyber Monday, many of the marquee sales days for many years. And I think what's been exciting and surprising for us is how much consumers
He's got a couple of my Yetis back here.
Days. We had a lot of talk that people were, kind of spending early, which they are, but really that is Black Friday, Cyber Monday, do these days still have the cachet they once did?
He's got a funny looking.
And for us to see $14.3 billion being spent on Cyber Mondays says it absolutely does, and consumers are still very much prioritizing these days to get the best deals.
And as we take a look at the days side by side, Black Friday's growth once again outpacing Cyber Monday, which frankly surprised me a little bit. What does that indicate to you? Is Cyber Monday losing dominance? Is this a shift in consumer behavior towards getting those deals earlier? Is some of it driven by in-person shopping?
Well, I think it's a couple of reasons. One being that consumers have the latitude to prioritize when they spend on those major days. Going into Thanksgiving week, that's when the discounts really escalate. And so you saw some good momentum out of Thanksgiving, especially on the mobile side. Black Friday, having the perception that it would provide the best deals really helped it drive up some pretty good growth. And then Cyber Monday is still holding its own as the biggest online shopping day of the year, driving over $14 billion. But given that the consumers are trying to manage getting some of these items early, but not foregoing getting the best absolute pricing, that's what helped shift more momentum in the direction of Black Friday.
And with these deals, I had some conversations in the lead up to the holidays spending that were about, it's really kind of Black November now. The deals are starting a little bit earlier, they're extending a little bit longer. Are retailers extending these promotions out of strength, or is this because that they need the traffic to keep up and this is how they're maintaining a competitive edge?
Well, I think they're recognizing there's a very price-sensitive consumer out there, and what they are also clocking is there's a lot of eventized shopping happening on the part of the consumer. So whether it's like a President's Day or the Prime event in the summer, or whether it's, just a Mother's Day or Valentine's Day. These are real, sort of lift moments for the consumers. And so ultimately they were trying to kind of essentially get some of that momentum kicking off pretty early, and different retailers were having their different promotions. I think what we found is you get certain levels of discounts in the sort of 10 to 15, 10 to 16% range, but it's once we got into Thanksgiving week, we saw the escalation happen, and those discounts go as deep as 16 to 30, 16 to 28%.
And Vivek, when we spoke well in advance of the shopping holidays, we had talked about how you expected that AI and AI-assisted shopping would play an enormous role this year as compared to what we've seen in the past. What were some of the takeaways that you saw in terms of AI-assisted shopping and in some of the trends that you're noticing?
That's right. So this was the first official year where generative AI was really influencing the buyer journeys. So we already were seeing consumers
SPX at $7.90
research purposes,
$8.
Trying to get a sense of where they can find cheaper versions of products.
We're back in resistance.
All that was happening, but what we've really been able to track exceedingly well is the traffic coming from these generative AI platforms to the retail sites, and that was up within the range of 700 to 850% year on year on some of these major days like Black Friday, Cyber Monday, and really indicative of consumers seeing the results that the generative AI platforms were serving them, finding them very credible and trusting them. And we're actually seeing this type of traffic convert better on sites once they hit them compared to non-AI source traffic. So a lot of opportunity and implications there for retailers.
So we're seeing this growth move so quickly in terms of AI. What does Adobe see as the long-term role of AI in consumer shopping decisions?
Well, I think we see a consumer out there that's very, very preoccupied with urgency, efficiency, speed, and having that peace of mind that they got what they needed at the price point that gives them a lot of value. And that's where the opportunity for many of these generative AI platforms is so important. There's also the experience. You know, consumers like to do this sort of impulse shopping. They like their retailers that they trust and know that they can get their goods to them like clockwork, have it, you know, same day delivery, the next day delivery.
The next day
Having
delivery.
that relationship with the consumer through these generative AI agents is a big opportunity, not just for discovery, but also maintaining really strong relationships with the consumer and driving a lot of lifetime value.
And the other thing that we talked about in the preview last we spoke was that you expected to see a considerable uptick in the use of buy now, pay later. We did see that cross the $1 billion mark on Cyber Monday. So I'm wondering, do you view this as a signal of financial stress, or is this just the consumer pivoting to a more flexible option because it's simply available to them?
Yeah, we view it as a combination of factors. We're, for the season, anticipating about $20 billion to be processed through buy now, pay later. And we attribute that to a couple of different things. One, you have consumers that are very mobile, social commerce focused, and there's been a lot of really important work that's been done to integrate buy now, pay later through the checkout processes. So you have a consumer who's going through the path and then they see a much smaller number there at checkout, and that's appealing enough for them to go down that journey with buy now, pay later. You have other consumers who are, you know, also trying to manage a cost of living crunch and maybe also considering how price fluctuations can shift in the future. So then they're really prioritizing getting some of those products a bit earlier, maybe earlier than expected, and then it's a more significant amount, so they break it up through buy now, pay later. So all those types of things are informing what we're seeing in terms of that growth.
Yeah, and they certainly do make it easy. I would say probably 50% of the things I purchased offered me an option to do buy now, pay later, which I didn't take advantage of, but maybe we'll look into next time. But Vivek, we appreciate you being with us to walk through some of these early numbers. I know you'll have another report coming out with more detail, and of course we'll chat then. But Vivek Pandya, lead analyst at Adobe Digital Insights. Coming up, we'll have the disruptors. George Tillis will be joining us to take a look at Salesforce ahead of their earnings later today. We'll preview those numbers, and we'll get an example trade next on Trading 360. Stay with us.
Connected to the markets with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Trading 360. I'm Marley Caden here in our Chicago headquarters. Let's head out to the New York Stock Exchange for a check on the markets and welcome in Nicole Petalides, host of Opening Bell and the Watch List. Good morning to you, Nicole.
Cleavage.
We're a few hours into the trading day now. I'd love to know what's caught your eye
Whoa.
so far this morning. What's sticking out to you so far in trading?
Her cleavage is sticking
It
out.
was Alex Carl who called this early on the opening bell show where things were sort of faltering around.
Woo.
And the questions started to move in. Or yesterday we were saying we were up 6 of 7 trading days because that December 1st, Marley, as you know, was a down day. And then now we were going to
cleavage day.
Down 2 of 3 days. Well, that's not the case. In fact, we've been moving higher throughout this day, and there are some catalysts that are supporting that. And so you have an up arrow, and also we are at around session highs. So that's some good news there. I mean, you are seeing energy, financials, healthcare, and consumer discretionary leading the way here. While Microsoft, Travelers, and Boeing are the laggards on the S&P 500, you have names like UnitedHealth, Nike, and Goldman are winners. The mentality of the market right now is that on the wish list is a Santa Claus rally. And most of the guests who are coming on think that it is a reasonable idea that in fact could happen, and that's what Alexis Brown said today on the show. And also you've had the quantitative tightening and for the Fed, which essentially becomes quantitative easing, and that brings liquidity. It also eases up for Bitcoin. Bitcoin, which was at 80,000 on the 21st of November, has now been above 90,000 and making people feel a little bit more risk on. And of course, the ADP print, and I shouldn't have left it last, maybe I should have said it first, but that ADP print, which is a private payrolls print, shows that we've had continued weakness, and 3 of the last 4 months, and it's all down arrows that come in at minus 32,000 versus a plus. And that just shows the Fed, hey, one more reason you should be cutting. And so the likelihood of that Fed cut now for next week, which we'll have a special show for that, is now just close to 90. It's an 89% likelihood of that cut to be coming in. Wall Street likes that. And we see right now the 10-year bond on 408.
Yeah, at 408. And interesting you bring up the Santa rally on the big 3. I asked Don Kaufman his thoughts, and he does not believe we are going to have a Santa rally.
Well, he's an idiot.
There's going to be a lot of volatility post-Fed. He expects a hawkish cut, so a slightly different sentiment than some of our other guests are offering us. But I do want to talk about Amazon with you this morning. We saw Amazon, sort of rush to roll out their new AI chip yesterday. It was met with a pretty positive response as it tries to take on NVIDIA here with its new custom chip, and they've got some price target adjustments.
Yeah, I'm looking forward to talking about that. But Don Kaufman, isn't he normally sort of bearish anyway?
Sort of bearish, right? Feels a little gentle. Yes, he's usually bearish.
So he's sort of bearish. I take what he says. I think it's a good point you brought it up because Gene Goldman would agree. He thought it was a low likelihood to see the Santa Claus rally. So it's good to bring that perspective. I think you make a great point, Marley. Let's talk about Amazon, as you noted. Bank of America here raises the price target to 303. They keep the buy rating. The prior price target was 272. Today, the stock is trading at 232. So it really shows you the upside potential. The stock has been incredible over the last 3 years. It's gone from $81 up to a new record high of $258 just recently. But this new price target of 303 comes on the heels of the annual conference that was in Las Vegas. It's called the Annual reInvent Cloud. And this was in Las Vegas, and there was an unveiling. And there were a few big catalysts here for Amazon. Everybody loves Amazon for all Amazon Web Services, Amazon what it is. But this was about a virtual operations team member who's never moody, never hungover, and works autonomously. It's a virtual developer and continually learns every day. Wouldn't you like a perfect team member like this? So this is about the introduction of AI factories, a new set of frontier agents. That's what they're in fact called. That's the proper name, to work autonomously. And what are they doing primarily? They are helping to build, secure, and operate software. And it learns while it's building and doing that. And that obviously was monumental. Also coupled with the stories about the more and more collaboration in the future with NVIDIA and titanium hardware. And that also too was a plus. So that Bank of America call 303 was certainly very telling. And I'll just scroll down and see if any others pop out very quickly. But I think most of the folks on Wall Street still think this name is really a winner. And over year to date, it's up 6%. It's not like Amazon's been a great performer in 2025, but there are some good things ahead, it seems, according to this report. Marley.
Yeah, and a few others too, as you mentioned. Wells Fargo raising their price target, Oppenheimer raising theirs. Right now, the average is about $295, and like you said, they're trading about $232.62. Nicole, we appreciate you walking us through that one. That's Nicole Petalides. And now it's time for the disruptors. George Tillis, our senior markets correspondent, is here with today's company, Salesforce. We've got earnings due out after the close. George, what can we expect from Salesforce? It's underperformed so far this year. Shares down a little more than 25% year to date.
Yeah, that's the thing. I looked at this group actually, Marley. I mean, Salesforce, I'm going to throw in Adobe, Workday, ServiceNow. There's been some serial underperformers in the application software space. It seems like at least the market right now, or at least this year, has been preferring hardware elements to artificial intelligence. And of course, the software companies, for the most part, at least in the enterprise application space, have taken a back seat. But nonetheless, I mean, if you look at Salesforce, they're still a leader. And of course, customer relations management software, they've actually been expanding quite aggressively into multiple areas, everything from data visualization, of course, e-commerce, marketing. All these businesses essentially have been either done through organic movements, but also the acquisition spree that Salesforce has been on, and they continue to do so. If you look at the 40 companies, large acquisitions they've made since 2009, they recently bolted on another $8 billion acquisition of Informatica, and that actually created a situation where the stock is just, taken a couple of steps back because of the absorption needs of these acquisitions. So the story, I think, for Salesforce is Agent AI. This is what essentially analysts will be looking for, remaining performance obligations, but maybe essentially looking for organic revenue growth versus inorganic growth, because we know that companies that are making acquisitions while they're expending money to enhance their technologies have really been underperforming, and I think that explains why Salesforce has been down. Now, if you look at the EPS estimates at $2.85, that's quite high, 18% higher than $2.41 last year, with sales higher, estimated to be around $10.44 billion. 9% higher than the $9.44 billion for the same quarter last year. So they're expecting essentially nearly a 20% increase in EPS on close to 10% sales growth going forward. And I think it's going to be important to consider their strategy, integrating Agentforce AI, as well as how that is affecting RPOs going forward.
Yeah, I mean, and it's so interesting because there's still such a cautious narrative around the stock, even considering they are expecting that double-digit growth on both the top and the bottom lines. And I was looking at something earlier that, shares have never been cheaper. The sell-off we've seen in Salesforce has taken its market cap to the lowest levels we've seen since it went public back in 2004. So with this setup, knowing it's never been cheaper, but there is expectation for growth here, how would you structure an example trade?
So, all the narrative, you put all the narrative together, one would say maybe looking at the price action that there is some stabilization. First off, looking at this price relative to the 200-day moving average is trading below that, and the 200-day moving average is actually sloping down. So for what it's worth, that may be, an area of resistance if it does start to move higher around the 260. But at the same time, looking at the price action as well, it's posting effectively a triple bottom. Around the 225 area, corresponding to levels seen in April, August, as well as late November. So I'm going to use these levels, both high and low, as potential benchmarks, and I'm going to structure a neutral trade going into earnings, an iron condor, just like we did yesterday with Marvell. Of course, different strikes and maybe some probabilities here, but nonetheless, I'm basically going to sell the Decembers for next week's expiration 9 days out. Selling the 255, 260 call spread above the current price and below the current price, the 220, 215 put spread. So altogether, this four-legged structure, you can earn about $2 in credit, share or $200 a contract, if you can get the strikes lined up right. So essentially, we're looking for neutrality between 255 high and 220 low. And then that $2 premium will roll to zero by expiration in 9 days. Break even, 257 on the high side, and then of course 218 on the low side. Your max profit is the $2 you earn on the credit. Max loss is $3. That only occurs if the stock hits.
I think I will go get me some
long strikes.
Go to the bank.
Side, by expiration, that's 260 on the high side and 215 on the low side.
And right now trading at 237.23 for Salesforce, ahead of their earnings, which of course we will have later today on Market on Close. George, want to thank you for being with us to walk us through expectations and also that example trade. That's George Tillis. Coming up next, we've got our 360
Okay, we're coming
round.
to
We're
support.
taking a look at CrowdStrike after its earnings. Shares slightly lower in reaction. We'll find out what stood out in the report next on Trading 360.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools,
SPX,
including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
That could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
We're watching real closely here.
I have
Dad,
a question for you.
I got a question for you.
When did Granddad...
How come Grandpa doesn't sleep with me anymore? Well, honey, stop that weekend, you pervert. Honey, he's dead. It's my turn. Dad, look at that hug. Would you hug your daughter like that? That's disgusting.
Experienced every segment.
With real-time insight across products and sectors, we
Dad,
know what active traders need.
how come Grandpa doesn't sleep with me anymore?
Weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Welcome back to Trading 360. I'm Marley Caden. It's time now for our 360 round. For that, let's bring in our panel to discuss the earnings from CrowdStrike. Joining us, Ian Tian, the CEO and co-founder of Mattermost, and Dave Chronister, founder and CEO of Parameter Security. Ian, we'll start with you. What are your overall thoughts on yesterday's report?
Yeah, thank you. I think it was great news. I'm just seeing that the CrowdStrike is a bellwether for the cyber industry, and what we're really seeing is large enterprise deals are continuing to happen. And it's a beat on the estimates. It is a raise in guidance, and it's really a signal that they have
I'm watching the
highest pipeline they've ever
6850s
had,
here.
in the history of the company, which is pretty exciting about the Falcon platform. So,
Marley, you ruined the show, you know it? If it wasn't for you in them dresses, I'd probably have to make a phone call. Man, how come Grandpa doesn't sleep with me anymore? I think we're going to wait. I'm going to wait for it to come back and hit this support level. Although this is support here, and I thought about taking it to 560. I wish I could trade it with him. Asian guys are good traders. Okay, we're coming back down again. Get ready. One more candle down. Either start a position here or wait and see if it hits the 200. Here we go. Get ready. Oh, Woo! Oh yeah. Just like the doctor ordered. Right there at 360. Up to 200. For I'm a rambling man. Spelunk, spelink. What do you think? Spelunk, spelink. $3.20. I got one at 360. Are we going to hit the orb? Or should I buy one here? I'm going to buy one here. Then if I get down to the orb, I'll buy two. Position. Okay, here we go. My darling Clementine. $3.70. The crowd doesn't know what to do. Jimmy's winning. I didn't add like I said I was. That's where I screwed up. I could have added. That'd have been nice. Do you understand? My darling, oh my darling Clementine. Today, not forever, my darling Clementine. Marley, man, you're hot. 3 white soldiers. We're at $4. I could sell these contracts here. Oh. Well, I jumped in the trade. 6850s. Bought my first contract at 360. Looked at it again, then I watched the spin. It hit my orbit at 330. I average 345. Hope the stock stays alive. Only wanted to take a nosedive. I needed to break this resistance. It's the 63 MA. Been waiting for this trade all day. I'm at Randy's favorite number, 420. I wouldn't doubt he's in the garage, smoking and burning big fat joint. He missed this entry that I took at 330. Well, he's in the garage doing a 420. I caught the bottom right off the orb. Ain't that crazy? You good looking daisy. Let's break the 63 MA. I've been waiting for this trade all day. I'm 64. I'm about 65. Got a letter in the mail. Says, Jim, you're signing up for Social Security. You're getting old. Well, I got in the trade today. Should I sell it? Well, at $4.60. I think I should sell it here. We broke the resistance. We broke the resistance. I'm at 460. Just hit 470. Climbing to 480. Oh boy. Randy's in the garage at 420. And I'm breaking resistance. I got a bad nick of my guitar on the neck, man. What the heck? Oh, I gotta go pick up my ukulele. Okay, let's do it again. Well, I got out of prison. I found Washboardjim. He said jump in the SPX and we'll get another win. I got to my computer and did it again. And then I knocked on Jim's door and said, "Thank you for the win, Jim." I jumped in that trade at 360 like you did. It bounced up and hit the 63 and I got out at 460. Thank you, Jim. You're my new friend. I'm the singing day trader. Good night. Boom, baby. Man, it's cold in here. Might go to the bank. That hit $3 on that pullback, so it's losing. Good song, Jim, yes. Oh boy. So now we're coming up to what? What is this? Does anybody know what that is? YouTubers? Why did I get out of that trade? Left shoulder, right shoulder, right shoulder. So that's called the right shoulder of a Head and Shoulders. Now usually when it comes back down, it's either going to break out now and come up and do a double top. That third time, it's do or die. So it's a Head and Shoulders. Left shoulder, right shoulder, and there it is. $4.50 from $3. Boom! The third time, remember it. The second time, it'll retrace, pull back, boom. It has to break on that third time or it just fails. And that's called a triple top break on the right shoulder. And that's called a Head and Shoulders. Now you can look. A lot of people don't tell you how to play it under. They just tell you that we're at a resistance. But I'm showing you how to play it. Head and Shoulders pattern is a bearish reversal pattern in a stock trading or signals of potential shift in an uptrend. So that's a bearish flag to a downtrend. It consists of 3 peaks: a left shoulder, a right shoulder head, and then a right shoulder. So a lot of people don't tell you how to play it. They just kind of say you're at a head and shoulders and it's going to go straight down. Well, that's not always how it works. Almost every diagram in here says that, but it doesn't show what I just showed you. That if you buy it from the bottom and it runs up, and that's your second shoulder, so that's your first one. That's your head and shoulders right there. So you're sitting here watching it, knowing that you just hit a resistance, and you can draw that price line, that trend line, all the way across. And as it pulls back, it'll come up and retrace that right shoulder a second time, and that's an exit idea. Then we came back and hit the 200 EMA with a hammer, 2 engulfing candles with a hammer, and it bounced up for the 3rd time and broke out. And that's called a triple top breakout. So it has to break out on that 3rd time. I can show you this trade after trade after trade after trade after trade, and 9 out of 10 times it'll retest that right shoulder a second time. And then you got an inverse head and shoulders right down here. Just the opposite. You got your left shoulder, your head, and your right shoulder. See that trend line where it stopped right there? That's called an inverse head and shoulders. That's just the opposite of a head and shoulders. So down here we got inverse. Damn it. I did all that typing for nothing. So type in inverse. Inverse head and shoulders, a chart pattern seen when the security price falls and rises 3 times to form a 3 successful thoughts, a second, which is the deepest. Well, that don't make no damn sense. They don't have to be equal. You know, it can slide up, it could slide down. This is your neckline right here. And this is your head, your left shoulder, and your right shoulder. Head, left shoulder, right shoulder. Now, sometimes when you're trading this, you want to wait for it to come back the second time and hit that right shoulder the second time for the breakout. I'm a big advocate of that, waiting for that second time. Don't chase it. Let it come back and retest. I mean, sometimes it'll continue right there, but it usually pulls back a little bit. This one it didn't. It just went ahead and broke out once you hit that 3rd time up there. But see how it retested that shoulder right there? After it broke out, it came back and retested it. And so I tried to break that habit of chasing. Because people get excited and, oh, well, we broke out, we're going to jump in. And then all of a sudden, you know, they get tangled up and worry and and then sell for a loss, and all it's doing is retesting. So that would be your entry right there. Your best entry is down here, off that right shoulder, off that 200, and that's a double confirmation. These are at 610 now. I left one on the table. I'm done. If you can count to 3, you can trade with me. Triple top. 1M, 2 bits, 3B. Boom. So I'm going to go to the bank. God, look at that. 660. I just left $300 on the table. $7. Now we're at a double top. Damn. 730.
Fifth expiration just this week. So anything down small, neutral, or higher, and this trade will be profitable. The probability of finishing out of the money on this trade on the 220 put, 77.7%. So a high probability trade and short put vertical, Diane, that we're looking at in time. We put it in 190, stocks rallied a little bit, trading closer to 160. That really triggers to me. You may want to adjust your strikes a little closer, but right now, selling the 220, 210 short put vertical for $1.90 is the paper money trade that I looked at, Tom.
All right, yeah, let's break this one down. This is really short-term positioning on this example trade here, an earnings type of event trade here, taking advantage of the higher implied volatility in the near-term options, with the option market pricing in about a plus or minus $17 move either way. And with the stock trading 236, this sets up with the strike Kevin picked in his neutral to bullish short put vertical. But let's break it down. Selling the 220 strike put, buying the 210 strike put, collecting roughly about a $1.90 credit. Might be a little bit lower than that, but if you do collect that $1.90 credit, that's what you can make, $190 per spread with $810 in risk. You got a lot of risk on this, but you've got better probabilities of success. Kevin mentioned that the 220 strike put in there in the December 5th weekly options, 77% probability of finishing out of the money. So those are the trade-offs that Kevin and I talk about all the time. Hey, I'm willing to risk more if my probability of success is really solid. And at this point, 77%, pretty good on this one. Now, it has that risk, $810, but that's all the way below 210 per share. And that one standard deviation move, as we mentioned, about $17, that lines right up with the 220 strike. Break even on this one, you take that 220 strike, you subtract the 190, you got 218.10 to the downside on that one, where you need the stock to remain above at this point. But Kevin's trade, you profit if it goes higher, stays where it is, the stock, or even goes lower. You could be wrong. It stays
Could be
at the
wrong.
220 level for that maximum profitability on that example trade. So a little bit more passive on Kevin's. So I went a little bit different. I went on the bearish side, and I looked at a strategy that's inexpensive, right? Where I know exactly what my risk is going into this position if you're bearish on it, and I aligned it with basically that one standard deviation move at that 220 strike. So I looked at a 2-week wide put pattern to the downside, where I'm going to go buy the December 19th monthly options that expire in 16 days, buy the 220 put, sell that same 220 put in the near-term December 5th weekly options that expire in 2 days. 2-week wide bearish.
Time for another song.
You're paying roughly about
Then I go to the
$1.50
bank.
debit on it. You probably get it a dime cheaper than that because, as Kevin mentioned, the stock's higher. But the debit you pay is going to be your risk on this one. And while you want it to go, you can see it from the risk profile, you want it to go be at or near that 220 strike. You've probably got a range between about 210 and
Nancy plays a game, everyone loses but her. Nancy doesn't care, Nancy only wants more.
Nancy Pelosi.
She doesn't even see you. Jim's gonna shit on your face. Retail traders gonna shit on your face too, just for being you.
people. We gotta go. Okay, I gotta go and unclog a drain. So I will be back.
More specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your
We got a couple things you gotta go do
no
now.
matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall alongside my buddy Kevin Eames over at the SIBO. Time now for our Cash Tag segment. We're taking a look at Five Below today. For that, we want to bring in our next guest, and that is Landon Swan, co-founder of Likefolio.
Going to go get some Drano for one of the sinks upstairs.
One of its discount peers in the group, and now we're focusing in on Five Below. The shares are higher today. It looks like investors are optimistic going into its earnings. But what's your take when you look across the Five Below as compared to other discounters?
Yeah, I mean, we got a really good tell from Dollar Tree, right? I mean, pretty good reaction from the market. They're up 3%. Interestingly enough, I think on that optimism, Five Below's up a little bit more. So some of this may be priced in. We're pretty bullish. The data looks pretty strong, but I do think we've got to look at what Dollar Tree said, not just about its stores so much, but about the economy and its customers in general. We know that shoppers have been trading into value. A lot of people are doing that. What's interesting, though, is that they got a lot of higher income customers coming in for the first time. They added 3 million households. Most of those higher income, and then the lower income households are spending more per visit, more per person. So they're kind of winning on both ends of that, the trade down, and then also the people who are a little bit under more pressure are spending more. We know that their party and decor did really well. People are wanting cheaper price points. This is all just like rolling right into what Five Below does. Their essentials were strong, their seasonals were strong, discretionary was strong. Again, this is Five Below's wheelhouse. So everything that Dollar Tree said just got investors more excited about Five Below's release coming out. So again, I think some of it's going to be priced in, but what's interesting was when we look at the data, we compare these two companies, because one, we've got a known of Dollar Tree, they reported, and now let's look at Five Below, the unknown. The data is actually stronger for Five Below. So we've got a stronger web data. We've got, and you can see here, Dollar General is actually doing the best, but Five Below versus the one that has reported is pretty strong compared to them, 22 versus 3. They've also got higher sentiment. People enjoy shopping at Five Below more. They talk more positively about those experiences. It's just overall, our data is much stronger for Five Below. So I do think there's some level of a good report priced in, especially when, again, Dollar Tree's up 3, Five Below's up 4. It just kind of says, all right, everybody's expecting a good numbers here, but I think it's going to be even better than what people are expecting. So I think there's room to the upside, even though we're trading at basically one-year highs. Stock is very strong right now. If you look back over the last quarter, I mean, they raised outlook. Their revenue was up 24%. Same-store sales were up 12%. Everything's cranking. In fact, if you go back 4 quarters, the last 4 quarters left.
We hit that resistance again. So if we pull back, Gio, this support or the 200
here, but overall, they're doing really well. And all of the categories that you would think would benefit right now, like beauty, novelty, food and candy, technology, holiday decor, all these kind of stocking stuffer type things, seasonal stuff, they're all ripe, doing well, ripe for the picking. Dollar Tree said they're doing well. They're looking like they're doing well on Five Below. And so, we expect this to be pretty strong numbers. And in fact, when you look at the consumer interest levels line chart just over time, we're starting on a year-over-year basis. We're starting higher than we were last year, and the acceleration is moving up into the holiday season faster than it did at this point last year. So, we're kind of firing on all cylinders here. The only downside is we are at one-year highs, and we've just got a surprise or a sneak preview competitor yesterday that kind of tells us where things are going. But you can see here on this chart, this blue line is web visits and consumer data, and it's starting higher than it was last year at this time, and it's ramping up more quickly than it did last year at this time. So yes, the stock is at one-year highs. It's not at all-time highs though. So I do think that there's room to the upside despite the positive expectations coming out of the Dollar Tree report.
Landon, here's 3 words I never thought I'd say. K-pop demon hunters. This company and their new CEO's been there less than a year, Winnie Park. I learned a new merchandising term today. It's called on-trend merchandising, which she came from Forever 21. She's got her pulse on what is popular and on trend, and they are taking advantage of it. You mentioned Korea. They're bringing in Korean novelty foods and candy and taking advantage of K-pop demon hunters and bringing people into the store to shop for this. You mentioned the same store sales. This stock got creamed last spring on fears about tariffs because they get so much of their goods from overseas. There was a lot of uncertainty, but this stock hasn't gone all the way back to its highs. If you look at a 3-year chart, it's only about 2/3 of the way there. So it's not at all-time highs yet, but boy, this company and this new CEO really seem to be taking advantage of not only the treasure hunt like TJX and Ross Stores, but also this on-trend merchandising that really keeps people drawing them into the stores for the treasure hunt. And your thoughts there?
Yeah, I think so. Look, right now we've got, Christmas coming up this season. Everyone's thinking about going there to buy these little knickknacks and things like that. Decor, stuffing, stockers, things like that. But then, in between seasons, you'll have Easter later, you have Halloween at one point, 4th of July. You have a lot of seasonal type things, but you got to fill those gaps, right? There's not always something amazing to go off of. So on-trend marketing, very smart. There's always something going on, something's popping. I mean, my 10-year-old daughter mentioned K-pop demon hunters to me, and after what I thought, I was like, I don't think it's any good, because I have no idea what it is. It just didn't sound right to me. So I don't think she's going to get into it, but I know a lot of kids are. And if you're into it and you want to go buy something, then Five Below is the spot to be. So yeah, it's very smart marketing. It's basically taking the seasonality of going to the store, and instead of having 5 or 6 of those per year, they're trying to make it a constant thing. And there is no fatigue around it, because there's no fatigue around whatever's hot. Whatever's hot right now will be hot, and so they can jump on that bandwagon. It's really smart. I think it's a really smart marketing play, and obviously it's paying off for them with all the data that we've got and all the data that Wall Street's seen. It's very strong numbers coming from them.
So to quickly catch you up to speed on K-pop Demon Hunters, it's a movie, an animated movie where it's a K-pop girl group that uses their music and their performances to fight demons. So I get what you're saying, because I thought the same thing, Landon, when my son was like, yeah, we watched K-pop Demon. I was like, demon? What? No. But it's not what you think. But anyway, I just want to yield the floor to you. Any final thought that you want to give us, especially when you think about, for instance, an earnings score, because to the point that you made, the stock it's been a big outperformer this year. There are some analysts, some sell-side analysts who've been re-rating their price targets on it to the upside, but I'm curious to know your take when you think about this heading into earnings. What's the
Yeah, so let me paint like the picture around all of the discounters. So going into Dollar Tree, we were only +7, so we were more in the neutral camp, leaning a little bullish, but not much, and you see how well they did. Five Below, we were much stronger. We're at +47, so much stronger expectations coming out of it. For some of our clients, I hope they got in before Dollar Tree reported, but if not, they got a worse price today. And for those wondering, Dollar General is +49, so it's right there as well. I think they're tomorrow morning. We're positive on all of them, but Dollar Tree were actually the least positive, and it had a pretty strong report. So, that raises our expectations. That makes us a little more optimistic. Of course, the downside being so is everyone else, and the stock's up 4% today. So you gotta, pump the brakes a little bit. Expectations are higher. But just like Kevin said, yes, we're basically at one-year highs, but we're only, 2/3 of the way to those all-time highs. So there is room to the upside, and they seem to be doing everything right. All the data is positive, including consumer sentiment, and now there's no more seasonality flux, or there's less because, they're creating seasonality through this marketing channel, through the marketing strategy that they've got. So, we're positive going into it and bullish heading into this report.
It is a fun story. They've got cute tchotchkes in there. All right, Landon, we'll leave it there. That's Landon Swan, co-founder of Like a Folio. All right, for the trading perspective on all things Five Below, let's bring Tom back into the conversation. I know we talked about the Dollar Trees and the Dollar General yesterday in terms of the, kind of what sentiment looks like. Tom, what's your take when you think about Five Below before you guys get into the example trade?
I don't think I've heard Like Folio that bullish on this name, and they're typically pretty positive on it. I think one of the key things, Kevin and I have talked about this before, is the amount of capital required to open up one of these stores is really low across the retail landscape. So that starts to go right into margins. They're profitable immediately when they open. It doesn't take them a long time to open up the store. So that's a positive. And they're expecting another 15% revenue growth rate this quarter from a year ago level. So optimism's high from the street, where the stock's up pretty significantly this year, and from Like Folio. But the option market cap pricing in about a $15.50 move either way in the shares. And based off of Like Folio's data, I think you've got one that sets up with that.
Yeah, I wanted to give myself a little duration on this name in case you don't get that move right away, Tom. So I did something, it's a trade we do a lot, the unbalanced butterfly, but I went out to the January 16th expiration. So I remember, because there's no weeklies here, so I didn't want to do the December. I went out all the way out to January, Tom, 44 days. And what I looked at is the expected move out 44 days, about $26. And so my thought was give ourselves some room on the upside in case it were to rally and have good earnings, because they seem to be doing the right thing. So based on that, went out to the January 16th. I bought the 160 call. Now the stock is rallied. You might want to do something more at the money. Bought the 160 call, sold 2 of the 185 calls in line with that expected move a couple dollars ago, and then I bought the 190 call. So I finished the 1x2x1 unbalanced butterfly, long a $25 spread, short a $5 spread, Tom. I put that in about $8.90. It's trading almost $1 higher than that now, Tom. That shows you what this can do if that stock moves higher. Now, for our viewers, can you adjust the strikes? Yes, of course you can. But for this one, it shows you how much it moves when the stock moves in your favor. It's almost a full $1 higher than where we put it in, Tom.
Yeah, 44 days to expiration. So this is a little bit longer duration than we typically talk about with unbalanced call butterflies or put butterflies for that matter. But let's walk through it. January 16th, 44 days to expiration. You got a month and a half in this position. So as Kevin mentioned, if you don't get the move to the upside initially, you've got duration in this trade. Buying the 160 call one time, selling 2 of the 185 strike calls, and then buying 1 of the 190 strike calls. So in essence, you're buying a bullish $25 wide call vertical, selling a $5 wide call vertical to offset some of the costs on it. The debit you pay is going to be your risk. Kevin mentioned it's nearly $1 higher than where it's trading than what we've got here of $8.90. If you pay $8.90, $890 at risk. If you pay $9.80, $980 at risk. But the profit risk reward setup's still pretty good on this. As Kevin mentioned, you can change the strikes. You could do the 165, 190, 195, and that's going to cost you about $8.50. So you got to keep that in mind when doing these trades because the stocks are dynamic. But if you pay that $8.90 debit, it takes your break even $168.90 to the upside on that one. That's only about $4 above the current share price. Even if you pay a little bit more on a percentage basis, not that big of a move. You can see here the apex of profitability at or near that 185 strike, but because you're anything above that, even 190 level, is still going to be more than a double in profitability on this type of trade. But the apex where you want it to go is about that move that the option market's pricing in for that option series that expires on January 16th. So keep that in mind. But it's a bullish trade, sets up Diane with like Folio's data, but Kevin's giving himself some duration. So you got plenty of time on this one, even if you don't get the move that you want post earnings.
All right, good stuff, guys. We have got the breakdown coming up. We're taking a look at Snowflake. It also has earnings due after the bell. We'll be right back after this short break.
To the markets, the Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall, live on the floor of the big board. Before we get to the breakdown, I'll give you a check on where markets stand as we get closer to the bottom of this lunch hour. The S&P 500 right now has a gain approaching 0.33%. So we're inching higher throughout the session. The Dow right now up by 0.75%. NASDAQ 100 flipping positive, up by just shy of 0.1%. Russell 2000 has gain at 1.5%. Snowflake is set to report its quarterly results after the bell. The street is expecting revenue to check in at just shy of $1.2 billion. Now that would reflect 25% growth year over year. Investors are expected to hone in on its monetization of AI. Time now for the breakdown. For that, we want to welcome in George Silla, senior markets correspondent, to take a closer look at Snowflake. George, this one's been a big outperformer this year. So what's your fundamental take on this one?
Well, you're right. I mean, if you look at the performance of the stock this year, it's somewhere close to 50%. So the other thing is you have to consider the business they're in and the competition or the competitive landscape. I think if you consider the database warehousing and cloud integration business, there's a lot of competition out there like Datadog, MongoDB, which we talked about, has done extremely well over the past couple of quarters. But nonetheless, Snowflake, I did look at the chart over last year compared to some of these other names, including companies like Twilio, for instance. It has actually outperformed all of them. And so I think this speaks to the business itself gaining market share. That's important considering some of the major hyperscale customers they have, Microsoft, Amazon, for instance. Their value proposition has always been separating computing from storage, which is actually more of a value proposition for some businesses like Meta Platforms, which has this separation or agnostic kinds of business from the warehousing components from a computational standpoint. But I do think you got to consider some of these movements in top line sales, which, as you mentioned, 25% close to estimates on 55% EPS growth, because for the quarter they're expecting 31 cents. Last year for the same quarter was 20 cents. But the sales number is quite remarkable. I look back on a quarterly basis, they breached the 1 billion per quarter mark 2 quarters ago. And again, for what it's worth, you can just go back and look at the chart. Since April, it's got 2 gaps higher on the previous 2 quarters. But I think the other thing is you have to consider with this name, fundamentals aside, growth in sales are there, market share growth is there, technology adoption is there, but the valuation is still, I think, something you have to be mindful of, considering, at least right now, based on consensus estimates for 2026 at $1.19, it's trading around 219 times this year's earnings, 2026, so the next fiscal year. And even for the following year, 160 times earnings. So again, these are quite high earnings multiple, but it doesn't necessarily mean the stock can't grow into those earnings effectively, or if earnings start to move faster than the stock price. So again, the last 2 quarters have demonstrated some nice growth, great market share aspects. Net revenue retention rate is still over 120%. That's very positive. Anything over 100% is positive, and anything over 120% is even better. But again, there may be some point some valuation hang up. But lastly, I'll say this: the trend of the stock is positive, particularly in the last 2 quarters. So unless that trend changes, it could potentially just continue from here.
Yeah, and look, the shares are popping even ahead of its results today. So we'll certainly see shares up right now 2%. Thank you, George. As George Silla, senior markets correspondent, with the breakdown on Snowflake. Let's get Tom and Kevin back in here for the example trade approach. So, Tom, you've got the example trade in this one. What's the approach you take in Snowflake, given both the performance year to date and then what George went into about how he's looking at this one?
Yeah, you have to take a look at it. Up 72% so far this year. Got that pop after MongoDB, one of its competitors, had those blowout earnings, and its stock popped over 20%. So you have to take that into consideration that the bar is high, but if they continue to beat expectations, raise guidance, maybe like MongoDB did, maybe it goes higher. Option market's pricing in about a plus or minus $24 move either way in the shares on the stock. And if you take a look at it on a technical basis, the RSI is starting to trend higher. It's only about the 60 level, so not overbought on a technical basis. It did recently bounce back above its 50-day moving average. So I looked at a strategy that takes advantage of vol dispersion between option series in here. And I went out to the December 19th monthly options, so 16 days to expiration. Going to buy the in-the-money 260 strike call, and then against it, in the near-term December 5th weekly options that expire in just 2 days, we're going to sell the 285 strike call. It sets up about with that one standard deviation, maybe a little bit lower, because the stock has moved higher. But it's a $25 wide bullish call diagonal. You're paying roughly, I've got a $12 debit on it. That's where it was trading earlier. It's trading closer to $12.80. Might have to pay a little bit more. But even if you're paying $12.80, it's still about half the width of a $25 wide call diagonal. Kev, when you buy something like this, you're taking advantage of, and the lower cost on it than the $25 width of it is because of that vol dispersion. But you do need a slight move to the upside to get above break even, and you do have the opportunity for one potential adjustment, right?
Yeah, a $25 call diagonal, right? That's in the calendar spread family, but there's a call vertical embedded in this trade. That gives you that 260 to 285 strike differential. Now you're playing the implied volatility that's higher, that lowers the overall cost, but you still need to move to the upside to be profitable. Remember, you're long about 20.5 deltas. You are collecting a fair amount of theta as that front month vol is quite high. But like I said, you need to move towards that 285 strike for this to be profitable.
5 strike worth about $5.50, and it's over $20 out of the money to the upside. So that tells you right there that implied volatility levels are elevated. You're paying a lower cost on it because you're buying a 69% implied volatility in December on that 260 call on aggregate, selling in the near-term options in the December 5th weekly, the 285 strike call, selling on aggregate about 155% implied volatility. So Diane, that goes back to that vol dispersion, but you need to move to the upside just ever so slightly to start becoming profitable on this bullish call diagonal.
Listen, we bring everything today. It's not just the trade examples. We bring pop culture as well with the Five Below and K-pop. All right, that's going to do it for us today on Fast Market. I'm Diane King Hall alongside Kevin Hinks, or should we say K-pop Kevin, and Tom White. Download the Schwab Network app. It's available in the App Store. Tune in 24/7 on schwabnetwork.com. Stick around. You got Next Gen Investing coming up.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com.
2025 kept investors on their toes. Now, get ready for the road ahead. Join Schwab's panel of experts on December 11th for 2026 Market Outlook, your guide to the forces shaping stocks,
local markets, inflation, rates, and more. Hear from experts on where the markets may be headed, spot opportunities, and see what could drive your portfolio next year. Tune in on December 11th at 7 p.m. Eastern on Schwab Network.
I'm Nicole Petalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey. And Alex, another really great session to kick off, of course, our show today is now we're in two back-to-back days of price action in the overall market actually looking similar, with the exception today being really the Russell, which is leading out in front up about 1.5%. So that's our darling of the session. But I will say also notable nod to the Dow, which is also up about 0.75%.
So I'm not going to get into specifics because we're going to talk about this story more specifically momentarily, but one member of the Magnificent Seven had a story came out that kind of questioned AI demand. You saw pre-market the S&P 500 go from about up 20, where it is roughly right now in the futures market, to down 20 just on that headline, okay? A couple hours into the trading day, the company pushed back on that a little bit. It paired its own losses, and the market has recovered. Interestingly enough, though, this goes to show why we spend so much time talking about these AI stocks. When the market was still lower, when I say market, I mean S&P 500, you actually had 80% of the S&P 500 stocks higher. That number is down to about 67% now. So you have less stocks higher on the day, which means more stocks lower, but the mix of those names has changed. And the names that were down are down a little bit less. The Magnificent Seven as an index was down about 0.3%. It's up about 0.25% now. So a long way of saying, Magnificent Seven turned around, so did the market.
And that is a really good way to put it. I think that the heat map really illustrates exactly what you're speaking to. And of course, Microsoft is our real target of a lot of the blame, but still at about 1.4% here, as you can see. But also NVIDIA with some weakness, Amazon, as well as names like Broadcom, Apple, Meta. So still a collective green day, but some of these real heavyweights in tech still seeing some of the sluggishness that has yet to completely shake off in the session. But of course, a lot of trading time left in today. So as always on the show, we'll kick things off with some movers to keep on your radar. Today we have a tech focus following some of the earnings reports we got yesterday after the close. But still have earnings ahead. We'll be previewing Dollar General as well as Kroger into their earnings events tomorrow morning, as well as for FOMO today discussing American Eagle Outfitters, which is seeing a really nice session. We're up now 16.5% in response to some really nice comps, specifically on its Aerie brand. And we'll also discuss the broader crypto volatility, as we've seen Bitcoin as well as Ethereum even make some pretty major intraday swings as of late. And last but not least, we'll close things out with Macy's, which is up about 1%, as we did see some overall volatility and some outlook that is perhaps mixed, but being received as positive, as of course we're up about 1%.
Look, I have no skin in the game in terms of if American Eagle does good or bad, but we talked about that technical setup looking very, very optimistic if the numbers were there. And we talked about so many of the comparable companies, from Urban Outfitters to Abercrombie & Fitch, as examples of sort of those early 2000s and that renaissance of that style brand coming back. I think it's really cool to see that American Eagle is just another example of that. So looking forward to that discussion for FOMO later on. Let's get to like what I think is just clearly the lead story of the day. Right, wrong, or otherwise, it moved the market and continues to be a volatility-inducing part of today. This information story and narrative around AI sales quotas for salespeople at Microsoft. What do you make of this?
Yeah, this is interesting. So such a move is pretty rare for Microsoft. Now we saw first reports that they've lowered their quotas for AI software sales after many, again, as salespeople missed their growth goals in last fiscal year.
And that's the year that ends fiscally for June. So we've already long got these earnings from this.
Okay, that's a good point too, because because everyone's fiscal year is slightly different, as it's always an interesting challenge to navigate. But the information in a report that citing two salespeople specifically in Azure's cloud unit. But this did occur for their Foundry project as Azure enterprise platforms, where really companies can help build as well as just manage AI agents. So AI agents can carry out a series of actions for a user or organization autonomously, but the AI boom has of course presented major opportunity to add layers of efficiencies, streamlining tasks, as companies do build out these agents with the power of these tools to allow their workers to hopefully do more is the end goal. But we know that names like OpenAI, Google, Anthropic, Salesforce, and Amazon have all their own tools to manage these various AI assistants. But the adoption of these tools by traditional businesses has not seen the same surge as other parts of the AI ecosystem. I think because a lot of these applications are like very back end right now. Like not everything is ChatGPT. Like a lot of these AI processes aren't necessarily as I think well understood by the public. So I could see why you could see some sales mishap because you're selling a product that essentially like we're learning as we go.
Okay, so a couple things. Microsoft went on CNBC and said this isn't true. So I think that's a good place to start.
It's a really good place to start.
Beyond that, though, before that even happened, I was on with Nicole Petalides, and I feel a little bit vindicated because Jeffries, I think, emphasized something the same, is one, we've already gotten the numbers for this time frame that we're discussing. So based off that, even if you think it's true, the salespeople missed internal benchmarks, and the numbers were still really, really impressive and appreciated by the street. If you're Microsoft, if your salespeople are not meeting numbers at a wide number, you adjust that for the next year. This is a natural thing that happens. You want your salespeople to have attainable goals. And whether it's, two things can be true at once, I should say. There can be AI demand concerns. There can be a potentially AI bubble. And this can still be a non-story, and I think Jeffries put it even better. They wrote that the information completely missed the point in its own article, and they say, Microsoft has emphasized looking at the scoreboard. RPO growth accelerated 14 points to 51% year over year last quarter, and that the AI demand is still greater than supply, and their own commentary that they've seen from Microsoft and the checks that they have still say that the Copilot demand and adoption is strong. They have a buy rating in the $675 price target. You can be concerned about AI all you want and whether or not this is going to live up to the expectations. I think that's a fair question to ask. But we're looking backwards on a refuted potential story about salespeople compensation. We got the numbers already for the whole thing, and Microsoft was rewarded for those numbers. So to me, this is a non-story.
I completely agree. This might be oversimplifying it, but I grew up in a family of salespeople. My dad and sister are both well-versed in sales, and you could have essentially your company's best quarter, and you could still miss your quota. This is just the nature of sales.
And natural too, if 90% of your people, let's just throw a number out there, are missing, but you're still doing pretty good as a company, that means that internally, maybe product to product, they had things set in a place that didn't make a ton of sense.
Right.
And they're going to reassess that based off feedback they get, because a company that is doing successfully and doing well wants to reward its employees, especially one the size of Microsoft. So to me, I think you start first and foremost that in an emailed statement from Microsoft to CNBC, they said that they haven't done this. So that's the first place to start. From there, we can even ask the question of,
well, even if it was true, is this even that abnormal? I would argue no.
Yeah, I would completely agree, and I would say in no way, shape, or form does this dent any of their narrative. I mean, we saw, to your point, Azure growth actually accelerate last quarter from the prior quarter, and now posted 40% growth in its last reported quarter. So it's not like we're seeing any lag from the fundamental updates the company gives.
And at some point, you just gotta say what they're doing is working.
Yeah.
And so maybe they made some of these changes, maybe they didn't, but they got off to a really nice start for their next fiscal year. And they did pretty well last year. Oh, and the year before, they've done pretty well too. So Microsoft is just objectively a leader in this space of AI. Oh, and it has like one of the most resilient, consistent business models on the planet with everything else it's working on.
Right, and I feel like we're so quick right now, this market is so quick to punish based on these like HR-related headlines. Like, we talked about yesterday with Apple and their AI chief, departing and retiring. So it's not like he's departing for...
This is a great point. And I'll even say this too. This is nothing against the team at The Information, but like it seems like with this particular publication, we get a lot of these kind of negative, tilted headlines, and then like what they say ends up not being exactly the full story. And it seems like it's happened a few times with Tesla. It's certainly now potentially happened with Microsoft. And again, if the market believes it and the market reacts on it, it's a news story. And that, I think, is first and foremost. But when the company comes out and pushes back and the market also reacts to that, that's also part of the story.
Yeah, and so it's actually surprising to still see shares lower, but I mean, a modest decline at that. We are over these HR-related headlines. Give me the financial updates, which I frankly think are far more important to the health of the AI trade. But to move on here to Marvell, which had a really nice reaction to its earnings, up 5.4% here in real time. The company has been really positioning itself, though, as one of these leading data infrastructure suppliers. And they've seen a really nice track record now of capitalizing on various AI tailwinds. And also the fact that the data center build continues to accelerate is also a hugely bullish catalyst. So, I mean, Marvell does provide high-performance products. So, mind you, in the world of connectivity, storage, networking, and other applications like hard disk drive, as well as data center switches and Ethernet switches. But their products are mostly used in the very lucrative data center space, as well as high-performance bandwidth and telecom. All of these markets have seen phenomenal growth with really no signs of that slowing. And I mean, it makes sense. Data center right now is one of their largest businesses within their mix, representing roughly 75% of their total revenue. So they're a notable vendor, and we continue to see, thriving momentum, 38% year-over-year growth in their third quarter, and management's outlook for this segment is also continuing to be optimistic as they expect actually their data center revenue to accelerate now in the fourth quarter. I mean, I think that's the story. Data center, any tied to data center and accelerating growth is a recipe for success.
Yeah, and they announced the big $3.25 billion cash and stock deal to acquire Celestial AI, which is a company, this is way over my head, but I guess uses light instead of electricity to transfer data. You can imagine that would add a tremendous amount of efficiencies if that technology could be honed in and scaled out. But this is a company that is very confident, textbook confidence in terms of what they've projected through their commentary and their outlook, but also is playing offense with acquiring companies that are within this space that could potentially be game-changing what they're doing technology-wise. So I think this is about as straightforward and cut and dry as a positive reaction in response to an update as you can get.
I agree, and to speak to the Celestial AI acquisition, so this is becoming an ongoing problem where the infrastructure is not able to keep up with the now speed and power required. So copper has been historically used, but they're struggling to utilize that because basically it's not powerful enough for these low latencies.
And it's getting more expensive too.
And it's not getting any cheaper, so perhaps good to diversify other solutions away from the traditional legacy infrastructure that we've, of course, known very well. Now, our next name today is Okta, and Okta, I would say, was not looking so strong into earnings, was not looking so strong this morning, and now, go figure with the overall market, it's up about 3.8% here. So, a very different report than when I was looking at things when we saw shares somewhat creeping lower this morning. But all that to be said, delivered the top and bottom line beat for their most recent quarter. We did also see, the cybersecurity company reported revenue of about 12% 5% growth year over year, as subscription revenue also rose another 11%. Now, net cash also improved from a year ago, and they ended the quarter with roughly about $2.5 billion in cash, as well as cash equivalents. So, highlighting the continual identity governance and strong cash flow segments of their business, as AI agents, they said, are really redefining how organizations work and securing technology, the overall technology transformation. And they did also note they're seeing more and more of these large customers as big enterprises are definitely shelling out cash to remain secure in the AI build.
Yeah, this is a situation too where this is very impressive controlling of the frame by the company's leadership, particularly CEO Todd McKinnon. We know that there's AI concerns, and we talk about it with names like Salesforce and names like Adobe and what AI is doing to perhaps upend the role that some of those companies and that software plays within design or CRM software. Well, CEO McKinnon for Okta has said essentially, maybe you're thinking about that all wrong. If you think about the need for those things pre-AI, think about one, how much better software will be once there is AI, and you have no less need for security when AI is accessing all that corporate data and security. You need better cybersecurity. So I thought it was a really, really brilliant way to take what is being perceived as a negative in the moment around some of these software-related stocks and reshifting that focus and frame and basically saying, or maybe you're wrong and you're not even thinking about why it actually is going to be more important going forward.
Yeah, I also really loved that reframing of that narrative, and I think it's such a good point because, I mean, like technology, basically they're saying like legacy technology applications could be phased out, and they were like, absolutely not, they just need to be further improved, which I think is such a good point. Now, our last
thing real quick, because this will tie into Oracle as well, which is, the more we do this, the more I'm starting to just truly understand and realize the importance of the story when it comes to equities. You want to be into math and numbers and stuff, fixed income and bonds, that's your place. And that's why it's not as exciting and fun to talk about. But stocks are stories. There's a reason that you can still have people like, Gordon Johnson say Tesla is worth, 10% of what it is. It's because the story is what makes Tesla valuable. And the same thing goes for these companies like Okta, and good CEOs and good leaders know how to frame that story.
And you see it more evident than ever, I feel like, in the last several earnings quarters, where you have a CEO that comes out and has like a good hold on their company and a good expectation for the future, a good handle on
Dr. Karf at Palantir.
A great example. I mean, talk about someone that comes out guns blazing. The street usually reacts pretty positively when it seems like you have strong conviction of your overall company. Now, our last name today is Oracle. Oracle not with any earnings specific news, but we did see Wells initiate coverage on stock. $280 price target, believing they will emerge as a leader in AI in the, we love to say it, super cycle. But the company has booked nearly $500 billion of AI deals and is in what they call the pole position with key accounts like OpenAI, xAI, Meta, and TikTok. They did also point out the stock has contracted now about 42% from their highs, so perhaps seeing an opportunity here given some of that weakness. Now down about 40% from their highs, but still about 23.5% this year, and I will say that I know that the debt obligations is a concern amongst the sell side, but Oracle is a company that has been so established through every type of super cycle, cyclical nature that we've seen in technology, and they've been able to withstand every storm.
Yeah, and I guess the only thing that I have against this thought from Wells Fargo is I feel like this is something that we could have read 6 months ago and it would have been a little bit more useful.
Right.
But I'm not going to push back on anything they say, and if they think that this pullback presents opportunity, all the power to them. Certainly a stock that's having a nice day today, up 2.5%.
Yeah, and I actually misspoke. So we do still actually have earnings ahead. December 8th after the close is their second quarter report.
It's going to be an important one.
Yeah, so it'll be one of our last major tech heavyweights reporting.
I got the 10th.
Okay, that is probably...
Oh, that's Fed Day, too, so that's going to be a big day next Wednesday.
Good, so we have some things to look forward to on the calendar.
Week from today.
Yeah, I love that. Love to have earnings to look forward to. Now, we'll leave it there for the top of our show today. Now, coming up next, we'll dive into earnings that are still ahead, both in the retail and broader, I'd say, grocery space. Dollar General, of course, as a dollar discount chain, as well as Kroger, one of the nation's largest U.S. grocers.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl?
Schwab, a modern approach to wealth management.
Whether you're a bull or bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Welcome back to Next Gen Investing. It's now time to dive into the charts with, of course, our chart master himself, Rick Ducat, and we're talking two names with earnings out tomorrow morning, those being Dollar General as well as Kroger. And so, Rick, when we talk about these names that are very, of course, consumer-facing, various price points, but also, I would say for the majority of Americans, both of these companies are staples. I mean, you have to go to the grocery store to feed yourself. Dollar General is one of the largest U.S. retailers by store footprint. So these names both have a vast reach into the average American life. So we'll start off with Dollar General. I know Dollar Tree reported, I still mix those up, a pretty strong report, but did say that they're exposed to a more low-income consumer, which is still feeling the heat from price increases. So what does this chart tell you? Because I will say, from revisiting some of these dollar discount stores this morning, things look a lot better than I was expecting.
Yeah, so this is a chart that's showing some interesting resilience here. What I mean by that is, if you were to backtrack a little bit here, take a look at this level near 97. That's around where we had our highs here, we had our breakout point, and then our subsequent low. After our gap up from earnings, it once again came back into focus two more times here. So that level was a notable supportive point from which price has bounced and started to form this upward sloping channel type shape between our two white dashed lines here. Also, take a look at this green line, 106. That same gap up we were just discussing, that was the low point after the gap up. Support, support, and then resistance. Now, once again, most recently it was resistance as we paused, but we have surpassed that level now. So still traveling within our channel, still have our eyes set on 116 as the high point here. 116.30 was the best close that we've seen so far. When we do look at our moving averages here, we can see that they're clustered together. Our yellow 21-day, orange 63-day, purple 252-day exponential moving averages are grouped rather tightly together. More recently, our faster yellow 21-day is overtaking its slower moving peers. But cluster moving averages suggest lack of trend directionality, of either zigzagging price activity within a range or extremely choppy movements that can't really find a strong directionality one way or the other here. However, we can see that momentum is rising here. We are close to the overbought level. So if earnings do come in more positively and we push to the upside, look for that entry above that threshold of 70 as a sign of potential bullishness further. So finally, volume profile, our study that shows where the heavy trading activity took place, shows that we are pretty much right at the point of control right now. That comes in just shy of 112. So we see that there's heavy trading concentration up here at these elevated levels. So a push above those levels and hanging on to that point would be noteworthy. We can also see our teal line here, linear regression line of best fit based on closing prices, very close to those highs, coming in at 115.50. So there's some important levels to push above, very close to the current price activity.
Okay, yeah, and I think that expectation is also pretty high for, I mean, a company that has been, on a pretty nice run as of late. So all that to be said, now as we do think through trading Dollar General here for example purposes, not a huge volatility play historically on the back of earnings, but hey, retail has been an interesting environment to try to gauge some of the price performance in.
Especially like discount retail. Now I know this is more of sort of a convenience store for rural communities generally than it is like a TJX or something else that's a little bit more of a value-oriented apparel and merchandise store. But let's say you're leaning into that story. We're just talking about the importance of stories to stock price performance, and you want to look at a bullish example, perhaps a move to the highs, once again, which are just shy of 118. I looked at a 118 call calendar, selling this Friday, buying next, so that's the December 5th, December 12th calendar spread. 118 is the strike. That would be right at those highs, which I think were like 117.90 or so. 50-cent debit, let's say that's how much you spent on this one. Your max loss would be $50 per spread. But the nice thing about this style risk profile, Jenny, is we talk about the customization that's possible with it, and the fact that the more right you are in your projection for where a stock may or may not be, the better it does. So in this case, a move to the highs is the idea. If that happens, you can see that's the peak of the risk profile.
Yeah, and a pretty straightforward, of course, example trade here, looking to see that movement on the back of earnings tomorrow morning. But now to shift gears into Kroger. And Kroger, not a true discounter, but definitely a staple, and definitely one that does still have, I mean, a good inflationary gauge, frankly. So seeing a bit of a different performance than, say, Dollar General, but still actually up on the year by about 9%.
Yeah, what's used to be more of a grind upward has kind of reversed course and switched more to a grind to the downside here. However, we did seem to be breaking out of our rather widely ranged channel boundaries here, starting with our high point 74.90 and traveling lower to connect these highs here. But look for now, it's looking like we have temporarily broken to the upside above this level, but we have not taken out those relative highs near 68.36. We came close, but didn't quite make it there. So on this chart, we once again have some important supportive horizontal levels like our last chart here. First, 62.50 was some significant lows here. Above that, 64.50, a repeated series of lows once again. You can see several more times that these two levels have come back into focus, including quite recently in mid-October and mid-November here. So some areas to watch to the downside, to be sure. Upward sloping short-term trend line here, still in white, still something to consider going forward. So when we do look at our moving averages here, we have a similar situation where the moving averages are very tightly clustered together. In this case, it's between about 65 to 67. We have everything lining up. So it's common for stocks to show slowing momentum as they head into earnings, a known event risk type situation here. So RSI does reflect that, our measure of momentum, trending lower here on one hand, but also trending higher off of these lows. For right now, near that 50 midline though, so not really a very strong lean one way or the other. When we look at volume and standard deviation channels, our volume profile study in this case shows the point of control is a bit below current prices here. It lines up quite closely with our purple 252-day EMA near about 65.50, so that would be a key downside area to watch out for. You can see also volume drops off significantly to the downside until you get here near about 61 or so. To the upside, another pocket of volume here near 67 stands in the way of taking out those old relative highs just above 68.
Okay, yeah, and Kroger, of course, some weakness today, modestly. We're down about 0.5%, but Kroger, fun fact for you all, has just shy of 3,000 stores in the U.S., whereas Dollar General has over 20,000. So very different size retailers as far as store footprint. But thank you to Rick, of course, for bringing all the technical help today. And now as we do think through trading Kroger for example purposes, walk us through your thinking.
I wonder how many Dollar Generals you can fit inside the average Kroger store, though. Different stores, no doubt. But
very different stores.
Neutral strategy, as you guys both talked about, not a stock that typically moves a ton around earnings, but it's all relative, right? That's going to be reflected in the implied volatility and the options prices. But a neutral range-bound strategy that involves selling the straddle right around the current share price of 67, but then also buying wings. So it's technically an iron condor, but sometimes it's called an iron butterfly as those two short strikes overlap. So it's the 67 call and puts being sold in this Friday's December 5th expiration. And then I, for this example, looked at $5 wide wings. So that would be a 72 call to the upside and a 62 put to the downside. And it creates this risk profile that looks almost like a pyramid, where much like the call calendar that we looked at in the last strategy, Jenny, it does do best when you stay at the strikes selected. So in this case, at 67 or unchanged. but it's a little bit more linear in terms of the performance theoretically, based off of, if it's at 66 theoretically, you would, make $1 exactly less. And so with that, break evens, if you did $3 credit here, would be 64 and 70. So you have a $6 wide window where it could be profitable at some capacity at expiration. And then of course beyond that, it's a $5 wide spread. Net of the $3 debit leaves 2, so you have $200 in max risk. But you're going to need to move above 72 or below 62 for that to happen. More than likely, if this trade were to work out, it's not going to perfectly pin 67, but it would end up somewhere in this area, and most traders would look to then try to offset it with an opposite transaction before expiration and lock in profits that way, if possible.
Okay, and like we say with this example trade, highly customizable, but does give you at least a bit of a flexible range, of course, to assess once we get those numbers tomorrow morning. But we'll leave it there for Chartmaster today. Coming up next, it's time to dive into American Eagle Outfitters, as we are seeing a 15% jump, the name smashing past its previous 52-week high on really strong momentum led by Aerie.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Welcome back to Next Gen Investing. It's now time to discuss American Eagle Outfitters with a 15% spike in reaction to its third quarter earnings. And joining us is Marley Caden, host for the Schwab Network, for some more insights on why this name broke through, its 52-week high easily, and some really strong comps, particularly in Aerie. So walk us through the report.
Yeah, it's a really strong report. They beat on their third quarter expectations, both the top and the bottom line for American Eagle. EPS came in at 53 cents a share. That was better than the 44 cents that was expected, also up from 41 cents a year ago. So improvement across the board. Revenue at $1.36 billion did top expectations for $1.32. That puts their sales up about 6% year over year. Now, this was the first report that we've got the full quarter to see the impact of this splashy campaigns with Sydney Sweeney and Travis Kelce. And company-wide, American Eagle said that it saw its comp sales grow 4%, which was better than the 2.7 that was expected. And while they topped expectations, like you just mentioned, Jenny, most of that was primarily driven by Aerie, which saw their comp sales rise about 11%. The revenue jumped 13%. So that's a very similar story to what we saw when Abercrombie & Fitch reported with their Hollister brand. So their more teenage-targeted, younger, slightly more affordable brand being the primary driver in this group as well for American Eagle. As for those campaigns, that was a big focus last quarter. There wasn't a huge amount of impact in terms of the top and bottom line with those campaigns. So this one, we actually got it. The company said they did attract more customers. They brought more people in, created more attention around the brand, but the results did not really drive revenue. They were not a major revenue driver. It did get them talked about, didn't have a major impact on profits either. So that was an interesting thing to note. Their operating margin came in at 8.3%. That was better than expected, and we've seen how important the margin story is here this quarter. But beyond those marketing campaigns, American Eagle saw record revenue in its third quarter, and they have strong momentum that they say carried them into the current quarter, where they had what they called a record-breaking Thanksgiving weekend. Now, we've already gotten some of these numbers from Thanksgiving, from Black Friday. We got Cyber Monday today, an early preliminary report from Adobe. Lots of record-breaking numbers, exceeding expectations. American Eagle staying in the same camp, saying they're bullish coming in. They raised their full-year forecast after those better-than-expected setups. The big raise here that I think is a big driver of this big 15% move to the upside is that they are now predicting their fourth quarter comp sales, which is their most important metric, to be between 8 and 9%. That's about 4 times better than what the street was expecting. So this is not just a slight improvement as expected, or we're expecting a little bit more shoppers, a little bit more foot traffic in stores, a little bit more online. No, they're expecting a massive jump in their business in the holiday season.
Marley, you and Jenny are both far more fashionable than me, but at this point, is it safe to say that we're seeing a thematic renaissance and return to these early to mid-2000s brands? I mean, it's AEO, A&F, Urban Outfitters. I'm sure I'm missing a few, but like, this seems cyclical at this point.
It certainly does. It's funny, I remember like being in high school and my mom being like, I wore that when I was your age. And I was like, no, you didn't. And now I'm talking about the companies that I wore in high school, and they are coming back around cyclically and also releasing the exact same clothes.
I know, I need to just park some in the closet and just hope in 20 years.
We just need to box them up. Someone get like a Sterilite bin, we'll put them all in, and then we'll pull them back out, and they'll be the same exact clothes with the same exact year on them. But it is something that we're seeing pretty much across the board. People are driving back into this. This Gen Z group is really drawn to what appears to be the millennial aesthetic. And I can't really phrase it any differently because it doesn't look like they're doing anything differently.
Is it also safe to say, guys, that these are accessible brands? I mean, price point wise. Like, it's perceived as quality enough, but we're not talking Louis Vuitton or even Lululemon in terms of price point. Not to say Abercrombie or American Eagle are cheap, but they're not luxury goods.
No, they're mid-level retailers for sure.
Yeah, and I would say definitely right now, if you're that bargain hunting, treasure hunting type of consumer, which it's all we talk about, you can access a lot of these brands for various price points. I mean, there's a definite, I think, ease of access to, a more affordable brand, which we're seeing. I mean, that drive not only just strength at your Abercrombie's, your Hollisters, Urban, Gap as well. I mean,
I forgot Gap.
Gap, the sweatshirts.
Old Navy.
Yeah, like those OG sweatshirts that just say Gap on them are coming back. So I have a note to the Gen Zs that are always critical of us millennials. I'm like, you seem to dress like us, though.
And then it's like a mix in, two guys, of that treasure hunt at the Nordstrom racks and the TJ Maxxes of the world, where maybe you're mixing in a little bit more of your entry-level luxury goods through those type of purchases in the off-price space. So yeah, it's fascinating, but at this point, I'm with you. I don't see how we can't call this a theme when it's this many of these different names that are similar enough, but also different enough, and they're all doing well.
And I think, gosh, like we talk about like consumer confidence falling to, years lows, and just consistently, and yet we continue to see certain retailers outperform. So it's not like it's been this really disappointing quarter for retail across the board. I feel like all we've talked about are some of these moves to the upside and names that we weren't expecting.
Well, we continue to talk about this bifurcated economy, which does appear to exist, but it is interesting, as we look at some of these higher end retailers and they're saying, oh, well, we can keep our prices where they are. We don't need to offer sales. We're not offering deals for the holidays because we simply don't have to. But then we've got these retailers who are performing well at the mid-level, but then we've got companies like Dollar Tree who are also performing well for both the low-income consumer and also saying that they're bringing in a more affluent consumer, which is the same thing that Walmart said. So while we are seeing a bifurcated economy, we're seeing spending across pretty much every part of the letter K.
It's a very good point. Yeah, for all the concern and the doom and gloom about the economy, it doesn't seem like retail has painted that same picture. But as we think about now trading American Eagle Outfitters, which I have to say, I want to call this Abercrombie & Fitch so badly. It is not that. But as we think through trading this day, we have a really nice, reaction to earnings, and now considering this move, I mean, we've sort of reset now even the high end of expectations.
Yeah, we talked about this yesterday. If there was a fundamental story behind this, the technical setup was there. And if you're just looking at those two, kind of potential factors as to what would drive stock price, maybe you leave and you come in today pretty optimistic that this could continue. And so I looked at a January 16th, 2026. That's just the January monthly cycle. That leap expiration, and it's a call vertical spread that's meant to represent sort of one-to-one risk reward here. It's a 21-26 call vertical, looking for a 250 debit. If you're able to do this, interestingly enough, it's buying premium, and there's still potentially positive time decay because your break even would be 23.5. And the current share price is 24. So you actually have a little bit of cushion to the downside, even though your risk reward is equal. And it's a stock strategy or an option strategy that benefits from a stock moving higher. So bullish strategy, slightly positive time decay as structured if priced out at $2.50, equal risk to reward, and does well if this move continues to the upside with it max profit peaking out at 26 and the max loss below 21. Again, that break even 23.5. Risk 250, chance to make 250, guys.
Yeah, and hey, hanging on to a 15% rally. I was talking about this name pre-market, and I was like hesitant to say that we were up 15%, but we have held these levels pretty much throughout the trading session. So appreciate it to Marley Caden for all of the breakdown on American Eagle's really banner earnings report.
Oh boy.
Now coming up next, we'll dive into the latest on the world of crypto as we're seeing Bitcoin futures actually up 2% here in real time, surpassing that key 90,000 level as we are recovering from lows that we had not seen since April. So a pretty nice recovery underway.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left turn, please. But there's a Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
It's the best way.
Look it up here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Morning
The ones for
movers
20
bring
bucks are for the
traders the biggest
desktops.
headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, morning movers only on Schwab Network.
Welcome back to Next Gen Investing. It's now time to discuss Box earnings, as this name is up now 6% on the session. Joining us now is Diane King Hall, the host of Morning Movers. And so, Diane, I will say, better than expected third quarter sales, but I've seen a lot of mixed commentary from the sell side. So walk us through this report and some of the expectations and now commentary regarding this report.
Yeah, I saw similar in terms of the reaction. Investors do like the results overall, though, at least in terms of today. And the gains today take the stock positive for the year. But we'll see where momentum goes from here. They did do better than expected on the top line. Earnings came in line with expectations. Earnings came in at 31 cents per share. Now, even though it was in line with estimates, it is down 31% year over year. Revenue coming in at more than $301 million. So that was a solid beat there and up 9% in terms of revenue growth there. Net retention, more than 100%. They had expansion of clients and pricing. Billings were up 12%. Remaining performance obligations up 18%. So that obviously shows some healthy demand in the pipeline there. They highlighting a strong customer spend. They talked about demand growing for AI-driven use cases like document extraction and workflow automation. They talked about their integration with a lot of the heavyweights. They talked about this on the earnings call. Aaron Levy, the CEO, talking.
Got my ukulele back.
It sounds so fucking weird.
the fuck? Some bitch didn't turn it up. No, I didn't tune it. $10. Old Washboardjim is a badass. Well, I got home in my, I got home. should have got some picks, damn it. I didn't get no picks. My ukulele is fixed. Well, we're at $10. The 6850s. Called them out. At the bottom, yeah. It opened up with a double bottom and went sideways for a bit. Okay, I can play with that later. This is my ukulele. I've played the hell out of this thing. It's an electric Kamoya, built in Hawaii. Kauai, Hawaii. Runs about $450 when I bought it 20 years ago. Well, you guys can't probably see it. No, you can't. There it is. Bands I played with are all signatures on it. Well, I hit the jackpot today on the SPX. What time is it? It's 8 minutes to 2 Eastern time. George is talking about Macy's.
They beat that, coming in with an adjusted profit of approximately 9 cents, and that was quite a bit higher than the 4 cents they published last year for the same quarter. In sales came in slightly better
took a
than the
nosedive.
estimates at $4.91 billion versus $4.61 billion. But if you look at that sales number, it was barely higher by 0.2%. But the kicker is, if you look at the guidance,
Oh God, that'd have been a buy signal this morning.
they actually didn't increase their revenue guidance by very much at all. In fact, if you look at the high end of their guidance for the fiscal year, it's $21.63 billion versus 21.48. That's basically less than
Still a lot of money.
1%. But the EPS guidance was quite meaningful, higher by about 7% to, on the high end, $2.05. Now it's actually $2.20, so they increased it by 15 cents. And for the quarter as well, this is meaningful. They reported system-wide same-store sales at 2.5%, and including merchandise licensing comp sales, that was around 3.2%, with Bloomingdale's actually demonstrated quite nice comp sales at close to 9% and 8.8%.
George, you mentioned a lot of the names that have done well in similar spaces, whether that's a TJX, whether it's some of those brands that are making their resurgent moves here in 2025. At some point, is the market telling us something that we should be listening to? It seems cyclical. It seems like there is a rotation in this marketplace into this theme. Is that fair to say at this point?
Oh, I didn't get coffee.
Absolutely. It's quite clear. One of the things I talk about is maybe generalizing investing and avoiding becoming myopic. In other words, very narrow focused. It's hard to not do that considering the movement in capital associated with AI technology, but there's always going to be industry groups and sectors that are moving. And this is a narrow industry group that you wouldn't think be doing well considering some of the challenges, perhaps the labor market, debt conditions at the household level are high, and consumers maybe a little bit, gun shy in terms of going out and shop. But that's not to say that there can't be movement in an industry group or a sector based on institutional flows. That's basically what we're seeing here. And lastly, too, trading is a lot of times just based on technicals and reasoning behind them. And if you go back to Macy's last quarter, the reason I brought it up again is that it gapped higher above a high-end trading range of $15. And the moral of the story is when you see gaps higher, that becomes something that from a visual standpoint, people don't buy into because they're not trained to buy at a high price, but gaps higher above previous trading ranges signify strength. And since then, the stock has gone from around $15 to $23, which is a pretty nice return in the last 5 months.
Yeah, and a lot of these retailers have frankly just been real surprises to the upside, which I think is just, again, hugely encouraging, especially when you have consumer confidence just continuing to wane. But, the numbers tell us something different. So we really appreciate that, George Tillis, for all of the breakdown on Macy's most recent quarter. And Alex, as we check in on things here, we're pretty much right where we started the show, but still firmly in the red. And, most notably, actually, Netflix, which I know isn't one of our Max 7, but still seeing that weakness today in Meta, Microsoft, as well as Nvidia's down slightly on the session.
Yeah, a little bit of equal weight out performance. And while we just listened to George tell us to not have a narrow focus, it's all Mag 7 all the time. And Mag 7 as an index really turned around intraday and powering the comeback that we've seen in equity markets.
Yeah, you have to give credit where credit is due. It's still the most, I'd say, significant portion of the overall market right now. But we'll leave it there for Next Gen Investing. For this Wednesday, we have the watch list coming up next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources
making some coffee
from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
If I don't want to start learning today, you got a problem with that?
Welcome to Schwab Network, where real-time...
Nicole looked hot today. She exposed a lot of cleavage. I think that was a little bit too much almost. A little bit overboard. Looks to me like coin bounces better than Mr. when it pulls back. And Google breaking out. Meta's had higher highs for the past 3 days, higher lows and higher highs. Meta. Then China, we got Baba going sideways. All of them are going sideways. And Tilray pulled back. There's Hot Lips.
Ahead. Join
Oh,
Schwab's
that's
panel of
commercial.
experts on December 11th.
That ain't gonna work. QQQ double top. We've got new high on SPY and new high on the SPX for the week. And we're pulling back to support, so it might be one to watch here. 3 black crows with a tweezer bottom. Interesting. We failed the 63, so we could come back here and do a yin-yang. And then that still keeps it bullish at 68.49.27. I love you, Nicole.
In fact, we're right around session highs. We have a lot to discuss. The AI trade, that continues, and it's dominating the markets. But what's the potential going forward? Or
it'll always dominate.
AI bubble. One of our guests thinks
Oh,
so, and we'll
bubble.
explain. Also, the
Bubble
Fed.
my ass.
Okay, the Fed's cutting rates next week, most likely. We're at almost a 90%.
How long have they been saying bubble? About ever since Trump been elected. Even about 3 months before that. They're just not getting their way. Not with me on the floor. Now I'm going to go put my water in my coffee and let it soak for 10 minutes. I did have an extra coffee thing. I forgot, that was from my last one. Then I'm out of coffee completely. I need to write a song. I'm out of coffee. I have no momentum left. I got my last cup of coffee in my shelf. And when I wake up in the morning, I won't have no coffee left. It's a sad day at Washboardjim's house. It's a sad day. He's playing with his mouse. SPX just jumped $200 right there. 3 black crows with a tweezer bottom. Unbelievable. Let it go to waste. Oh, you dog. In case you don't know who I am, I'm Washboardjim, the trading strategist behind the Sneaky Snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. And right here we had 3 black crows with a tweezer bottom, one of my signature plays. Right there, in and out. 3 black crows, tweezer bottom with 3 white soldiers. Do you understand? Let's hope so. Jim, I was told that the 3 black crows are bearish. Well, 49 out of 50 times they reverse. Did you know that? Yep, they sure do.
As we get to the next phase of AI, there's going to be winners and losers. And some companies and their new innovation may hurt other companies. Even though Salesforce claims they are all committed to AI and doing what they do through AI, the stock price, the performance of their stock says something way different. So the bar is pretty low going into the earnings, but they've got to show that they're monetizing AI, and this is a company that still has that moat around their business and what they're doing. There's a lot of questions out there, Nicole.
All right, good to see you, Kevin Hanks, live there at the CBOE, full of action. Okay, well, look, I mean, things are looking pretty good. We're up 450 points on the Dow. We're up, I was going to say 6 of 7 trading days now. I can say, one more because now we've upped arrows. I don't need to do the math. Yeah, and so I go to you. David Waddell is with me, CEO, Chief Investment Strategist at Waddell Associates, joining me. And I do want to talk about Santa Claus Rally and all these things. But the first things first, and that is the AI bubble. And you
Shut up.
There is an AI bubble.
No, there's not.
Absolutely, David Waddell wrote. Why?
Well, I mean, it would be kind of awful if we didn't have an AI bubble. I mean, every time you see some sort of technological revolution like this, be it railroads, be it electricity, be it...
Oh. I think any kindergartner that's traded for 5 days could figure out, and that'd be one of the first lessons I would teach them is about bubbles. There's always a bubble. I mean, in everything. But I saw many of them. I saw many of bubbles. I've seen it in the car industry, in the EV industry. I've seen it in the cannabis sector. I've seen it in the .com era. I've seen it in healthcare. When Obama became president, and he was working on the healthcare thing. I've seen it in my ex-girlfriend's underwear. I've seen it. She had a bubble butt. Of course, these stocks but tech has always been good. Tech has always been the best sector for me to trade in. Tech is my #1 sector. What would be the next bubble? This bubble, I mean, we've had a good run, but the AI bubble, the next could be like robots or quantum or, I mean, there's always a rotation into a new bubble. We saw quantum stocks run from $5 to $10 all the way up to 50 here this year and pull back again. I don't want to listen to these guys have been calling a bubble for about 6 to 8 months to a year almost now. Actually, it's been a year. They were saying, well, the market's up 40% in the past 2 years. It's bubble time. And it pulled back for 6 weeks. Then we created new highs. This one's probably been the strongest one though. But I'm not going to call it a bubble. And what Mr. Hickey said, that the strongest survive in a bubble. So you'll have your NVIDIA, your AMD, your TSM. Microsoft's probably way overbought. Tesla ran from, during the EV sector, ran from 187 all the way to $2,200, and every single frickin' day they were saying Tesla's in a bubble. When it was at 500, when it was at 300, 500, 600, 1,000, 1,500, and it ran all the way to $2,200. And then they had a split. And that Burry guy come out here and said that Tesla was way too high. And he said, when he said that, the stock dipped for a little bit and then reversed back up. It took him years to finally realize that Tesla wasn't a car company. It was more of a tech company. Coming close to a double top here, folks. This could be it, and then we'll have the shakeout. $68, $58, $03. I'm gonna go get my coffee here in a second. One of the worst stock sectors is apparel. I never did like trading apparel and oil. And the target got pretty cheap. I bet you, yeah, it did bounce up. See, I called this little woke stock a bubble. When it was at 268 double top, it became a woke. Now we're down here where it's cheap. Actually, it's at a pretty good support right now. We got triple top breakout, pulled back to the resistance level, may become support, and here we are. That's at a pivot point. Last week. Tilray's had splits. This one run to $300 when Vegas and I called it out years ago. You called out for 20 to 300. And it just had a split. It's at a double bottom, but I don't know. I don't know if this will hold. And what about an AMC? Did that sucker ever bounce? Nope. GME. Yesterday I was looking at it. got Boeing. She had a correction today. Yep. Now here's a trick. With that big breakout, so you want to go to your Fibonacci. When you have a big breakout like that, take it from the high and go from the bottom of the breakout, and boom, right to support. That's kind of this is what you want, kind of setup you want to do when you're trading a huge breakout like that, like what it had yesterday. I would have took this trade. Tweezer bottom on the 30-minute, 3 black crows, 3 white soldiers. I'd be out of this trade right now. I'm gonna go get my coffee. But on a crappier stock, I'd almost wait for a 50% pullback. But on Boeing, Jimmy's coffee.
Option activity in this one on this pullback today, and maybe a trader trying to take advantage of a bounce, or hey, they're willing to buy the shares if the stock continues to move to the downside. This was on the February monthly options, so you've got about 79 days to expiration where traders sold some puts. They sold the 88 strike puts, over 7,500 of these this trader sold, collected a credit of $1.80. That's what they can make on this trade. You see here from the risk profile, they can collect that $1.80 per contract that they sell with the break even all the way down to 86.20. That's where they start to get hurt. Or if the stock goes below 88, that's where they would buy the shares. That's about a 16% discount to where the shares are currently trading here. So maybe this trader is taking advantage of the higher implied volatility and the pullback that we've seen, basically sticking their foot out and saying, hey, the
sticking their foot in their mouth.
We'll get to keep this credit that we collected. Or, hey, if it does continue to slide over the next basically 2.5 months, we're willing to buy the shares at that 86.20 break even in this one. Call volume and put volume, it's about 3 times normal daily average volume. So a lot of activity today, but this trader selling some cash.
Okay, prepare ye.
With the expectations we're going to see a bounce, or hey, they're willing to buy the shares if it keeps falling.
All right. Well, you know, and it's rare. I did this story yesterday, and what's interesting is how they're feeling bullish about this name. And part of the tweak with the second round of offers, Netflix actually was, the original offer was a lot of stock, and now they are doing mostly cash, and that's a key part of the new deal and newest offer. So that shows that they have a good amount of cash on hand. Maybe someone feels bullish about that idea. Let's talk about Dollar General, which does report its numbers tomorrow. Some of your thoughts.
Yeah, getting a little bit of a lift today, probably on the back of those Dollar Tree earnings, which were pretty good. Dollar Tree saw its highest same-store sales growth in 13 quarters. So maybe that
It's a precursor to what we're going to see for Dollar General when they report tomorrow morning. Stock's up about 46% so far this year. Option market priced in at about a plus or minus 7% move in the shares, just over $8 either way in this. Estimates for revenue stand at about $10.6 billion. That's about a 4.2% increase from the same quarter last year. And the footprint that Dollar General has, you don't realize how many stores they have. I believe it's like 15, 16,000 of them. So they've got a wide footprint in the low-cost entry point. So they're getting sales from the low-end consumer, but then also the higher-end, mid and the higher-end consumers are trading down into names like Dollar Tree, Dollar General, and some of the other discount retailers. So expectations pretty elevated going into this report. And same thing that we saw in the Netflix trade that I showed you. Somebody trying to take a stand where, hey, if the stock does fall, I'd be willing to buy the shares at a lower price entry point. This was out in the January monthly option, so not a pure earnings play that this trader did. They sold 2,800 of the January monthly 110 strike puts, collected a pretty hefty option premium because these are basically at the money, collected $6.15 per contract that they sold. So that takes a break even for this trader where they start to lose money all the way down to 103.85 over the next 44 days. That's about 6.5% below the current share price and about that one standard deviation that the option market's pricing in. Put volume about 7 times normal daily average volume that we've seen over the last 5 trading sessions. So yeah, a lot of interest in this one going into the report, but taking advantage of that higher implied volatility going into this event risk on earnings, Nicole, but selling another cash secured put, this trader thinks it's going to stay above.
Okay. For I am Washboard Jim. I'm saying do or die. Get ready, prepare ye for the name of the Lord. It's either do or die here. We're going to break out or we're going to pull back and do a double bottom. It's 685141. UPS down 22% year to date. I got my ukulele back. Speaking of ukulele, we're going to listen to one of my favorite songs right now before I get back into this. I will write one. But for right now, we're going to play I got to see this guy in concert. I doubt if anybody in here has had that chance. So prepare ye.
I think I can do it. I can make people.
Tiny bubbles in the wine make me happy, make me feel fine. Tiny bubbles make me warm all over. Well, tiny bubble, and the wine, make me happy, make me feel fine, tiny bubble, make me warm all over, with a feeling I'm gonna love you till the end of time. Tiny bubble, you're Ricky, you got me long love. Make me happy, oh hello, make me feel fine. Think about in the tiny bubble, make me warm all over, with a feeling that I'm gonna love you till the end of time. The 6850s, hits. Feeling that I'm gonna love you till the end of at $2. I'm taking a risk here, for I'm Washboard Jim. Can anybody tell me who that was? Oops, there's the puts. $68.50s at $2. I bought me a few puts. What price did you get them? I got them at $2. May the put of this best PX drop till the time. As a risky trade, oh yes it was. How many contracts did you get? I got 5, for I needed to fall back. 268, 51, 41. This is a risky trade, I bet you that. Come on now, give me 50 cents. Give me 50 cents a contract, please. If this starts to break out, I'm going to jump right out of it. Nicole pulled up her black top there a little bit. She was showing more cleavage this morning. This is bullshit. I'm up $100. Should I sell? Ooh. Wow. Went from 220 back to 225. Uh-oh. You can't even tell it's moving. What am I not missing here? Oh, I see what I did. This is kind of flopping around everywhere. There's 230. $235 from Washboardjim. Now, I'm at the 63. How do you do it, Jim? How do you do it? Well, it takes a lot of years. A lot of years of practice, hard work, and a little bit of tiny bubbles. Up $2.40. Oh my God. Now this is where it could reverse to the upside. It'd be nice just drop big right here. No, it's reversing up. Okay. I swear there's people out there that watch the 63. She pulled that top up. She was exposing a lot more cleavage earlier. She ruined my trading day. Back to 205. I can sell it here for 220. But I want to see it break down. $245, baby. Watch me sell it and the thing drops to 3. Come on. It's the third time. There's too many people in puts right now, so I should sell it. They pushed it back up. I'm in the 68.50 puts. We keep touching the 63. Last 6 candles, we touched it 4 times. It's a risky trade, I'm not gonna lie. I was able to unclog the drain with just a few pumps. I think I'm gonna just hold out here. Took off my shoes. I'm gonna find my slippers. I had a chance to sell them for 45 bucks. Pretty good chance too. 10 seconds. George. Nicole, I'm very disappointed in you. I was boasting about your cleavage exposure this morning, and now look at you.
2% off the highs on the S&P 500. I know there's been some volatility over the last month and a half or so, but still, it's holding on pretty well for 2025. Some of your thoughts on this market action, what you expect going forward, maybe even a Santa Claus rally?
Yeah, Nicole. Yeah, I mean, overall, you have to say that this market has weathered that selling pressure that it received in November, and we did see that 5% pullback in a couple of major averages, but as you pointed out, we're getting closer to the top end of the range. We still haven't taken out the October highs, but look at the Russell. I think, again, seasonality is taking hold there. We're only about 1% off the highs there as we continue to see the Russell outperform today. And, as the idea of lower rates and as we move into early 2026, this is typically a time when you see the small caps show relative strength, and that's unfolding once again this year. And I expect that will last into January, and if that's the case, certainly I think you'll see the other parts of the market continue to maintain this upward momentum on the idea of lower rates. And again, the data this morning, a little bit of a disappointment, some hesitation in the market early, Nicole, given the fact that it does appear the labor market continues to weaken. But overall, I think the foundation in this market, and you're seeing a continued advancement in other areas of the market, and that's why I chose to feature some of these stocks today, and some of the areas that haven't outperformed yet this year, but still have had a nice year, and I think set to outperform.
We got an ascending triangle, so it's
interesting because we have different areas, and I know you have a few stocks.
Might get me some calls here just in case. The 6860s, huh? We definitely got it. There it goes. I knew it was getting ready to. Ascending triangle, you can see it. Boom! Called that one out. You got the higher lows and the horizontal. 68.5803 is my resistance level. $68.60s. Calls. Giving this guy too much airtime.
We maintain this upward momentum, but that's not without some fits and starts, and we certainly experienced that in the last month or two. But again, Nicole, this is a hot bucket. This is a high beta bucket. This is something where you got to be willing to take the risk if you want that reward, and if you're not, then it's probably not an area to be involved in right now.
Do you think everybody should have just a little bit of Bitcoin in their portfolio quickly?
Yeah, I mean, that's our general thought. A little bit, yeah, a little bit, a bit enough that you can tolerate the swings, but yes.
Dan Demick, great to see you. KKM.
All right, thank you.
Dan, thank you so much. Coming up next, let's talk retail. So we'll bring in our panel. We'll discuss some of the retail earnings.
Mara had a nice bounce.
How the consumer is feeling. We saw a pretty good 5 days for Black Friday, the shopping weekend, Cyber Monday. So it was very busy. We got some great stats for you, too. We'll be right back.
The final 90 minutes of the trading day, that's when markets make headlines.
Oh, this one I wish I'd have bought when I seen it at 80.
Shocks to sector rotations.
Down here.
The catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close
Still in my put.
every single day.
This is
Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving,
IWM new high.
or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Sam Vardas, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiments in real time. Stream Schwab Network at schwabnetwork.com.
The video.
Welcome back to the watch list. It's holiday shopping season. It's
Oh, she lowered it.
Up. We had a great 5 days.
Now we're in business.
In fact, some were very impressed with how people were spending. They didn't buy as many items.
She must have went for a walk or something.
But the number of the dollar amount was more year over year, basically, and there was a lot more online shopping, and we'll get to some of the details there. But how is the consumer feeling, and why does it matter? We have Nick Rake, CEO of the Earnings Scout, and David Swartz, Senior Equity Analyst at Morningstar. Thank you both for being with us. David, I'll start with you. We think about what we saw over Black Friday and also Cyber Monday. What were your takeaways from what we've seen thus far, and how does it translate to the Christmas holiday?
I think so far the sales have started out fine. Most of the companies that I cover seem to be on track for meeting their expectations.
68, 60s, Randy.
Slightly
Boom,
better.
baby.
But of course, it's still very early in the season, and the season really extends beyond Christmas. It also extends into January when they have the post-Christmas sales. And so you can never really determine how a Christmas season is going to be at this time of the year. There's certainly in the past, there have been times when sales would drop off, sometimes in the middle of December, somewhat unexpectedly. There have also been times when sales picked up dramatically in the last week before Christmas. So you don't want to draw a lot of conclusions, but generally going out of Q3 and into Q4, expectations have probably improved.
Understood. And Nick, how are you feeling about the holiday season? and it's coming quickly, isn't it?
Yes, it is.
Yes, it is here. Pretty good. Off to a good start. Things look good. And with a company like Macy's this morning, which went traded down, you can see how interest rate sensitive it is well, because the stock's up higher now as the odds have gone up if employment's weak.
/ES is close to my next resistance.
Boost the consumer into 2026. And that's what we're looking at more as the outlooks as opposed to what the company's reported today. Because
Unbelievable how them
improvement
68s bounce and they pulled back up that.
For both companies since April.
Well, what's interesting about Macy's, and I'll go back to you, David. I think you have a 3-star and $23 target. What's interesting about Macy's, I mean, first of all, the stock has done so incredibly well. It's up 32% this year, right? To many others that are either flat or 5 or 10%. Really is, well, nobody's looking. It was like a sleepy winter, to use Diane's phrase. So at this point now, where do you think Macy's could be headed, David?
Yeah, I mean, the stock is up huge. It's up about 70% in just the last 3 months on not a lot of news. It's really just that I think it was quite undervalued, and I had rated undervalued at the time. It's actually moved up to my fair value estimate, which has been about $23 a share. So the outlook now, I think, is that people expect that Macy's numbers will improve. The company is really nearing the end of its second year of its 3-year turnaround plan under CEO Tony Spring, and it seems like
how many years have they been
working out
Macy's?
For the most part. The comparable sales have improved. The company doesn't have a lot
Macy's
of sales
has been
growth.
turnaround plans been going on for
Very
years.
weak, realistically, for an
A
apparel
very
retailer.
long time.
But they are trending in the right direction, and so there is more confidence now. And the undervaluation.
He said 3 years
has
or
been
something
there
like
for
that. I was
some
like,
time,
what?
Based on the idea that Macy's may be going away, some people thought it might be going bankrupt.
That I disagree
I
with.
think that people now see that there's a future
Maybe
for
under this
Macy's.
new under the
It's probably
CEO,
never gonna be
maybe,
what
but
it used to be, but there is still a future for department stores in the U.S., and Macy's is still the leader in that space.
Nick, I'd like to know your quick thoughts on Macy's and maybe
one
some
bet
of
we
the
call
other
it day.
players or retailers that may be positioned well for folks that they should keep watching those names. Nick?
Well, I think David made a great point. A lot of people were expecting it to completely go away, so that really lowers the bar and the expectations. And as David said, the stock has exploded. Yeah, it's up 30-some% year to date, but it's more than it's doubled its stock price since April. So I think the tariff pressures that were at their peak in early April, and then the expectations for Macy's were being cut by about 58-60% back then. Now they're starting to go higher. So that improvement in the earnings expectations needs to persist into 2026 if this stock is going to continue. It's a pretty strong run here since April.
Dale's was the bright spot. Certainly one of my personal favorites, no doubt.
$3 to
Dollar
$4.
Tree. A quick thought, Nick,
The
on Dollar Tree.
6860s.
Dollar Tree seems to be benefiting from the lower end consumer right now. And again, just like Macy's, it has seen improvement in its earnings expectations as well, really since the peak of the fears on tariffs in April. So the low end consumer doing a little bit better and trading down. And as long as there's no price wars with, say, Walmart and others, Dollar Tree is well positioned into 2026 too, because it will also benefit from some of the rate cuts as well. So these macro tailwinds should help Dollar Tree just as much as, well, not as much as would have helped Macy's, but it'll certainly help it as well.
Look, year to date, Dollar Tree's up 52%, and we're waiting on Dollar General tomorrow. David, Dollar Tree, Dollar General, or anything else you can add?
Yeah, not really. I don't actually cover them. They're covered by different analysts at Morningstar. But it's certainly true that discount stores and dollar stores have been outperforming department stores over a very long period of time, and that's probably not going to change. There's a lot of low-income consumers right now that don't have a lot of other places to shop. Macy's has actually been trying to get away from that competition by going more upmarket, promoting more of the Bloomingdale's brand and even luxury brands within Macy's itself to try to avoid the competition, not only from dollar stores, but also stores like TJ Maxx and Marshalls and Burlington and many others. So, there's a lot of lower tier stores that are really doing very well, and that's where shoppers have been going for a long time and away from department stores.
And look, as you talk about tariffs, you both mentioned tariffs. Scott Bessent said this tariff story, basically it's not really setting off inflation in a big way at all. He feels very optimistic about the economy. He said the China Pact is still on track to keep part of their deal with the U.S. So things seem to be calm in that realm. The ADP payroll shows people are still, obviously looking in the labor department a little bit weaker in the labor story. What do we think about the cautious consumer? Is that going to be part of the real headwind for 2026? Nick, final very quick thought.
Right. No, tariffs, the worst of the fears of tariffs are behind us, but they're still impactful for these businesses. Like David said, Macy's and Dollar Tree are two different stores going after two different clientele at this point. But yeah, tariffs, we have to keep an eye on. And the one thing with the Trump administration, let's not have no new additional tariffs that throw a wild card into the mix. So at least know out there our tariffs are stay. Both companies are well positioned.
All right. Well, it is great to see both of you. Thank you so much, Nick Rake and also David Swartz. Thank you so much. The Dow right now is up 465 points. So glad you are with us here on the watch list. I'm Nicole Petalides every day here at 9 a.m. and 2 p.m. here on Schwab Network. Coming up next, Market on Close. Keep it right here.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data,
Come on, baby, drop.
and trusted financial journalists.
Get me back in the
Streaming
money.
live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
2025 kept investors on their toes. Now, get ready for the road ahead. Join Schwab's panel of experts on December 11th for 2026 Market Outlook, your guide to the forces shaping stocks, global markets, inflation, rates, and more. Hear from experts on where the markets may be headed, spot opportunities, and see what could drive your portfolio next year. Tune in on December 11th at 7 p.m. Eastern on Schwab Network.
I'm Nicole Petalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at SchwabNetwork.com.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's a... Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me, too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Boom!
Good afternoon. It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley Caden, coming to you live from our Chicago headquarters.
And I'm Sam Bartis, coming to you live from the floor of the New York Stock Exchange. Let's take a look at what is coming up on today's show. The team from the NASDAQ will join us to take a look at the latest data on ETF flows, as inflows have reached over $1 trillion year to date, exceeding the previous record. We'll be joined by the CFO of Alstom to discuss the company's latest quarter and what lies ahead for the LiDAR company's future. And we'll have earnings after the close today, as we'll get live reaction from Salesforce and Snowflake right after the closing bell. Marley, take us through what you're watching today.
Marvell Technology looking to close at its highest level since February, Sam, after announcing its $3.25 billion acquisition of Celestial AI. The chipmaker also posted a Q3 beat for both the top and the bottom lines. American Eagle also seeing its shares soar today after the retailer reported better than expected earnings in the third quarter and raised its fourth quarter outlook. The clothing company says that comparable sales for Q4 should be about 4 times better than what was expected coming into their earnings report. And Dollar Tree's stock is on track for its best year since 2010, helping its rally today after besting Wall Street estimates on all key financial metrics for the third quarter. The off-price retailer also raised its full-year profit outlook. We'll break down all of those reports shortly, but first let's take a look at where the markets stand as we head into the close of trading today. We do have green across the board in all 4 of our major indices. The S&P trading up about 0.5% right now at 68.60.69. On the NASDAQ, we're trading about 0.25% higher, 25,628. The Dow has now added 460 points. That's up about 1%, 47,934. And the Russell 2000, our clear winner today, up 1.75% at 25.07. The dollar mostly unchanged, down about 0.5% at 98.81. Gold is up about 0.5%, 42.4120 a troy ounce. Crude oil trading up 0.5%, still below that $60 a barrel mark at 58.96. And Bitcoin continuing its move higher, albeit slowly, up more than 2% right now to 93,425. I do want to check in with Sam, though, and see what stories caught her eye on the floor of the NYSE today. Sam?
Well, it's all been about Microsoft and struggling to recover still. It's about 1.5% lower. It got beaten down over 2% this morning, taking the NASDAQ lower initially. The information reporting that the company was lowering its AI software sales quotas as customers resist newer products. Microsoft then telling CNBC about an hour later that's not the case. The information also then changing its headline from sales quotas to growth targets. Microsoft shares are off the lows, as I mentioned, but still under pressure, weighing a bit on the NASDAQ. Now, markets also chewing on some mixed November data. ADP private payrolls unexpectedly falling by 32,000 jobs, the most since early 2023. That was compared to the increase of 40,000 that the market was expecting. The declines mostly coming from small businesses, which saw a drop of 120,000 jobs, the biggest one-month drop since May 2020, while big companies saw an increase of 39. The markets are paying a lot more attention to ADP in the absence of the government jobs data before the next Fed meeting. Some bad news for the economy being taken as good news for the markets because it's helping build the case now for that rate cut. On the flip side, ISM services activity coming in better than expected. The PMI picking up to 52.6, comfortably above that 50 boom or bust line, marking an improvement from October. Now, new orders remained in expansion. Inflationary pressures eased a bit with input prices coming off, and employment showed signs of improvement, although it did stay in contraction. Now, the report was in contrast to its S&P counterpart, which came in at 54.1, the lowest since June. But for now, I'll send things back over to Marley, who's with Jenny Horn in Chicago with some of today's top movers.
Thanks so much, Sam. Yes, like you mentioned, Jenny Horn joining us here in our Chicago headquarters, co-host of Next Gen Investing, to talk about some of these big movers we're seeing today. Most of them earnings moves. We'll start with Marvell here. We saw their stock jump. They're still up about 7%, looking to close above that $100 mark right now, which would mark the first time since February.
Yeah, and Marvell, I will say that talk about a great way to frame the rest of your year, and I feel like this is a masterclass in the making of the optimism you're able to give as far as forward-looking expectations is, of course, received very well. I mean, the street doesn't like to see that you're going
Jenny
to
Horney's up.
disappoint or miss expectations going forward, which Marvell gave pretty much the opposite tone, as they did continue to really position themselves as one of these leading data infrastructure suppliers. And we're seeing overall that really strong commitment from more of these large-scale enterprises, as well as innovating at scale, is how they put it. So they've proven a nice track record of capitalizing on various AI tailwinds, and the fact that data center builds is continuing to accelerate is a huge catalyst to the upside for Marvell. So their products that are used mostly for data centers, as well as high-performance bandwidth and telecom. But all of these end markets have seen continual growth, and we know that right now that mix has made Marvell only fundamentally stronger. Data center, though, being its largest of the business mix, represents roughly 75% of their total revenue as of the third quarter. And we're continuing to see, I mean, that really aggressive spend from these major names like Meta, Alphabet, Microsoft, and Amazon. But these companies have made CapEx, I mean, just such a huge priority, and that is funneling then to some of these say, second or third tier names like Marvell. So they're expecting, I mean, data center revenue to accelerate now in the fourth quarter after posting a 38% pace of growth in their third quarter. And in addition to the overall outlook being optimistic, they did also give this announcement of a definitive agreement to acquire Celestial AI, which they said is a pioneer of disruptive photonic fabric technology. Basically, what this means, to my understanding, is that they're right now trying to find other ways to support the really next generation of this photonic fabric, which right now uses copper, but they need to increase the capacity because AI requires so much more power. Copper is not going to cut it. So they're trying to find other ways to outsource that, which is hence the deal. But I mean, all in all, 7.3% to the upside today, and they've held on to this rally throughout the session.
And they have. We covered these earnings yesterday on Market on Close, and we did see a dip initially when they announced the acquisition, even though it was rumored to be coming in the report. I just wasn't sure what the company was. But we've since seen them, move higher and hold on tight here. But CrowdStrike, let's talk about them. You also had earnings. They've done a little bit of seesawing, mostly right around the unchanged line. Not huge moves in either direction, but I just looked at them and I mean, they're barely down, down a couple hundredths of a percent.
Yeah, so this is interesting because we haven't really seen a lot of these cybersecurity names, and we talk about the resiliency that enterprises are not going to slow down. I mean, every guest that we talk to, I feel like is like, this is going to be as big of a boom almost as AI, because you need to be able to fully protect your companies from the risks that are added with AI. It hasn't been a strong earnings season for a lot of these cybersecurity names. So we did see, earnings per share that did top expectations. Revenue also easily topped at $1.2 billion. Their annual recurring revenue also climbed roughly 23% year over year. And they did, and we saw free cash flow, at least at the end of the quarter, reach roughly $296 million. Now, the company incurred a $162 million various costs related to that July of 2024 software outage that included roughly $26 million still in the current quarter. But shares right now, I think, showing the sort of, difficult nature to gauge as far as some of the forward-looking expectations. Now, a closely watched forward-looking metric for the subscription-based software is annual recurring revenue. And so that was, again, up 23% year over year. But also, we are seeing right now some of the continuous shadow of that
860s dropped quite a bit
bad PR, really,
from where they were.
Projects, they're still having to pay off some of that overall undertaking, and then that's perhaps bit of a area of scrutiny from the street. But all that to be said, we hope that this name still remains popular. I mean, it's also continued to see more customer retention from some of these larger scale customers, which is huge. But you have to consider that
she's
right
got to
now,
eat,
this
man.
name
I'm telling
has been
you,
volatile,
that
yet
girl
it's
just
still in a really healthy uptrend.
that big head.
That sort of echoes the sentiment that was
She got a big head.
360. We covered CrowdStrike in our 360 round today, and both of our guests on the
No
panel
skinny
said,
body.
while we're not seeing a really strong response to this, we are seeing a strong response to the need for cybersecurity spending on cybersecurity, even as IT budgets tighten. Where they're not tightening is in the cybersecurity space. So an interesting setup for CrowdStrike. Let's
It is an interesting setup.
Story here, but we're talking about American Eagle, not a company that you think, pardon my eagle puns, is going to take flight off of its earnings, but they sure did, and not even
She's
for the
so
reasons
funny.
that I think some of us were expecting. These big name.
Look at that, it's
celebrities
6860s.
for their brand. That
Jesus.
was not a big driver.
No, it was not. And I'm tired of that headline because it's inaccurate. And so I do know about the whole Sydney Sweeney Jean campaign. I mean, you have to basically live under a rock to not. But you cannot tell me, because that's sort of how they tried to frame it, that this was what drove the optimism this quarter, because frankly, the only disappointing brand of all of the various brands was their namesake American Eagle. That actually was the disappointing comp figure, coming in around 1%. Street had been expecting roughly 2%. The huge driver of comparable sales, which, different story, was Aerie up 11%, I mean, well exceeding the Street's forecast. But that's interesting because Aerie had more room to recover as they were somewhat of the laggard brand, at least about a year ago. So they had easier comps for Aerie. Keep that in mind. But then you cannot tell me that an ad campaign that targeted American Eagle, that actually was the disappointment, that we're seeing all this huge upside because of one campaign. I think that's looking at things with perhaps a narrow scope. But I think that what is encouraging is the fact that we're continuing to see this trend start to emerge, where these apparel retailers of like the early 2000s, but also just like pure play accessible apparel, is still doing very well. I mean, these results very much evidence that. We saw, sales rise 6% from a year ago. Again, overall comps, if you take the collective figure, that's around 4%. That was better than expected. But also, we did see operating margin actually come in better than expected. So it's not like they're seeing right now some of these big marketing campaigns necessarily dent their margins or their profitability. I mean, continuing to beat across the board. And I was curious because we've talked a lot about Gap, Abercrombie & Fitch, Urban Outfitters. And actually, if you take the average selling price of Urban Outfitters or Abercrombie & Fitch, Hollister, American Eagle, they're actually the cheapest, and by a lot. Their average price item is between around $20 to $40, and I mean, it's almost triple that at Abercrombie & Fitch, which I just didn't realize.
Yeah, they're definitely on the lower end of sort of what I think of as like the mall retailers, but they are in that mid-level category, and I think what we're seeing from all of these mid-level brands, despite the range that you see between an American Eagle, a Gap, and an Abercrombie, is that people are still willing to shop in this mid to upper level as long as they feel like they're getting a good value.
I mean, absolutely, and I think that this speaks to also the resiliency of the consumer. We talked so much about how consumers are pulling back, and I'm not saying that that's not the case, as we're still in an inflationary environment, but I do think that more and more these companies come out and give fundamentals that say, perhaps we're just being more selective with our dollars, we're not just not spending our dollars.
And you're mentioning dollars, so I'm going to pivot here to Dollar Tree, who we also heard from. We got earnings from Dollar Tree. Shares rallied. They're hoping to have their best year since 2010. Today's rally only helping that after they put out a really solid report as well. And a very different take, as their primary shopper is a very different shopper than we see at these sort of mid-level denim retailers.
Is that true?
Absolutely. And so to speak to that, I actually
The girls are having a debate.
That they said 60% of their new shoppers come from upper income households making more than $100,000 a year. 30% would be that middle tier, and the remaining 10% makes less than $60,000 a year. But that's the new customers, obviously. So they're basically attributing a lot of their growth to a higher income consumer, which is just not the normal consumer that they've served. Like Dollar General, for example, did say that over 60% of their consumers make less than $40,000 a year. So that's the barometer in which I think they gave a great read on. Dollar Tree is seeing the same thing that Walmart, frankly, echoed, and that's
Dollar Tree posted earnings beat.
By a wealthier consumer, which does
that's a lot of money.
Some pause about the other income brackets, because that's still the bulk of this country, but nonetheless, I mean, like you said, best year since 2010, as we did see, they crushed expectations. They also did give some upbeat guidance now, as we are seeing more and more of these prices.
Dollar General is just
right now,
nasty.
More of an inflationary hedge.
They're not as
lower income households.
clean as the Dollar Tree store.
I mean, they have been raising prices, as right now more than 85% of their products do sell for $2 or less, but not a true dollar. But they did say that they're expecting, more than 3 million households who had shopped at Dollar Tree during the third quarter, which I also think speaks to the strength of this company and strength of the consumer. You're telling me a good bulk of Americans are going to
cat fight coming.
Retailers. I mean, their fundamentals and their financials were phenomenal this quarter.
This is my daughter Grace's favorite store. She gets a $20 budget. She goes in Dollar Tree, but I haven't told her that everything's not $1 anymore.
Your daughter.
It's complicated for the math.
Hey, the best wine glasses in all of America are at Dollar Tree, so that's
You
where
win.
I've been one about 10 years, but best wine glasses.
I'll have to check them out next time. Thank you, Jenny, for breaking down our top movers today. We appreciate it. That's Jenny Horn, co-host of Next Gen Investing here on the network. I'm going to send it back to Sam, though, in New York to find out what we have coming up in this show.
Well, Marley, we will be joined by the team from the NASDAQ to discuss the record year for flows into ETFs. Market on
She really enjoys her job. I have to admit.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List.
You trust.
8 p.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started.
Well, it's 2:17 right now.
Right for you.
Time
If you're a
flies.
long-term investor, our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Welcome back to Market on Close. I'm Sam Barnes on the floor of the New York Stock Exchange alongside Marley Kane over in our Chicago headquarters. Let's just get you up to date with a quick market update here because we've got about 42 minutes to go in the session for now. But we have very much been building momentum here. We've got the Dow Jones that's put on almost 500 points today, so that really has been firming up. We've had a bit of a shaky old start to the day for the NASDAQ and the S&P 500, but we are gaining some altitude now. So
We are.
things are looking to rebound off some of the choppiness we saw earlier today. And we have the Russell 2000 very much as the outperformer here, up almost at 1.8% as we stand. So this is of course coming as we have got some seasonal tailwinds.
Drop like a rock.
This morning, but really that is being seen as bad news for the economy, good news for the markets because
Yes.
it's setting us up for the potential of a rate cut next week. At least that is what the markets are currently pricing in as we stand, which perhaps speaks to why we're seeing this gain in the small cap trade. Let's take a look at some of the futures products because, of course, off the back of that data, we've just seen a little bit of a slip in the US dollar this morning and throughout the course of the day. So we're at 98 right now on the DXY. We've got crude oil at 59 bucks a barrel. Obviously, we are tracking a lot of geopolitical tensions, things going on around the world, particularly with regards to the failed peace talks, or at least not yielding any sort of conclusion or outcome there over in Russia.
No, I don't understand.
There, it is very much a rebounding off the sell-off we've seen.
These people would talk about political tension when there was 8 wars going on. So why does it make a big matter now? I mean, I don't understand. Because we have a different president, maybe? That's the only thing I could think of. Political tension. I mean, geopolitical tension. She says it, she keeps saying it over and over again. No, this year number 4 or 5, 4 years now, this war's been going on with Russia. and the market's done nothing but go up. And all of a sudden now it's a big deal. We were getting threatened with nukes. That wasn't a big deal. Sometimes I get a little bit irritated.
We're seeing.
Yeah, it's unbelievable. I mean, I feel like every year we say we can't do more, and we just keep doing more. So October was a record month. I know we're sitting here in December, but October, we had almost 170 billion in the month of October, so the largest record, the largest inflow month on record. November came in just shy of that, 140. You saw about 75 of that came into equities, broad equities. We saw a good chunk into fixed income, but international at 25 billion. So I know we've talked about this over the course of our time the last few months, but international is hanging strong, really showing up. I will note significant outflows from crypto. This past month, I think it's interesting to see crypto's gone a bit more mainstream with the use of the ETF wrapper. So you're seeing a lot with obviously the massive downturn we took in the price of Bitcoin, obviously impacted that a little bit. So it's one of the first months we've seen such significant outflows in Bitcoin.
Does it matter? Sometimes.
So I think it shows you just the impact the other
when Trump speaks.
All right, I do want to talk about Bitcoin, but first I want to talk about the overall numbers that we got for October. You know, we saw equities making up way more than half of that, but we also saw fixed income see a
Kevin, UPS.
jump. I know that you study the trends and the data as it all comes in. So from your viewpoint, is this a sign that investors are positioning for rate cuts, or are they simply just rebalancing amid the volatility that we're seeing?
I think it's both, and we're seeing not just fixed income, but income.
We're back at support again.
Right?
At the 63.
In all forms. We are absolutely seeing more in fixed income, which I think is buttressing some of the active income or active ETF flows that we're seeing, because those are coming in at records as well. And if you sort of unpack.
I'd like to see it drop right here big so I can get out of this trade.
ETFs. So I think it's a lot of rebalancing, starting to see the rate cuts, this sort of more favorable environment.
My average is at $107.
But then also income in general. So we've talked about so much, but the derivative income products like a JEPQ or
$1.07
collectively brought in $17 billion between just those two products this year. So again, the income with the exclamation point is absolutely what we're seeing, and it doesn't show any signs of slowing down.
And we continue to see in the notes that you send over whenever we're going to talk, these derivatives and incomes ETFs, they continue to pull money. Crypto continues to pull money.
Drop.
Some of the crash that we saw. Are these now becoming what you would consider a core exposure, or are they still considered to be more niche products?
I think the derivatives income are absolutely a core. It's funny you should say that because I have a part of my team is in London, and we've been talking a lot about this over there.
One notch out of the money.
At the core, and we are definitely seeing a level of comfort across retail and wealth with this idea of the derivatives income strategies. I think they feel like this is an institutional strategy, but put in the wrapper, sort of managed externally, and they feel very comfortable with that, and the level of income that they're getting is significant. So I do think, and the folks that are winning are ones that have strong brand, have strong education around the products that they're launching, and they're reaching a multitude of different types of investors. So I think it has become core. Crypto, not so much. I think it's going to be more mainstream. Whether that's core, I think we're well away from that. I think what we are going to hopefully see as more and more of the underlying coins are approved by the SEC is some of the products that you see out there, like an index, the NASDAQ Crypto Index, for example, start to offer a more diversified exposure to the crypto basket, which may invite more investors in as they're not feeling like they're taking a bet against Bitcoin.
And you mentioned all the launches we saw this year. We've seen more than 800 new ETFs launched this year. Are we now in an innovation boom here, knowing that so many of those, I think it's north of 80%, are actively managed? Or are we in an overcrowding phase where everybody raced to market with a similar product and only the best will survive?
Only the best are going
We have
to survive,
35 minutes
sure.
left.
I think I've been in distribution for almost 26 years, so you're going to hear me say this a lot, but those that are able to reach investors and that's a very broad term, but right, distribution ETFs, it's one of my line, ETFs are sold, they're not bought. With a few exceptions, right? There are certain ETFs that are just bought, and people don't need to know a lot about them, they are bought. Most ETFs are sold, and so if you look at ETF issuers who are successful, they're finding a way through marketing, distribution, and advertising and PR to become known, become a brand, to educate investors on their strategy. There's so many options. There are still many more mutual funds, so I don't think we've reached a saturation point, because as we show, we continue to innovate. Right? You're bringing more and more institutional-like strategies related to income into market. You're seeing us venture into places like crypto, even different corners of the equity market. So I do think that we still have opportunity to find some green, white space, green space, whatever you want to call it. But we are certainly at a point where differentiation remains absolutely critical, and distribution is the key there.
And with all of these ETFs and seeing flows running at these all-time highs, do you think that we will see an even greater number in
drop,
surpass these records that we are now setting in 2025? Or are we hitting a ceiling
Uneven.
as some
Unbelievable.
of these products that rush to market sort of die off and only the best survive? Are we going to level out?
There's a natural closure. I don't have, maybe next time we chat I can bring this, because it's interesting.
I'm about to reach
There's
sell
an
here.
open-close ratio, and people tend to look at it at the end of the year to see what's been launched, what's survived, what hasn't survived. I think the thing that for us to consider is really two things. One is the single stock ETF.
God, dude, look at that.
This is three things. Single stock
140.
ETF,
Five.
ETFs, right? They launched with such volume, because they're every month or every quarter, whatever it is. And then right? So there's these couple of wild cards.
Yes.
You know, one that is a relatively unknown at the moment that could really balloon the number, that I think is a little bit misleading relative to what you're actually seeing in the market.
All right, well, next time you're here, maybe we'll have some clarity on that little share class. So we will definitely address that next time. But Jillian, thank you for being with us here.
Man, I can't believe this.
Jillian Delsignor from NASDAQ Indexes. And I do want to send it back to Sam in New York.
Thanks for all that, Marley. Well, we'll be joined next by the CFO of a LiDAR company, Ulster, to discuss the company's latest quarter and what lies ahead in the pipeline for the company heading into 2026. Mark, I'll be right back.
Did you get out, Johnny? Sweet.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets.
I was really worried about that one.
All with 24-hour support from trading specialists.
I mean, you're down. Jim, you're down over 95%. Have you ever thought about selling? No, I can't. Oh, I'm about done for the day.
When the temperature drops, America brings the heat with hot hands. America's favorite warmer.
You guys hear me say a few words in a minute about how ridiculous this was, but we've just freed you up. So you're going to have a good day and a good number of years. Thanks as well to Senator Shelley Moore Capito, Ted Cruz, Kevin Kramer, Marsha Blackburn, Eric Schmidt, and Bernie Marino, as well as Representatives Sam Graves, Vern Buchanan, Mike Kelly, Roger Williams, Lisa McClain, and Troy Balderson. All great people. These are great people. And I know there's a lot of support long beyond the people that are here. We had tremendous support on this.
Ted Cruz,
From day one, I've been taking
Blackburn.
action to make buying a car more affordable. I signed an executive order to end the unfair, expensive electric vehicle mandate. As you know, we had to have an electric car within a very short period of time, even though there was no way of charging them and lots of other things. It would have cost $5 trillion to build the charging plants. And as you know, in certain parts of the Midwest, they spent, to build 9 chargers, they spent $8 billion. So that wasn't working too well. That was done before me, by the way. I wouldn't have let it go forward. We're canceling the EPA's observed tailpipe emission standards, one of the most important things that I've never had a group of people come to me more powerfully and really just devastated that they had a
Ford met with him today.
than the automobile manufacturers, the tailpipe emission standards. And I can tell you, your people at Ford were coming to me all the time and they were saying, like, please, it doesn't do anything and it's killing us. And it's driving the cost through the roof. And we revoked Biden's emissions waiver for California so that California communists could not regulate the automobile industry and rule the entire nation of automobiles. And they were doing that too. But we have that now under control also with the governor who's got much more than he can control. Now, under the new rules being issued today by Secretary Duffy, the Department of Transportation will rescind the Biden fuel economy prices. And I hate to say that because they were really not economy. They were really, they were anti-economy. They were horrible what they were doing to costs and actually making the car much worse. But these policies forced automakers to build cars using expensive technologies that drove up costs, drove up prices, and made the car much worse. The action is expected to save the typical consumer at least $1,000 off the price of a new car, and we think substantially more than that. Under the Trump administration, $70 billion are now being invested in the American auto industry. Ford has announced it will invest $5 billion across its Kentucky and Michigan plants. Is that a correct statement? That's right. That's a lot, $5 billion. You can do more. Creating at least 4,000 new jobs. Stellantis announced it will invest $13 million to expand its U.S.-based manufacturing by more than 50%.
You can do more.
Manufacturing facilities across the country. And I think a big part of that is also the tariffs. Because of tariffs, they're coming in. Not only the automobile industry, AI, we're leading China in AI, we're leading everybody in AI, we're leading everybody in everything. We have the hottest country right now. I will tell you, a lot of political people behind me, great political people, very successful political people. We have the hottest country anywhere in the world. 1 year ago, we had a dead country, and now we have the hottest country anywhere in the world. And it started from November 5th, but it also started when we did the tariffs, and we've had tremendous support on the tariffs. It's bringing in trillions of dollars of wealth. It's bringing in national security. And I've stopped 8 wars, and of the 8 wars, 5 of them have been because of tariffs and trade. So they're very important. And General Motors plans to invest $4 billion as it brings its manufacturing back to the United States from Mexico. After falling by 5% under Biden, U.S. auto production has surged by 10% so far this year. You know, I won the auto workers vote, but now even the head of the auto workers said Trump is the greatest president we've ever seen, and happens to be right about that. But we're protecting our auto workers, and we're making it easier for every family to afford high-quality cars. In other words, we're bringing automobiles back and the manufacturing of automobiles back into this country. We lost 52% over the years, 52% of our automobile manufacturing. You see it. closed factories all over the place. Now they're all opening up. They're being, in most cases, they're being knocked down, and new ones are being built in that place. And a big beneficiary is the state of Michigan, but South Carolina, even states that didn't really do too much with the automobiles, they're opening up plants. It's been amazing. So between
I got goosebumps all of a sudden
plants,
listening
AI
to
plants,
Trump.
and plants of every other nation, really every other type, including chips. We're going to have a big percentage of the chip market very soon. Not because of the CHIPS Act, which was horrible and ridiculous, where we just gave these companies billions and billions of dollars and they just kept the money, but because of what we did with tariffs. They have to build here, otherwise they're going to have to pay tariffs. They won't be able to do business in the United States. And we're going to have a big percentage of the chip industry. As of about a year ago, 2 years ago, we had none. And now we're going to have a very big percentage when it all finishes out. So I'd like to ask Secretary Duffy to speak, and then Mr. Farley, and then Pelosi, and Urbanik, and Castrina, and also we're going to ask some of our political leaders to speak, because let me tell you, they went out of their way. This was not easy. And people were brainwashed. This is a green news scam. And people were paying too much for a car that didn't work as well. And now they're going to have a great car that's going to be environmentally friendly, but it's going to cost you a lot less, and it's going to work great. All of the nonsense is being taken out of the cars. So, Secretary Duffy, could you say a few
Thank you,
words?
Mr. President. So yesterday at the cabinet meeting, the president was talking about affordability, and the way that Democrats talk about affordability is a lie. Today is a perfect example of that. So these CAFE standards used what was contrary to the law. The Congress set a rule that says you have to look at combustion engines. Biden and Buttigieg actually did an analysis using Buttigieg used EVs and hybrids to come up with a 62 mile an hour per gallon standard, which I think the car companies will tell you is completely unattainable. So they spent a lot of money on technology trying to meet the unattainable standard, driving up the cost of a car, number one. And then number two, if they couldn't meet the unattainable standard, they had to trade for carbon, costing billions of dollars, and again, driving up the price of the cars. So, Mr. President, what Democrats were doing, were not making cars more affordable, they were making them less affordable. The consequence of that is going to be that more Americans can afford to buy a new car, which means they're going to be safer on the roads because of all the great new technology we have that save lives. So we'll have less death on American roads. These rules are going to allow the automakers to make vehicles that Americans want to purchase, not vehicles that Joe Biden and Buttigieg wants them to build, which is important. But also, this is important for American jobs. The more cars we sell, the more jobs we have in this country. And so this is jobs, this is freedom, and this is common sense, Mr. President. So thank you for your leadership. And I appreciate what the Senate did with the big, beautiful bill and what we've done here today. So
Thank you very much. The big, beautiful bill is simple. It's amazing. Wait till the people see the benefits and the lower taxes that they're going to have, lower regulations. So, how about Ford?
Mr. President, Secretary, all the important lawmakers here, competitors, today is a victory of common sense and affordability. We're very proud of Ford to be the #1 auto producer in our country. 80% of the vehicles we sell here we make in our country. And we never left, unlike many of our competitors.
Ford CEO.
We're the #1 exporter. We have the most auto factory orders. And this CAFE standard that is aligned with customer demand is the right move for a lot of reasons. We were #2 last year in EV sales. We were #3 in hybrid, and we're the leading brand for combustion. We believe that people should be able to make a choice, as you said, Mr. President. And we will invest more in affordable vehicles. This allows us to invest
Hell yeah.
in affordable vehicles made in the U.S., which we will take the lead on, and will allow us to make vehicles more affordable. So thank you for making this step for all of you.
Thank you very much. One of the other things we're doing, it's separate from this meeting, but I think everybody here would agree with it. If you go to Japan, where I just left, and if you go to South Korea,
If you know me,
Malaysia, and other countries,
for the last 4 years, I've been saying how much car prices have gone up.
sort of like the Beetle used to be with the Volkswagen.
And I heard the other day, an average car payment was $700 a month. Are you freaking kidding me?
And I've authorized the secretary to immediately approve the production of those cars. So you'll be able to buy, they really are, they're actually, some of them are really beautiful, actually. If you take a look, Honda, some of the Japanese companies do a beautiful job, but we're not allowed to make them in this country, and I think you're going to do very well with those cars. So we're going to approve those cars. Would you like to say something about that?
Well, no, just that he never stops working, so even when he's on Asian time, he's calling me at midnight in the States. But he gave me the directive to clear the regulations on this, to which we have. And so if Toyota or any other company wants to make smaller, more affordable cars, fuel efficient, we have cleared the deck so they can make them in America and sell them in America.
They're really nice and they're less expensive, and it really gives people a chance to have a car, you know, have a brand new car as opposed to a car that maybe isn't so great. And so you car companies start thinking about that. I think it's going to be a tremendous market. Please, would you like to say something?
Thank you, Mr. President. It's a great day for us at Stellantis today, because it's the day where we see cafe regulation reconciled with real customers' demand. That's why Stellantis, we decided to invest to Jeep, Ram, Dodge, and Chrysler, $13 billion in the next 4 years, increasing production by 50%, delivering to the market 5 new vehicles, and creating 5,000 additional jobs. That's because we believe in what you, Governor Duffy, and all your team is doing in this country. We believe in growth, and we are ready to invest even more. So thank you very much. Thank you very much also for this great news of the K-Car, which we are very interested in. And we are really looking forward to work with Secretary Duffy, your team, in the future for the next steps. Thank you very much.
We'll get ready for those cars because we've already cleared the way. You can start right away.
We will. Thank you very much.
Thank you very much. Please.
Mr. President, thank you so much for having me. We support your leadership for this issue that is so important to the auto industry. I'm here representing the hard-working men.
That's the union guy, ain't it?
In assembly in Michigan. The facility, our manufacturing facility there, is currently going through a retool so that we can build additional U.S. manufactured pickup trucks and full-size sport utilities for our customers, and we're so excited about that. And thank you for your support. Secretary Duffy, thank you as well.
And this is largely coming in because of the tariff situation. You know, we're taking in trillions of dollars, actually, trillions, and we have so many other advantages, but these great companies are coming back to the United States. They left the United States. If somebody was sitting behind this desk that knew what they were doing, that wouldn't have happened. They would have said, well, you can sell your car here, but we're going to put 100% tariff, and you would have never had the auto industry leave. Again, we lost more than 50% of our auto industry. And now it's all coming back, and I think it's coming back. Ultimately, it's going to be bigger. I believe it's going to be bigger than it was before, actually. But it's an honor to have you here, and please, would you like to say something?
President,
Thank you very much.
Tom Castrucci, sir. I'm the chairman of the National Automobile Dealers that represent 18,000 dealers in the country, along with 3,000 heavy-duty truck dealers. And what the actions that you've done as the president and your administration is definitely going to save our customers money. And you made your promises that let the consumer buy what they want, sir, and you delivered on that. And the other thing that you delivered was your promise in the big, beautiful bill, the tax deduction on loans that had gone away some years back. And now that makes it affordable for our buyers that can save money through that loan of the tax, anywhere from several hundred to several thousand. So again, sir, on behalf of all the dealers and our customers, we appreciate what you and your administration have done, and of course our legislative support as well, Mr. President.
Thank you. That's very nice, and I'm glad you brought that up. We're allowing people to deduct. So if you go out and buy a car, and this is for middle income, but for lower income, no matter what, they never really had deductions. You know, rich people like deductions, but middle income people would never really afford deductions, which is very unfair. You borrow money to buy a car, you're allowed to deduct the interest from your income tax. And I think that's going to be one of the most, in terms of your industry, I think it's going to be the biggest thing that we're talking about, maybe even bigger than cafe standards. People are going to be able to borrow money, deduct it, so it's going to cost them essentially half. And it'll
help, yes, sir.
I think it's going to be a tremendous factory. They've never had a chance to do that before. And that's all done. That's all in the great, big, beautiful bill. So it's really terrific. I'd like to ask a couple of our political leaders to say, because you guys have done an amazing job. This was something that was going to be very tough. We had to fight lunatics to get it done, and they had no answers. You know, you just present them with the facts, and they just say, well, we're just not going to vote for it. They couldn't talk about it, but they didn't want to vote. I see Mike Kelly, my friend back there, who's been with me from day one, right?
Yep.
What do you have to say, Mike?
Well, you know what? I think you hit the key. Everybody's talking about the same thing.
You
In America,
look the way they like each other. You can see, there's no hatred between these two guys.
Yeah, as long as I beat his price, we're friends. You hit it on the head. The American people have always been able to choose what they want to buy. They don't want to be taken out of a market by people who, quite frankly, don't even drive their own car, and saying this is the way you've got to go going into the future, and say, well, you may say that, but you're not in the market, you have no idea. And I know the business we're in, at the end of the day, if you were there with me, I'd say, Mr. President, other than price, what's keeping you from taking the car home today? It's always price. And the fact that we can build a car that's affordable, that people want to buy, that's the key to it. What you've done is unlock the most ridiculous statute that ever came in with CAFE. It wasn't done by the Congress. It wasn't done. It was done by President Obama after the courts failed on it. So thank you for doing what you're doing. You're making America great again in every single way. Thank you.
Thank you. It's going to be so big for the auto manufacturers. People aren't even going to believe the impact this has. You know, Mike used to come to my rallies all the time, and we'd have a rally, and it was like 0 degrees. It was freezing. Everyone, and he'd sit there without a shirt on. And I didn't need that, you know. I didn't say it was pretty, but he would sit there in the cold, and he didn't mind it at all. I said, that's one tough cookie, right?
You lit it up. We didn't need anything. We were there.
We had a good time. We had a lot of great rallies.
We
right?
did. We did.
Pennsylvania. Please, Mr. Congressman.
Thank you, Mr. President. I represent the dealer body. I'm a dealer, and we've got some other dealers in here, but this is huge for the dealer body, the local car dealer. We're going to be able to sell what the customer wants. The manufacturer's going to make what the customer wants. We've got all kinds of options to the big bill. It's going to enable people, as we talked about, to deduct payments and so forth. As we say in the business, they've never been cheaper than they are today, Mr. President. And it's going to be a great opportunity for the dealer body to sell what consumers want. And 99% of the businesses in America are small businesses. Many are car dealers, employ a lot of people. It's going to be a great year for us. We appreciate your leadership, and we appreciate, from a retail standpoint, we appreciate the manufacturers going to step up and build cars that customers want and that we want to sell. So thank you very much. It makes it a great country.
He's also a very brave congressman, because he was there on the baseball field that horrible day with Steve Scalise and some other people. He was hit, but he took it very well. He took it very well. You're my pal.
Thank you.
That's great job.
Appreciate it.
Great job. Appreciate it. Kevin, could you say a few words of wisdom? One of the really smart economic forecasters, I will tell you. Beyond an economist, he's a real forecaster. Please.
Sir, I think that there's a massive macroeconomic benefit to what we're doing today. And the way to think about it is that the car that has the best gas mileage that you can buy, that has only gasoline, is a Honda. I think it's about 36 miles per gallon. Joe Biden wanted to make every car, on average, be above 50. So there's no car made in the U.S. that you would be able to sell 2 years from now, 3 years from now, under that rule. Because what he wanted to do was make everybody have an electric car, as you know. But here's the thing, that if everybody had an electric car, then nobody would be buying gasoline anymore, and they'd have to take all the miles that they travel and put it on the grid. And so we would have to increase the production of electricity in the U.S. by 25% over the next couple of years if they had their way. And so you've really stopped a massive disruption for the economy with this. And so thank you, sir.
And that wasn't the main reason, and yet it certainly is a main reason. You wouldn't have been able to do it even if you wanted it. It's just so crazy. That was the mandate, which we ended. Troy, would you like to say something?
Great honor, thank you. My family is a former dealer, 28 years, Chrysler Dodge dealer, and then I got into the political world, sir. I had more fun in the dealership world, but I miss it, but I still play a big role in automobiles, and grateful. I remember under President Obama, when the CAFE standards changed, as Mike brought up, and going through those challenging times as a Chrysler dealer before Stellantis came along. It was Daimler before you guys got it. So thank you very much for being here and making these changes. And as you said, that interest on the car loan piece was big. And I know that Bernie led the charge on that in the Senate and get it into one big, beautiful bill. that really is a big deal, and people need to understand how big a deal that
They
is.
did a great job. And by the way, we had a great victory last night.
Kind of like our race, huh?
He's gonna be a great congressman, I think, so, really, like us, right?
Yeah, like us.
One of my early endorsements, right?
Yes, sir.
Can we, talk about it? You're right here, man. Let me say hello to you. Please, go ahead.
Thank you, Mr. President, for your leadership. But the thing I've admired most, you've been in business, you've been in the battles over the years, and you're helping us lead us out. Most people that are up here have no idea about business or small business. It makes a big difference. One is. Number two is, I would just say in terms of the tax stuff we're talking about, one of the things that get missed, and I'm in Florida, Sarasota region, is the ability to deduct. Most people have a small business, they'll have a lawn business, they'll have this, that, they buy a new or used truck. They can take that deduction, let's say they're in a 20% tax bracket, but the vehicle's 60 grand. They can take 20% of the 60 grand, get a $12,000 write-off. They can pay their payments for the first year. That's a powerful tool we don't talk about, I don't know why. But at the end of the day, because of what you've put in place, full expensing, that's the tool that you would use. And you could just think about all the people in Florida, just general places, they're buying old vans or new vans, they're buying trucks, mainly trucks, and they're getting a deduction. They don't even have a payment for a year.
That's right.
So it's one of the best things for
One of the biggest
everybody
things
else.
in the
It's been
expensing.
one of the- yeah, expensing is a powerful tool. They can write the whole asset off the first year, take that deduction, put 12,000 in their pocket on a 20,000. Let me mention one other thing. They got into the e-vehicles, electric cars, and I'm talking to dealers that come in and talk to me, and basically they couldn't sell one, they couldn't give one away. And when these companies, or they got in because of whatever political pressure under Biden administration, and they end up realizing that they got no market. A guy says, the car's been sitting there a year, I can't get rid of it. So they don't understand the market. The people produce the vehicles, and that's made a big difference in your leadership. But thanks for what you're doing here today. It's big, it's huge, it'll make a big difference. $12,000 on a $60,000 vehicle, upfront, day one. Thank you.
Thank you very much.
Yeah.
You know, we're just talking about something that's interesting. Ford would make, and I don't want to speak for Ford because we have one of the top people right now.
Mr. President, it's fine if you want to talk about
Ford would make numerous electric cars in order to sell one Ford 150. Because they'd make all their money with the 150.
Yes.
And they were willing to lose money on building 2 or 3 electric cars that they couldn't sell in order to make some money on the 150, because the 150 is a monster. I'll tell you what, that no matter where you go, they love that Ford 150.
Yes.
But isn't it a ridiculous model when you have to build 2 or 3 cars that you know you're not going to be selling or not be selling for much in order to
My F-150 lasted me 15 years.
make a car that you want to make?
I had it for 15 years. And it was, it was a great truck. I don't know about them now, but
100% built in the United States. Now it's only going to
I know mine was a really
It's an amazing brand.
a tough one.
What would you like to say?
Yeah, I thank you, Mr. President and Secretary Duffy and all of us. You know, one of the last times I was here is when you signed the electric vehicle CRA, Congressional Review Act, that all of us participated in. The beginning of really making common sense, because it was going to impact 17 other states and really a large part of our economy. This is about affordability here. I'm just going to say one thing. Well, maybe I already said one thing, so now I'm going to say two things. When we talk about a car and auto, we sort of talk about just, oh, we need a car. Do you know what a car does for a family? You can take your children to school, you can go to the store, you can visit your mother, you can go to church, you can have a job, you have the flexibility that you need. A car for an American family is about a roadway to prosperity.
Big deal.
It's a big deal.
Correct.
And so by making them more affordable, making them more choice-driven by what families want and need, today is a great day for the American family. Thank you.
If I didn't have a car, I wouldn't have been able to be successful in the last, what, 35 years as a sole proprietor.
In Tennessee, we make great automobiles, and we have a fantastic workforce. And whether you're GM or Ford, with their new investment in Tennessee, are Nissan or VW or...
Very good. I was waiting for this. There's the knife. God darn it. Oh, the options didn't drop that much. So I got out of them in time then. $0.20 to 70. I mean, I wasn't watching, I was listening, but there's the pullback. If I was closer to the money, I would have made a killing. I was just 2 notches out of the money. I mean, in the whatever. I guess out when you're getting a put. He's right here. If I was in them, when they were up here, 2 notches out, now I'm just 1 notch. But I sold them.
S&P 500 KG.
Yeah, a little bit choppy when it comes to early on in this session, but we were able to see some buyers actually stepping in, and today was one of those market breadth expansion type of days here where technology did lag, but we did see some opportunities in the financial sector as well as industrials and also in energy here. Now, we've been in this consolidation range for the last couple of sessions, but today we have broken out of it, at least for now. It looks like we're going to come back, retest that 68.50-ish area, which is going to be a key area of support here. But if we're able to hold and close at these levels and continue to move to the upside over the next couple of trading sessions, that would allow us to kind of negate the lower high type of scenario that we have from a technical standpoint, and then you could maybe look at those all-time highs, which were kind of less than 1% away from that at this moment in time. If we go into the close here, one thing I also want to kind of note with this next chart, we had a primary uptrend to the upside here. We are pulling back here a tad bit, but as we continue to move higher, we did see breadth once again kind of expanding, and I think that's actually a really key tail here. If you are looking at this market over the next 3 weeks, 2 weeks, 3 weeks or so, because until the end of the year here, it doesn't appear that cash is actually leaving the market. So we're selling out of one area and putting that cash into another area. We have not seen any type of scenario over the last 2 weeks where cash is taken out of the market and being put on the sidelines. And I think days like today, when you do have information technology or semiconductors actually pulling back a tad bit, that provides you a lot of opportunities in this market where there's stocks that have been basing for a very long time, especially in the material space and the industrial space, that are now catching pretty significant bids today. So keep your eye out on that. If that price action still continues, I think that's a little bit more healthy for this market than the concentration that we saw even just yesterday.
And KG, we saw some pretty big moves in the metals space today as well. We saw silver hit a high. We saw copper hit a high on some potential supply worries. We saw gold moving higher on the payroll data this morning. You know, did you have any takeaways in the metal space?
Yeah, silver continues to move to the upside.
Good question, Marley.
Today, we are seeing the RSI actually hinging a little bit over here. So it looks like we have some exhaustion, and I've been kind of noting over the last couple of trading sessions as well, open interest has actually been coming down. So this is more of a short squeeze in the near term. So keep your eye out on that. Copper is another one that has a structural shortage. We've been talking about that for a very long time here, and the market now is paying a little bit more attention. Lower rates could also then fuel industrial activity here in the United States as well as around the globe, and that could also draw on the short supply that we have at this point in time. So you are seeing copper move to the upside. But what's also actually interesting is a lot of these copper mining companies, or those within the mining space in general, like Southern Copper, up around 2.8% today, and it looks like it's trying to break out to the upside. So not only the commodities are really outperforming, but the companies that actually have exposure to a lot of these commodities are doing really well. Even energy was down on today's session here when you're looking at crude oil and gasoline and diesel. But if you're looking at the energy stocks, they caught a significant bid today.
All right. Well, that's it. Not a bad day. I mean, that last trade I was in kind of had me a little worried. I was down how much was it? I was down more than $500. Down more than that. 500, almost 700 I was down, and I was able to pull that one out. I had 15 contracts. I added 1,200 more to that 1,000, so I had 2,200 in the trade. It's all about size positioning. You know, I could have just bought one contract and I would have bought maybe 10 if it got down to 60 cents. So that'd been $700. So whatever your size, you know, I don't throw everything I got into a trade, that's for sure. 1,500 is my limit. But when I'm in trouble, you know, I'll think, oh, I had a little bit more because I got to get out of that trade. Same thing happened to me yesterday when I got stuck in that trade. But it ended up paying off good again. Or I could have took a good loss. It's all about size positioning. How much, you know, go in small, and then if it breaks out, you can add on, and if it pulls back, you can add on. Don't throw everything in on your first, like just don't go in there and buy 10 contracts and have that be your whole count. Go in a couple and then add 2, or I'd double down. You know, if I go in and buy 2 contracts, I'm going to buy 4 more at a cheaper price. If I buy 1, I'm going to buy 2, and then I'm going to buy 4. Every time it dips on me big. That's what I've learned in a way. That's what I've been doing. If I get one for $5, $500, I'm going to buy another one, or buy 2 more at $3. Then I'll have 1,100 in the trade. But I don't want to get past 15. That's my limit. I mean, I could go a lot more. I could do like these other guys do and go 10, 15,000 trade, but I don't. I just keep it simple. In case I do get hurt, it ain't going to hurt me that bad. And if I had $1,000, you know, I'd find contracts that were around $1 and buy 1, and then I'd be doubling if I wanted to build it up. And then if it dipped on me and I thought it was going to bounce back, I might just buy 5 more and have 6. But I got to be confident in my trade. If I'm not, you know, cut it short and get the heck out of Dodge before it dips any more on you. And then take a break and leave and come back the next day and give it another shot. Like the other day when I took that hit on, was it Monday? And then yesterday I was just nailing every single trade. Boom, 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 boom. I mean, it was, and that's the way it works for me. If you have a bad day, don't give up unless you just don't want, if it gives you anxiety. Or I had some guy on here this morning talking about, has retail traders made the stock market a gamble instead of an investment? So I don't believe in the investment anymore. I'm investing, but I mean, it's a gamble every trade I take because I'm scalping. But when the market dips down and we have a good correction, I'll be, you know, investing again. But I can't see investing at these high levels at all. Unless it was like Boeing. When I got in Boeing, it run up $25-30. I mean, I felt like investing then because it pulled back so much. And then you get that Democrat come out today bashing PLTR, said that PLTR was a security risk. I think they're worried about it being, finding out more bad shit about them. And they were bad-mouthing it. Because all of a sudden, everybody on Wall Street just loved PLTR. You don't hear much about it anymore, but they were, I mean, as it was going up, they couldn't stop but talk about it. And look at it now. And it's still a great trade. I mean, we got down here to 150 on this sucker. I had 145.21. We hit 147.56. I was going to load the boat down here. I just wanted to drop just another buck or two. And I had this priced out way, way in advance when it was at an all-time high. So you go up, look at the daily. There's at 207, and I felt like it was way overpriced. So I'm sitting here looking at this pivot point area, resistance, support, and support off the 200 EMA. And we come real close to hitting that, and I should have jumped in that thing. And I keep saying, look at the yearly and look at the weekly and see where these two moving averages are. And if you're close to it, that's when you want to start getting in the trade. And the Boeing was way below it. And I'm going, this is crazy. Now we're above it. And we stopped right here. We stopped right at the 200 EMA, right into close. So that could still be a good trade to run it back up and try to break that 50 SMA. So it's resistance, resistance, resistance. And this thing was way oversold. Way oversold. We hit the 200 here and it bounced up and it pulled right back. I don't know why it was so oversold. It didn't make no sense to me. All them orders they said it was because they couldn't put them out. They have like 1,600 planes on order and they just couldn't put them out fast enough. That was their excuse. And then again, the tariff deal, which I don't think it bothers them none. NVIDIA. I just go through all your stocks and see where they are, see how close they are to the 200. We're still overbought on some of these. I have an alert set for Tesla. If it ever gets to 370, I'm in this trade long. And we were getting close. We're at 388. But we just didn't get that one more candle. All I needed was one more candle. And I'd have loaded that boat on that one. So that's it. If you got spare time at night, you want to fiddle around, just put the 200 EMA and SMA on there and see if any of your top choices are near it that have had a pullback. That's a good idea to find swing stocks. So here's 47.81. I was waiting for it to pull back and hit that. Came close one time, but that was still way up there. Now we're back down here. We're at a double top on Bank of America. Okay, well, I'm going to get on out of here. It was a good day. I'm going to take a break and get some rest. I had a long night last night. I'll probably sleep real good tonight. Kevin, UPS likes my discipline. We'll catch y'all later, YouTubers.